Hi friends, I'm recording the small intro video before you see the revision videos for the balance chapters. In our latest revision which we conducted, we have covered 7 important chapters, and for the balance chapters, I am giving you my third edition revision videos. What we are using now is the fourth edition, and these are the videos from the third edition revision videos. Now what you need to do is you will have to download the video material from the link which is given in this video. Download the concept book and the revision material. Go through the video with these material, and thereafter you can use the fourth edition material for your completion preparation. No major difference between the third and the fourth edition. And for every video I've given detailed timestamp, so you can click exactly what you want to see. Somebody wants to just see concept, you see only concept. Somebody wants to see concept and question, then you click on the question as well. So you can do all that, but please keep in mind that the videos which are coming to you now is from my earlier edition. It is from the third edition, not from the latest fourth edition. But there is no major difference. The major difference is in concept book, where the latest edition has charts, the earlier edition does not have charts, and some numbering changes would have happened. So you go through the videos fully. After you go through the videos with third edition, use fourth edition to complete your preparation, or you can use third edition also for the earlier set of chapters. Thank you, friends.
I'll be moving to chapter 4, overheads. When I move to this chapter, overheads initial set of question, you'll only be in listen mode. One is called primary overhead distribution, which is, according to me, not that critical from an exam point of view, but still you need to know how to solve primary overhead distribution. Secondary overhead distribution, other things you will do along with me, but primary overhead distribution, you will not have time to follow my speed. So first I'll discuss what is overheads, what is this primary overhead distribution, what we are doing here, and then I get into questions. Now, let's understand this. See, when I did my ABC, I said I have to somehow distribute the support cost. The traditional method also did the same thing. So what we do here is we start with overhead. The overhead can be various items. An example, depreciation, insurance, material handling. So many costs are there. I have to distribute this to production department 1, 2, 3, service department 1, service department 2. Some departments are called production department, some departments are called service department. Production department are those which ultimately produce the product and bring revenues to the company. They bring revenues to the company. Service department are those, they are cost center. They are cost center. Production departments are profit center. Profit center means they earn revenues for the company. What does service department do? An example, canteen department. There's a department called canteen department. Canteen department is not going to bring any revenues to the company. Is not going to bring any revenues to the company. But what will canteen department do? It is going to help PD1, PD2, PD3, SD1, SD2, all the employees. It will provide some food to them. Maintenance department, they are not going to bring any revenues. HR department, they are not going to bring any revenues. Finance and accounts department, all these departments do not bring any revenues to the company. So an organization will incur expense 1. You need to somehow distribute this year. They'll give some 20,000 rupees. You have to distribute to all the 5. Expense 2, 3, 4, 5, 6, 7, 8, 9, like this. So many expenses will be there. In this, some rarely you may have direct material, direct labor, which is not written here because it's not an overhead. But for service department, it's a very rare scenario. Okay, they should not give ideally, but in case they give, for a service department, if you have any expense of a service department is a overhead. Any expense of a service department is a overhead, whether it is a direct material or direct labor or direct expense. So I wrote not applicable here, and I'll be writing some amount here. All this is called overhead post primary distribution. Overhead post primary distribution. That is, I've done with primary distribution, and I will get number for PD1, PD2, PD3, SD1, SD2. Then you have to do secondary overhead distribution, where SD1 and SD2 will become 0. SD1 and SD2 will become 0, and that amount will go to PD1, PD2, PD3 using certain different methods are there. I'll explain the methods as we proceed, but objective is to make PD1, PD2, PD3 0, sorry, SD1, SD2 0, and transfer the amounts to, because these guys are not doing any sales, So what SD1, SD2 is saying, I am helping you PD1, PD2, PD3 to take my expense and you recover from the customer. You recover it from the customer. Once this is done, I will recover this from the customer using a overhead absorption rate, which can be on machine hours, which can be on labor hours. We have seen that in ABC chapter also. Once you get the OAR, you will use that in the cost per unit calculation of product 1, product 2, job 1, job 2, whatever names it is. This is first segment of the chapter. This rate is determined at the beginning of the year. Once this rate is determined, at the end of the year, I may have under recovery or over recovery. This under recovery or over recovery has to be accounted. Under recovery is a loss for the company. Over recovery is a profit for the company. Both are not good. I don't want under recovery. I don't want over recovery. So somehow I have to now pass it on to my customer if possible, which may not be possible many a times, or charge it to my profit and loss account. That is one segment of the chapter, which is least time consuming and most tested in exam. Most tested is under recovery and over recovery adjustment. Then in the overhead absorption, you have multiple methods like machine hours, labor hours. In that machine hours method alone, we do another separate discussion. That is the third segment of the chapter, and in between some 2 or more segments are there, but this is broadly the chapter. So what we are required to do here is, how should I distribute various expenses to PD1, PD2, PD3, SD1, SD2? That's called primary overhead distribution. That's step 1. Step 2 is, from the service department, how do you take it to production department? That is technically called a secondary overhead distribution. After that is done, we do OAR. For OAR, my format is same which I did in activity based costing: budgeted overheads, suitable base, and overhead absorption rate, and use that in cost per unit calculation. Let's see this now. Just So overheads are those costs which are not traced in an economically feasible manner with a product. I'm not able to trace this to a product. Overheads is technically equal to indirect material, indirect labor, and indirect expenses, or you can call it as production overhead, administration overhead, and selling and distribution overheads. Overheads need to be absorbed into the end product using some suitable basis. I want my customers to pay for this. Item. How do I do this? Step 1, prepare primary overhead distribution. Overheads are distributed to various production and service department using some basis, where I have 2 techniques. One is called allocation, second is called apportionment. Allocation means entire expense will go to one department. Example, maintenance is needed only for PD1. Distribute entire maintenance to PD1. And the second is apportionment. Apportionment means you have to divide using some basis. Then secondary overhead distribution, service department cost will have to go to what? Production department. Then I calculate overhead absorption rate and I calculate the cost of the job. First, I'll discuss primary overhead distribution. This is the basis I have picked from so many questions. So technically, if you know the basis properly, you'll be able to solve the question. Students make mistake in the basis. First example, depreciation of machinery. For depreciation, ideal basis is book value of machinery. So they'll give book value for every department. Using that, you'll have to distribute it. Insurance of machinery, again book value of machinery. Insurance of building is value of building. If that's not available, area of building. In that, I'll discuss one important item is power and fuel. What is power and fuel is, Power technically means electricity expense. Power technically means electricity expense. So I use a term called power. I also use a term called electricity. Electricity means used in non-production department. Power means it's used in machinery. Power means it's used in machinery. So ideal basis is called effective HPRs. Now what is effective HPRs is, if a AC runs for 1 hour and a fan runs for 1 hour, both will not consume same unit of power. So you cannot say that 1000 rupees is my EB charge, I'll divide by 1:1 because both are running for the same amount of time, which is wrong, because AC has a higher HP and fan has a lower HP. What is HP hours is number of hours AC ran into the HP of AC, into the HP of AC. Number of hours fan is running into the HP of fan. Number of hours the projector is running into the HP of projector. Similarly, many machines will be there. You'll have to multiply with its horsepower. That's called effective HP hours, which is nothing but HP of machines into working hours. HP of machines into working hours. Or HP of machines into machine hours, or technically it's called kilowatt hours. Technically it's also called kilowatt. What is kilowatt hours? Is 1 unit of electricity. Electricity is measured in kilowatt hours. There will be few problem where we will not be doing this multiplication HP into this, because data may not be there. Data will not be there. If data is not there, you either use only the HP or use only the machine hours. But if data is there, you will try to multiply it. You will try to multiply this HP of machines into working hours. Just give me a minute. Switch on the AC now. Now, for your understanding, there's a power expense 6480. This is in the question bank. Okay, power is 6480. If you see in this question, I have effective HPRs. I have effective HPRs. I'll directly use this. I'll directly use this. Please keep waiting. Okay. Again, I have power and fuel here, 4 lakh 20. If you see in this question, I have HP, I have working hours. I have HP and working hours. I'll have to multiply this, put a total and then distribute. HP of machines into working hours. HP of machines into working hours. I'll have to do the multiplication, put a total and then do the calculation. Again, we have a power expense here, 2500. Again, I'll do machine hours into HP of machine. Machine hours into HP of machines. What is this use of basis? You'll understand as we proceed. We have power expense 8000. Here I directly have HP hours. I directly have HP hours. There's a power here, and listen here. In this example, I have HP of machines. If I multiply S1, I don't have the working hours given. S1, I don't have the working hours given. In this question, ICI split it directly on HP of machine. They did not do multiplication. They did not do multiplication, because if you multiply, it will become 0 for S1. It will become 0 for S1. I have HP of machine, but into HP of machines into working hours, when I do for S1, I don't have working hours in the question. I don't have working hours in the question. It could be an error in drafting by them, but normally you will do multiplication and then do the distribution, then do the distribution. Clear? This is on one of the main expense, which is your power expense. Apart from this, other items you please see, let me know if there are doubt. Any item you have a doubt, let me know. These are the bases we will follow. Any area, if there's a doubt, let me know. Light, electricity, light points are area, rent area, factory supervisor, assuming it does only for production department. Any item you have a doubt, let me know. If there's a confusion, please let me know now itself. This will become very critical. Okay, I'll discuss some of the item. Payroll expense is dependent on number of employees. More employee, more is payroll expense, less employee. Whereas ESI and PF contribution is a percentage of wages. If your wages are higher, your contribution is higher. Wages is lower, contribution is lower. So this is on amount of wages. This is on number of employees. Any general expense which is there, the best basis for that is DLH. If DLH is not there, we go with machine hours, and if it's not there, we go with direct wages. Sometimes confusion can be there. You write your assumption and proceed. In case there is a confusion, I can't help it. At some stage, I'll have to write an assumption and proceed. Now, why are we learning this basis? Listen, I have this 4,20,000. The data relating to departments is how much will be distributed to department O. How much will be distributed to department O? How are we going to do distribution is, tell me 150 into 1240. 1 lakh. 180 into 1600. 120 into 1200. These two not applicable because HP is not there. Why I am doing multiplication? HP there and working hours not there, I will not do multiplication. HP itself is not there, which means machines are not there. Can you tell me the total of these three? 6 lakh. Now listen, how you distribute expenses in calculator? Do 4,20,000, do in the calculator 4,20,000 divide by 6,18,000 into 1,86,000 equal to, this is for M, this is for M, then 2,88,000 equal to, don't press any other number, 2,88,000 equal to, I'll repeat again, listen, 4,20,000 divided by 6,18,000 into 1,86,000 equal to M, 2,88,000 equal to N, 1,44,000 equal to O. This is how you will do the distribution of expense. 4,20,000 divided by 6,18,000 into, this is MCQ, but when you do a proper problem, into 186 equal to, write that in M, 2,88,000 equal to, write that in N, 1,44,000 equal to, write that in O. That's how distribution will be done. That's how the expenses distribution will be done. Any doubts on this? Another example, a company has 3 production and 2 service department. Company has paid a rent of 20,000. Overall area of the company is 10,000. This, like last time I told you to put a total, they have given the total 20,000 divided by 10,000 into 2,500 is the rent for department A, into 2,500 is the rent of department A, like that department B. All data can be there. You will have to keep doing this. Again, I'm repeating in the calculation, that calculator technique, if it's not working, please change the calculator. I told in the initial session itself, 420 divided by 6,18,000 into this number equal to, into this number equal to, that has to work. This is called primary overhead distribution. I'm now going to do a question on primary overhead distribution. You are not going to do. I'm going to do a question on primary overhead distribution. Once I'm done with primary overhead distribution, then we move to secondary, and then we later on move to something called as OAR. The entire question, if we do, it will take around, in exam, if all the 4 are asked in the question, it will easily take you minimum 20 minutes to solve it. So you will have to be a little faster, and calculator has to help there. Let's get to that question now. Let's take an example. A company has 3 production department, M1, M2 and A1. 3 service department, one of which is engineering service department, serving the M1 and M2 only. 3 production department, M1, M2 and A1. 3 service department, one name they have given, other 2 names maybe will be there below. hours required to produce 1 unit of the product is 10 machine hours, 4 machine hours and 14 direct labor hour. Why is this data given? For product X, overhead cost is equal to 10 machine hour into OAR, 10 machine hour into OAR, 4 machine hour into OAR and 14 direct labor hour into OAR. So for M1 you have to tell me OAR, which is XX per machine hour, XX per machine hour. That is the overhead absorption rate is 10 rupees per hour, 2 rupees per hour, 5 rupees per hour, some rate you have to give. Similarly for M2 you have to give per machine hour, and for A1 you have to give per direct labor hour, per direct labor hour. That rate is needed, that rate is needed. Now I have first item direct wages. Direct wages, these three I'll ignore it. These three I'll ignore it. The other three, these are service department. These are service department. I'll consider that in the calculation. Indirect wages I'll consider for everyone. Consumables I'll consider for everyone. Then I come depreciation on machinery. I have to distribute this to M1, M2, A1, stores, engineering service and general service. Some question, the distribution would be done and given to you. There you have to do only secondary overhead distribution. There you have to do only secondary overhead distribution. Now, to do primary overhead distribution, you will need more columns. Listen, I'll keep doing it. You just be in listen mode. Primary overhead distribution. First three columns is particulars, amount, basis. These three columns are common. Extra set of column depends on number of department. In this question we have 6 department: M1, M2, A1, stores, engineering, general. So totally 9 columns are needed to solve the primary overhead distribution as well as secondary overhead distribution. Both will need 9 columns in this question. Particulars, amount, basis is common. Particulars, amount, basis is going to be common. Along with this particulars, amount, basis, you will need extra columns. You will be needing extra columns. These extra columns depends. This extra columns depends on number of department. I'll have to keep writing every item. First item is direct wages. Basis is given. I need not write a basis for this. It is given in the question. M1 not applicable. M2 not applicable. A1. These three it will not come. Direct wages is not a overhead. Direct wages is not a overhead, but still for stores, engineering service and general service I don't have a choice, because they are saying we cannot recover it from the customer. So he is saying, okay, you please tell me the amount, I'll recover it from the customer. I'll recover it from the customer. So their expenses 60,000, 10,000, and amount is basically total of all the 6 departments, which is 85,000. The 3 department will not come. Total is 85,000. This is the first expense. I have not done any distribution here. Be in listen mode. There's nothing for you to write. Don't spend time on it. Even in my regular class, I tell students to just listen only. Then only later on they do it. So don't even try writing anything. Next item is indirect wages. Basis is given. Given means the amount is already given. I'll write the amount: 46, 520, 41, 340, 16, 220, 8,200, 5340, 7520, and the total is 1,25,140. This is already distributed and given. If not distributed, they would have given 125,140, and you have to distribute. You have to do the distribution. How to do distribution, you will understand as we proceed ahead. Next item, consumables. Consumable means indirect material. Consumables is indirect material. Basis is given. Basis is given. M1 12,600, 18,200, 4200, 2800, 4200, and 3200. Again I put a total. Then comes my first item, depreciation on machinery, 39,600. 39,600. Now I'll have to read the question and find out a basis from the below table. Tell me what can be the basis for depreciation machinery. Book value of machine. Book value of machine. You will be doing in the calculator what I say, but not writing it. That's all. You will be doing this book value of machine. Now please tell me the total of all of this. Tell me the total of all of this. How much? Now in the calculator, please follow exactly what I say. 39,600 divide by 3 lakh into 1,20,000 equal to, after equal to, tell me the amount. 15? 90,000 equal to 30,000 equal to 12,000 equal to 36,000 equal to, and the last one is again 12,000. 1584. 1584. Clear? Any doubts on this? This is called distribution. 39,600 divided by what? 3 lakh into 1,20,000 equal to 90,000 equal to 30,000 equal to 12,000 equal to 36,000 equal to 12,000 equal to. You'll have to keep doing this and write the number. Check. Total of all of this is 39,600. It has to match that 39,600. I have just done it in Excel. It is matching 39,600. Any doubts on this? Clear? This is what is called distribution. Now, if you understand one item, you can handle 100 items also. It doesn't really matter. The most important is basis, which is where I initially spent time saying, gave you the table saying that what is the basis we normally use. Then I go to the next item. Insurance of machinery. 7,200. Again, what basis? Book value. Book value total, 3 lakh. Do 7,200 divide by 3 lakh. Divide by 3 lakh into 1,20,000 equal to 90,000 equal to, keep doing it. 2,000. Okay. Others I don't want you to do. I'm writing the number. I know how to get it shortly here. So this will be the numbers for each of the department. These will be the numbers for each of the department. So the second expense we have written. Let's go to the third one. Insurance of building. There some data is there. It says 1/3 will go to which one? M1. Insurance of building 1/3 will go to M1. Balance 2/3. Balance 2/3. Tell me what basis you want me to use. 1/3 will go to M1. There, that is mentioned in the question. Balance 2/3. What basis should I use? Area square feet. Best is value of building. I don't have. Now, when I do that calculation in the total, I will not add the M1 area. I will not add the M1 area because M1 I'm directly giving 1/3. I'm directly giving 1/3. So wait. Insurance of building 1/3 to M1. 1/3 to M1. So 3240 into 1/3. I give 1080. Again insurance of building. Again insurance of building. 2/3 to balance, which is 2160. Now please 2/3 to 2/3 area. Tell me the total of area excluding M1. 20,000. So in the calculator 2160 divide by 20,000 into 6,000 equal to. Tell me the number. 8,000 equal to 2,000 equal to 2,500 equal to and 1,500 equal to 162. Clear? Any doubts on this? Then next item is power. Tell me what should be the basis for power in the question. Power 6480. What is the basis? Effective HP hours. Effective HP hours. I'm not doing the distribution. Okay. I'll take the number, keep distributing in the ratio of what? 6480 divide by 100. Divide by 100 into 50 equal to 35 equal to 5 equal to 10 equal to. Light, what should be the basis? Best basis is number of light points not available. Next best basis is area square feet. Next best basis is area square feet. I'll do it. Now rent alone I want to explain. Rent is how much they've said? 12,675. The general service department is located in a building owned by the company. Is located in a building owned by the company. So if I am owning the building, obviously I'll not be paying rent. Obviously I'll not be paying rent. But costing considers notional expense. It is valued at 6,000 and is charged at a notional value of what? 8% per annum. This cost is additional to the rent shown above or shown in the side. So this 12,675 will first go to only 5 departments. It will go only to 5 departments, excluding which department? General service. I'll exclude the general service. Put the total of the area of 5 departments, 12,675, divide by the area into 5,000 equal to 6,000 equal to 8,000 equal to 2,000 equal to 2,000. General services 6,000 into 8%. 6,000 into 8%. Clear? Any doubts on this? You will put total of only 5 departments. You will put total of only 5 departments. It can come in decimal and all. I think it will come in decimal here. So when I distribute this, these are the numbers I get. 480, and this I'm getting 2697, 3236, 4315, 1079, 1348. In this direct cost of service department is added in this step. You can add it in step 1 or you can add it in step 2. That doesn't really matter. Once primary overhead distribution is done, this will be the value. 85,937, 81,028, 32,331, 74,599, 27,962, 28,558, and all put together will be 33,0415, which you can check row wise total as well as column, that is column wise total and row wise total, both you can check. So in this question, what we have done till now is, earlier you told me expenses, indirect wages, consumable, supply, all these names you gave. Now I'm changing the name. I'm changing the name. What is the name I'm giving? I am giving it as a name as overhead of M1, M2, A1, stores, engineering service and general service. This is the first step. This is called primary overhead distribution. Under primary overhead distribution, what you need to do is, you will have to distribute this expense to the various department. Now I'll be moving to secondary overhead distribution. I'll repeat the same table. Particulars M1, M2, A1, stores, engineering service and general service. OH as per primary distribution. OH as per primary distribution. The numbers are 85,937, 81,028, 32,331, 74,599, 27,962. No, adding that extra 10,000, adding those number, that is adding the direct cost. In my calculation, you can add the direct cost in step 1 or step 2. Wherever you add doesn't really matter. Now, this total is 330,415. Now, my objective is to make stores 0, engineering service 0, general service 0. I have to do that only. I have to do stores 0, engineering service 0, and general service 0. For that, there are 3 different methods are there, or 3 different scenarios are there. First scenario is called no service. What is no services? These 3 departments are there, no, stores, engineering service and general service. Stores is giving its service only to M1, M2, A1. It is not giving any work of its for engineering or general. No work. Stores is not doing any work for other service departments. Stores is doing no work for what? Other service department. Engineering is doing no work for other service department. General service is doing no work for other service department. That is called no service or direct distribution method. That's the first method I'm going to explain. Direct distribution method. If you read the question, it says, allocate service department cost to production department, ignoring the apportionment among the service department. Ignoring the apportionment among service department. You will understand later. SD1 will give to SD2, SD2 will give to SD1. That and all will happen. As I proceed, you will understand. So first method is called direct distribution method, where what I have to do is very simple. I have to put something like this: redistribution of stores. What I will do is, I'll write minus 74,599 and put this 74,599, some 20,000 to M1, 40,000 to M2, some 10,000. How we put, I'll explain, but I have to make it minus 74,599. Then I'll do redistribution of engineering. I have to make it as minus 27,962 and give it to these 3 departments. And redistribution of general. Redistribution of general. Again, what we are going to do is, so if you put a total now, 0, 0, 0, these 3 will become 0. But somewhere you have to get some numbers here. And these 3 departments as of now, total is 1,99,000. In some time, The total of 3 departments will become 3,30,415. 3,30,415. So earlier you gave it to 6 departments. Now from 6 you have to bring it down to 3 production department. How do I bring it down? Again using a basis. The basis is here for secondary overhead. Stores you normally distribute based on value of material issued or value of stores requisition. Value of material issued or value of stores requisition, because their job is to issue material. Their job is to issue material. Engineering is related to machinery. Engineering is related to machinery. So the basis is called machine hours. General is no proper basis. We follow DLH. Timekeeping and accounts. Timekeeping and accounts can be on number of employees. Power can be on horsepower. Canteen can be on number of employees. The basis for secondary overhead distribution and the basis for primary overhead distribution is almost similar. You will have to find out a basis. You will have to find out a basis and again do what? Distribution. In that the first method is called no service. SD1 does not give service to SD2 and SD3 in this question, and SD2 does not give service to SD1 and SD2. SD3 does not give service. So like that you can keep having. We follow a method called direct distribution method. I'll be explaining direct distribution method now. What you do? Take the service department cost, transfer it to what? Production department. There is no transfer among service department. There's no transfer among service department, and sequence of distribution is not important. Sequence of distribution is not important. Later on you'll understand sequence of distribution is important at few places. As I proceed, I'll explain it. Now let's take redistribution of stores. If I go to the data, question has said value of issue of material to the production department is in the same proportion as that of what? So consumable supply is equal to value of material issued. Consumable supply is equal to what? Value of material issued. Consumable supply. First two question you understand it fully, balance will become fairly simple for me to explain. So the basis here is consumable supplies. Like I did, please tell me the total of only M1, M2, A1, because we are not going to give it to stores, engineering service and in general service. M1, M2, A1 total. Only first 3 department. M1, M 35,000, because I'm not distributing to other. I'm repeating again. Consumable supply is the basis. We are distributing to M1, M2, A1. If you are distributing to engineering service, please add the engineering service also in the total. And if you distribute to general service, please add general service also in the total. If you are distributing only to M1, M2, A1, I just need the total of these 3, which is what? 35,000. In the calculator, 74,599 divided by 35,000 into 12,600 equal to 26. 856. Okay, then 18,200 equal to no 30 38. Okay, 791. Then 4,200 equal to 8,952. We have done the distribution just for your comfort. I put a total. I get 74,599. I get 74,599. I'm repeating again. Consumable store is the basis. This is called direct distribution method. M1, M2, A1 total. Later on you'll understand I'll also add engineering service in the denominator and general service also in the denominator, depending on the method which we follow. Then next is redistribution of engineering. Engineering is related to machinery. Engineering is related to machinery. Tell me the basis I can use from here. More than the book value of machine, the better is machine hours, because volume is always better than value. Volume is always better than value, because overheads are generally driven. Freight cost is driven by the quantity of material and not the value of material. It's all depends on the quantity. So overheads is generally driven by volume. Very few overheads like your ESI contribution, all that is value. Otherwise overheads is generally driven by volume. So 40 plus 50 is 90,000. 40 plus 50 is 90,000. So I use the basis machine hours only for M1 and M2, and this is what the first line said. The first line said engineering services servicing only M1 and M2, is servicing only M1 and M2. So 40 plus 50 is 90,000 in the calculator. 27,962 divided by 90,000 into 40,000 equal to 12,490 428, and then 50,000 equal to clear. This is engineering service done. General service, my basis is DLH. General service, my basis is DLH. DLH total, put a total of DLH for the three departments. 6 lakh 15. So I will do 28,558 divided by 6 lakh 50,000 into 2 lakh equal to 1 lakh 50 equal to, and the last one is 3 lakh equal to. This is done, and at this stage I'll get overhead post secondary distribution. Overhead post secondary distribution, I get a total. Last three departments have become 0, and the total of these three is 330,415. Some rounding of difference can happen, but the total is 330,415. Now for each of these three you have to find a basis. M1 and M2 is machine hours, A1 is labor hours. M1 and M2 is machine hours because it's related to machinery, and A1 is related to labor. A1 is related to labor. So my overhead absorption rate I have to calculate. First, any doubts on this distribution? Any doubts on this distribution? Once this is done, I get these numbers, I repeat the calculation. The overhead basis is machine hours and labor hours. This is for the company as a whole. Don't take it for X and Y product and all. This is for the company as a whole, and I get recovery rate 3.3502 per machine hour. This we had done when we did activity based costing. We used a recovery rate. That recovery rate is 3.3502, 2.8389, 0.1815, and multiply with those hours to get the overhead. 10 hours, 4 hours, 14 hours, 6 hours, 14 hours, 18 hours. You'll have to multiply with this number of hours to get the overhead cost per unit. First is primary overhead distribution, where the various expenses are distributed. Various expenses are distributed to all departments using some basis. In secondary overhead, I make it 0 for the service department. In that, I only explain the first method, which is called direct distribution method. I made them 0 and gave value to the other departments. This, once they became 0, I found out a basis which is either machine hours or labor hours. Get the recovery rate. So what is the use of this recovery rate is, suddenly you may say that you want to introduce product Z. Overhead cost is very simple. Just give me this: 2 machine hours, 4 machine hours, 20 labor hours. If you give me this, I'll say 2 into the recovery rate, 4 into the recovery rate, 20 into the recovery rate will be the overhead cost. Material labor is easy to calculate. Overhead is difficult to calculate. So to make it little scientific, we have done this basis. We have done the calculation, which gives me 3 different rates for 3 different departments. Any doubts on this? Any doubts on this? Primary overhead distribution, secondary overhead distribution, overhead absorption rate, and after OAR is done, we are going to ultimately calculate something called as overhead per unit. I'm giving you a 15 minutes break. If you want to take break of 2-3 minutes, you take it, but otherwise go through the solution of this. 15 minutes is just to understand overhead, so that then I explain the other method. So 15 minutes for you to go through whatever I've done in overheads. If you want to take a break of few minutes, go out and come back, but otherwise spend time on understanding this. Clear? I'll take a break of 15 minutes. Okay, let's proceed with the discussion. So I have explained first what is primary overhead distribution. In secondary overhead distribution, we have just done one method called as direct distribution method. Then comes the second method, which is called one-way service. Listen guys, listen. In this method, there is a first service department which gives service to the second service department, and ideally the second department is not giving service. One-way service means SD1 gives service. What is giving service? If you have HR department, you have to recruit employees of that department. If you have maintenance department, you have to maintain machinery. So let's assume there are two departments, maintenance department and HR department. HR department will recruit employees even for the maintenance department. But maintenance department will not give any service to the HR department because they don't have any machinery. They are not having any machinery. So in this method, what we do is we have to first find out the sequence of distribution. Sequence is very, very critical. In the earlier method, I wrote generals. You change the order, it's okay. But here sequence is very, very critical. How do you find the sequences? First, it could be given in the question. If it's given in the question, please follow the sequence given in the question. This secondary overhead distribution, that stepladder method or the one-way service, you will do along with me when I start solving it. First, find out the sequence of distribution as given in the question. If not given, let's assume there are S1, S2, S3, S4, four service departments are there. First, find out S1 is giving service to how many other service department? How many other service department? Let's assume it's giving service to 3 other service department. S2 is giving service to 1 other service department. S3 is not giving service to any other service department. S4 is giving service to 2 other service department. 3, 1, 0 and 2. The sequences start with the maximum one. So sequences S1, then do S4, then do S2, then do S3. Sequences start with the maximum one. Start with the maximum one. S1, S2, S3, S4. S1 giving service to how many service department? S2 giving service to how many service department? S3. In case there are only 2 service department, let's take an example. S1, S2. It is giving service to the other service department. This is also giving service to the other service department. This is technically called two-way service. You should ideally not follow this method. But question will specifically still say follow step ladder method. Follow step ladder method are non-reciprocal. In case there is a tie, then we calculate percentage. We calculate percentage. What is percentages? S1 is giving service to M1, M2, A1, PD1, PD2, PD3, so many department. So in so many department, what percentage service is given to S2? And S2 is giving what percentage service to S1? Whichever is giving higher percentage, that is taken up first, and lower percentage is taken up second. Now what is the change here? The change you'll understand when I do distribution. So let's do distribution so that you understand the change in the distribution. Let's come to question 2. Deccan Manufacturing have 3 departments which are regarded as production department. Service department costs are distributed to the production department using step ladder method. Using the step ladder method. Estimates of factory overhead to be incurred by the each department is as follows. If they have already given these numbers, it means primary overhead distribution is done. If it's not done, then they use the name insurance, depreciation, maintenance, all that will be there. You have to do. So totally 7 departments are there. They have done primary overhead distribution. We will start with this and then add in case is there any direct cost of service department. In service department, if at all any direct cost they give, we add it. If it's not there, we leave it. The overhead cost of 4 service department are distributed in the same order. P, Q, R and S. They have given the sequence. If sequence is not given, you will understand as we proceed. So the sequence is given P, Q, R and S. So P is on the basis of number of employees, Q, DLH, R, square meters. If they don't give me basis, I cannot find because I don't know what is P, what is Q, what is R, what is S. If they tell P is HR, then I would have said number of employees. HR is number of employees. Q, if they said property related some department, then I could have said direct labor hours or something. If they give me data, I can find the basis. If data is not given, then they have to tell me the basis. So basis is given number of employees, DLH, area and square meter and DLH. Prepare a schedule showing the distribution to the 3 production department. From 4 service, you have to take it to 3 production department. Calculate the OAR per direct labor hour. So they have told the basis it's per direct labor hour. And then there is one job I am doing in which material cost is how much? 25,000. Labor cost is 30,000. Overhead cost is 15 into the rate you calculate plus 20 into the rate you calculate plus 30 into the rate you calculate. We are calculating this rate to find out the overhead of this job. To find the overhead of the job. 15 into the rate, 20 into the rate, 30 into the rate. Working note 1. Secondary overhead distribution. You will do along with me. Working note 2, secondary overhead, or working note 1 technically, but it's secondary overhead distribution. You will need 10 columns. So you can either write horizontal, vertical, 10 columns. Particulars, amount, basis, X, Y, Z, P, Q, R, S. Otherwise, you will have to do primary distribution, which does take away good amount of time. We have seen that it takes away good amount of time. Here it's already done and given. So we will write the values, write the columns first. This is given to us. Okay. If it was direct distribution method, I would have said distribution of P, Q, R, S, sequence doesn't matter, and taken 45 and distributed only to X, Y, and Z. Taken 45 and distributed only to X, Y, and Z. Taken 75 distributed only to X, Y, and Z. They have not told us, they have told step ladder method. Now write distribution of P. Distribution of P. The total amount is as of now 5,95,000. Distribution of P. Basis given in the question is number of employees. Number of employees. I'll write minus 45,000. Minus 45,000 in P. Now you'll have to add the employees of X, Y, Z, Q, R, S. You'll have to add all except P. P you should not add. Add the number of employees of X, Y, Z, Q, R, S. So 45,000 divided by 450 is 100. 45,000 divided by 450 is 100. Then I multiply into 100 equal to. So you keep doing that. You will get 10,000, 12,500, 8,500, 5,000, 4,000 and 5,000. Just add two zeros to the number of employees into 100. Just add two zeros to the number of employees. 10, 12, 5, 8, 5, 40, minus 45 is okay. 5,000, 4,000 and 5,000. Understand the difference. Earlier method I did not give anything to Q, R and S. Now I am giving value to Q, R and S. Then distribution of Q. Basis is DLH. Now listen, here you will have to write minus 75 and minus 5, minus 80. Minus 80. Now listen, under step ladder method, moment you distributed P, do you have DLH against department P? Look at department P. Is there a DLH number? Is there a direct labor R for department P? Yes. So if it was not step ladder method, then when I distribute this Q, I'll distribute again back to P also, which is the next method you'll understand in some time. Once under step ladder method, you have distributed a department, not applicable. You will not distribute anything back. Once a department is distributed, there will not be any transfer back to that department. So please tell me the total of DLH of X, Y, Z, R and S. No P, no Q. X, Y, Z, R and S. Total of X, Y, Z, R and S. Don't add P, don't add Q in the total. 80,000 divided by 20,000 is 4. 4 into 4,000, 3,000, 4,000. Again, I'm repeating. I will not consider P in the total. Q obviously will not come in the total. P and Q both should not come in the total. So 4,000 into 4 is 16,000, 12,000, 16,000, 24,000 and 12,000. Clear? Now I have to distribute R. For R, the basis given is area square meters. Area square meters. Listen, I will put total of these three. Listen for a minute. This is not applicable, not applicable. P and Q should not get anything back. P and Q should not get anything back. So not applicable and not applicable for what? P and Q. I should not transfer anything back to P and Q. Tell me the area square meter of X, Y, Z and S. X, Y, Z and S put together. 7,000. So 1,33,000 by 7,000 is 19. 19 into 3,000 will be 57, 28,500, 28,500 and 19,000. Don't worry about the numbers. Understand how I have done. That is more important. Don't worry about the numbers part of it. Numbers, some up and down doesn't really matter. Again, I'm repeating what I'm telling here is first we started with P. We gave it to X, Y, Z, Q, R, S. Then we started with Q, gave it to X, Y, Z, R and S. Then we started with R, X, Y, Z and S. And now S will only go to X, Y and Z. S will only go to X, Y and Z. Distribution of S. DLH 66,000. 66,000. And DLH total of the first three department is 3 plus 1 5 plus 1 5 is 6,000. Sorry, not sorry. Here 11,000. 4,000 plus 3,000 plus 4,000, 11,000. 6 into 4,000, 24,000. Overhead post secondary distribution. Last four departments have become zero, and these three departments put together is now 5,95,000. These three departments put together is 5,95,000. There is no tricky adjustment and all. If you understand the working, you will be able to handle it. Start with the sequence. Sequence is given. If not given, what to do, I'll explain as we proceed. Took the first department, gave it to 3 plus 3. Second department, 3 plus 2. Third department, 3 plus 1. Fourth department, only to 3. Clear? Any doubts on this? Now, beyond this, I'll have to divide by the DLH. 4,000 if I divide, I'll get 75 as the overhead absorption rate. Let's not worry much about it. 1,35,000 by 3,000 is 45 and 1,60,000 by 4,000 is 40, and this recovery rate would be multiplied here. This recovery rate would be multiplied here to get the overheads of the job. This is step ladder method where sequence is given, not given. As I proceed, you will see. Clear? So here I got these three recovery rates. Format remains same. Format remains same. I'm not changing anything on the format side. Only change which can happen is primary distribution you may do, you may not do in few questions. Comes the third type of a question. A company has 3 production department and 2 service department. Overhead analysis sheet provides the following overheads to the various production and service department. Primary overhead distribution is done. Primary overhead distribution is done. 48,000, 42,000, 30,000, 14,000, 40, 18,000. Expenses are to be distributed. SD1 20% to X, 40% to Y, 30% to Z, and 10% to SD1, 10% to SD2, sorry, SD2. And the second department is 40, 20, 20, 20. Direct labor hours is so much. Find the cost of the job, 5,000 material, labor cost 3,000, 100 hours, 150 hours, and 200. Your job is to find recovery rate for that 100 hours, 150 hours, and 200 hours. What should be the overhead absorption rate, so that you can multiply? What should be the overhead absorption rate? Now, first question when I said, it said direct distribution. Second question said step ladder. This question has not told anything. If problem is silent, you will have to check. There are three situations. One is called no service, one-way service, two-way service. Should SD1 cost be distributed to SD2 as per the question? Look at the data and tell me. SD1 cost, should you distribute to SD2 as per the question? Question has given the data. SD1 20% to X, 40% to Y, 30% to Z, and 20% to, sorry, 10% to SD2, which means SD1 is giving service to SD2. SD1 is giving service to SD2. Is SD2 cost to be distributed to SD1? Yes. How much? 20%. If the question tells follow step ladder, if the question tells you follow step ladder, sequences SD2 first and SD1 second. Why SD2 first? Because SD2 is giving more service. SD2 is giving more. In case it tells you follow which method? Step ladder method. If it is silent, then we have three methods to solve this, which is called two-way service. What is two-way services? SD1 giving service to SD2 and SD2 giving service to SD1. These three methods I am going to do. In that one method you will do along with me. Other two methods you will only be in listen mode. SD1 giving service to SD2 and SD2 giving service to SD1. I'll repeat again. SD1 20, 40, 30 and 10%, which means SD1 is giving service to SD2. SD2 40, 20, 20 and 20, which means SD2 is giving service to SD1. This is called two-way service. This is called two-way service. Now, how we do this is, let me take the various departments. Particulars, amount basis, XYZ, SD1, SD2, overhead as per primary distribution, 48,000, 42,000, 30,000, 14,040, 18,000. First is called repeated distribution method, which I don't want you to do. You'll only be in listen mode. Distribution of SD1. Distribution of SD1. The basis is given in the question. SD1 is 20, 40, 30 and 10. 20, 40, 30 and 10. So I subtract 14,040 and give into 20% into 30%. Sorry, it's 20, 40. Then 30% and 10%. At this stage, if you put a total, SD1 is 0. SD1 is 0 at this stage if you put a total. But then what happens is, next is distribution of SD2. You subtract 19,404. You subtract 19,404 and give it to 40, 20, 20 and 20. So 19,404 into 40%, 19,404 into 40% into 20%, 20%, 20%. Unfortunately, if I put a total now, SD1 has a value, but SD2 is 0. SD1 has a value, but SD2 is 0. What I did, I started with SD1, gave it to all department. SD2, give it to all department. You have to repeat this. That's called repeated distribution. You'll have to repeat now SD1 again, SD2, SD1 again, SD2. 3 times if you do, more or less we'll get both 0. More or less we'll get both as 0. Then distribution of SD1 minus 3881 minus 3881, and this will be 3881 into 20% into 40% into 30%. Now the problem for me is the SD1 total is 0, but SD2 total is 388. SD2 total is 388. I'll have to repeat this. I'll have to repeat the exercise. Distribution of SD2, I'll make it as minus 388 and give it as into 40%, 20%, 20% and 20%. At this stage, SD1 is coming closer to 0, but it's not 0, 78, and SD2 is 0. Repeat one more cycle. Distribution of SD1 minus 78, minus 78, 78 into 20% into 40%, 30%, 10%. Clear? And now I have 8 rupees. If I distribute this 8 in the ratio of 40, 20, 20, 20, SD1 will get 2 rupees. SD1 will get technically 2 rupees. At this stage, I've reached an insignificant number. What I will do is I'll write minus 8 and write a 0 here. I'll not distribute anything back. I'll not distribute anything back. This 8 rupees just distribute to X, Y and Z. Just distribute it to X, Y and Z in the ratio of 40 is to 20 is to 20. At this stage, we have reached an insignificant number. Even if you write this and do the next distribution, it will become 0, because 2 rupees when you distribute back, the other department will not get anything. So 8 divided by 80, 40, 20, 20. Only the first 3 departments. So it will be 4 rupees, 2 rupees and 2 rupees. 4 rupees, 2 rupees and 2 rupees. Earlier, the total was 150 to 40. Now the total is 150 to 41. 1 rupee rounding off somewhere has happened. 1,50,000 to 41 is a rounding off difference somewhere which has happened. This is called repeated distribution. This is called repeated distribution. The last problem which we did know, if the problem had not said step ladder, no, it should have been under repeated distribution, because every department was giving service to other department. So then you would have started with 1, gave to 6 department. Second, gave to 6 department. It would have taken a lot of time. That's why they have changed the method there. Normally, they'll give only 2 departments. Take the first, give it to everything. Take the second, give it to everything. Take the first, give it to everything. Take the second, give it to everything. Any doubts on this? Clear? This is under your two-way service. Now, this, if problem is silent, you can follow repeated distribution or simultaneous equation or trial and error is very rarely asked in exam. Only 2 methods mainly, repeated distribution and simultaneous equation method. Once this value is calculated, you go back and calculate the OAR dividing by the DLH of the company, and then use this DLH for the cost of job calculation. This is one segment. Second segment is called repeated distribution. Sorry, second is simultaneous equation. Now let's write along with me. Right. Simultaneous equation method. Simultaneous equation method. Let us assume X and Y to be the distributable amount of SD1 and SD2. X and Y to be the distributable amount of SD1 and SD2. It can be any name, okay? Here it's called SD1, SD2, whatever name they give. X equal to overhead of SD1, direct cost of SD1 plus overhead of SD1, direct cost of SD1 plus percentage transfer from SD2. We have to form two equations. X is equal to overhead of the department, direct cost of the department, plus what is going to come from the other department, plus what is going to come from the other department, which is X equal to SD1 overhead is 14,040. SD1 overhead is 14,040. X equal to 14,040. This part you have to understand. That's why I'm telling you to do along with me. Other one is very simple, just distributing. 14,040. No direct cost of service department given in this question. We saw the first question where there was some direct cost, direct wages. 0. Tell me clearly how much SD1 will get from SD2. What percentage? 20 percentage. So plus 0.2 y. Why? Because y is the distributive amount of the second department. X equal to 14,040 plus 20% of second department. 20% of second department. 0.2 y. Similarly, y equal to overhead of SD2, direct cost of SD2 plus percentage transfer from SD1. Percentage transfer from SD1. Percentage transfer from SD1. Second department has an overhead of 18,000. How much will the second department get from the first department? 0.1x. This two equation forming is very, very critical. If you make a mistake in the equation, you will get stuck in the next stage. So if you form equation properly, it's okay. Otherwise, next stage you will get stuck. After the equation is formed, substitution. What is substitution? Is x is equal to 14,040 plus 0.2. In place of y, I will write 18,000 plus 0.1x. In place of y, I'll write 18,000 plus 0.1x. Solve and tell me x. This equation forming is very, very critical. In place of y, we will write 18,000 plus 0.1x. Let me know what you get as x. No, it will be a bigger number. 14,040 plus 3,600 plus 0.02x. 0.98x is equal to 17,640. X is equal to how much? 18,000. X equal to 18,000. X equal to 18,000. I will substitute this in y, and y I'll get as what? Y equal to 18,000 plus 0.1 18,000. Clear? In case the only mistake which people will do is this percentage transfer. 0.2 y and 0.1 x, they sometimes may write 0.1 y and 0.2 x. If you write that, you will get stuck in the next stage. You will get stuck in the next stage. Any doubts on this? I'll repeat again. X and y is the distributable amount of SD1 and SD2. SD1 my overhead, my direct cost, plus what I'm going to get from the other department, plus what I'm going to get from the other department. Y my overhead, my direct cost, what I'm going to get from the other department. Beyond this, you need not write. You will understand this table now. I'll just do one distribution of SD1 and SD2. What amount you will distribute is whatever you calculated, minus 18,000 minus 19,800, minus 18,000 and minus 19,800. When you do this one time, both will become 0. Both will become 0. If both are not becoming 0, it means you have done a calculation error in your framing the equation or solving it. Minus 18,000 and minus 19,800. What will happen? 18,000 into 20%, 40%, 30%, 10%, and this is 19,800 into 40%, 20%, 20%, 20%. Both have become zero. Both have become zero in one cycle of distribution. In one cycle of distribution, both have become zero. If you frame the equation properly, both will become zero. In case there's a mistake in framing the equation, the solution will go wrong. Clear? Any doubts on this? Done? Now, trial and error, I don't expect them to test it, but in case they test, I'll explain it. Trial and error means ignore all this, okay? How you do trial and error is this. You have this SD1, SD2, overhead as per primary distribution 14,000 and 18,000. Distribution of SD1 to SD2, SD2 to SD1, SD1 to SD2, SD2 to SD1. You'll have to keep doing this. Only change here is when you do this, ignore this negative number. Ignore the negative number. Ignore the negative number. You'll have to keep doing repeated. You'll have to keep doing repeated distribution. This total is that X and Y which you solved. This total is that X and Y which you solved. So what is trial and error method? I'll explain again. Trial and error method is take the first department, give it to the second department. Take the second department, give it to the first department. Take this amount, give it to the second. Take it like this. You'll have to keep doing. The total is 18,000 and 19,800. After calculating this, then you have to again do a detailed calculation like this. So that 18,000 and 19,800 you can calculate by forming an equation. Here they are saying no, don't form an equation. What you do is you do it like this. 14,000 you give it here, you give it here, you give it here, like this you keep doing it. You keep distribute. The total is 18,000 and 19,800, and take this 18,000, 19,800 and do the equation. Do the distribution 18,000. So to get that number of 18,000 and 19,800, I have two approaches. One is simultaneous equation, which is what I would prefer. I would prefer a simultaneous equation. But in case question says trial and error method, if they use the word trial and error, take the first department, give it to the second department 10%. Take the overall cost, give it to the first. Then take this cost, give it to the second. Take it, give it to the first. Take it, like this it will keep happening. Total is 18,000 and 19,800. 18,000 and 19,800, and this is the number you are going to use for distribution, which anyway I knew X and Y. This is otherwise called as your trial and error method. So for a two-way service, I'll go back to my concept note now. I initially said this, now I'll be able to explain it further. Situation 1, no service. Situation 2, one-way service. Situation 3, two-way service. In situation 1, SD1 is not giving service to SD2. SD2 is not giving service to SD1. Start with direct distribution method. Sequence does not matter. Take SD1, give it to PD1, PD2, PD3. SD2, PD1, PD2, PD3. SD3, PD1, PD2, PD3. Keep giving it to the production department. Keep giving it to the production department. Then comes your one-way service. Under one-way service, SD1 is giving service to SD2. SD2 is not giving service to SD1. That is what ideally it should be. In such a type of a question, the question has to tell me the sequence of distribution. The question has to tell me the sequence of distribution. If sequence is not given, go by the number of departments served. And if that is not there, go by the percentage. Percentage, either they may give it or you may have to calculate. How will you calculate percentages? For example, if I go back to this question, I want to know I want to know department P, which is on the basis of number of employees. What percentage P is giving it to Q? What percentage P is giving to Q? Ignore P's employees. The total was 450. So it is giving 50 on a base of 450. 50 on a base of 450 to which department? Q. 40 on a base of 450 it is giving to R. 50 on a base of 450 it is giving to S. 100 on a base of 450 it is giving to X. 125 on a base of 450 it is giving to Y. This percentage were given directly to you in that question number 3. They gave you this percentage by doing this backward calculation, which you are not aware. I am also not aware what they have done, but this is that calculation. What percentage is given to every department? So you go by percentage of service provided. Now let's understand if you have got this clearly. Overhead of SD1 and SD2 are distributed on the basis of step ladder method. Data regarding two departments are as under: number of employees, area. SD1 is distributed on the basis of number of employee, SD2 on the basis of area. What should be the sequence of distribution? What should be the sequence of distribution? What is the basis of SD1? Number of employees. Ignore this, okay? Ignore this. Tell me the total of employees. 400 divided by 700 is how much? 57%. SD1 is giving 57% service to SD2. SD1 is giving what? 57% service to SD2, ignoring its own employees, ignoring its own employee. SD2 cost is distributed on the basis of area. Ignore the area of SD2. Tell me the total. 25,000 divided by 40,000 is how much? So SD2 is giving 62% service and SD1 is giving what? 57% service. SD2 is giving what? 62% service and SD1 is giving what? 57% service. So the sequence will be SD2 first and SD1 next. In case step ladder is not given, I'll follow repeated distribution or simultaneous equation or trial and error method. I'll follow that. I need not get into all this because it's a two-way service. This is a two-way service. Able to understand this percentage? How I'm calculating is I ignore the department which is where we are calculating. SD1 employees, ignore it. Total SD2 employee divided by the total. SD1 area divided by the total area. SD1 area divided by the total area. 57%, 62%, 57% and 62%. Okay, this MCQ and all you do at home. When you do at home, you will understand that there is a sequence given. So when you do that sequence, first you will do X. When you do the second department, there should not be any transfer back to the first department. All those are tested here. These MCQs kind of sufficient for you to cover those bigger questions which are there, provided you are clear on the concept which I have explained. Repeated distribution I have already told. SD1 will be first distributed to all departments including SD2. This will make the cost of SD1 as 0. Post this, SD2 will be distributed to all departments. This will make SD2 as 0, but SD1 will have a value. Repeat this process till both department become what? 0 or single digit. Moment it becomes single digit, don't transfer anything back to the other department. We have to get 0 value for both service department after what? One cycle of distribution. X is equal to overhead of SD1, direct cost of SD1 and percentage transfer from second department. Y is equal to, let's see if you have understood this. Overheads of SD1 is 10,000, SD2 is 15,000. SD1 is distributed as 50% to PD1, 20% to PD2 and 30% to SD2. 30% to SD2. Service department 1, it's not given in the table form, but it's like this: 50, 20, 30. Then SD2 cost is distributed on the basis of number of employees and the same is as under. I don't like the number, I want percentage. 20 plus 20 plus 10. 20 plus 20 plus 10, because I'm doing SD2 calculation. I'm doing the SD2 calculation. In SD2 calculation, I don't need the SD2 employees. I don't need the SD2 employees. So total is how many employees? 50 employee. 20 on 50 is 40%. 40%. 20%. So if I go back to this question, there they gave you the percentage: 20, 40, 30, hyphen 10, 40, 20, 20, 20 and hyphen. Similarly here it is, SD1 is 50, 20, hyphen and 30. SD2 is 40, 40, 20 and 0. 40, 40, 20 and 0. The percentages are not given. I have done the calculation. Now please form equation. I want you to form equation and tell me what is X and Y. What is X and Y? Form equations and tell me X and Y. 50, 20, hyphen 30, 40, 40, 20, hyphen. This you should get it, but I've done it in the table. So now you form the equation. The note is also available above. This is how you form the equation. Overheads of my department, direct cost of my department, and transfer which is coming from the other department. If you get the answer to the MCQ which is given here, you understood the concept. That's how the MCQs are almost at all places. This is the equation, and if I solve, I get 13,829 as x. I get 13,829 as x. 10,000 plus 0.2 y, 15,000 plus 0.3 x. Clear? Similarly, at home, you try to do this equation. Once you properly form the equation, solving will not take time. It's only forming the equation. This example is more simpler because the percentages are directly given. Last example, you had to calculate this 20%. You had to do the calculation of 20%. And MCQ, if you get stuck, I've already uploaded a video in my YouTube channel where all the MCQs are discussed, but that will be at a faster pace. So you will have to first solve and then check that MCQ in case, check the video in case there are doubts. Clear? So this is and the other method, and trial and error method, we should get zero value after one cycle, would be computed by doing a series of repeated distribution between one SD1 and SD2. We are now done with step 1. Step 2. Step 1 is primary overhead distribution. Step 2 is secondary overhead distribution. Secondary overhead distribution, we have three situations: no service, one-way service, and two-way service. No service direct distribution method, one-way service step ladder method. Sequence very critical. Sequence follow given in question. Go by the number of service departments served. Tie go by the percentage of service provided. Go by the percentage of service provided. Then the third situation is two-way service, where we have repeated distribution method, where you do SD1 to SD2. SD1, you'll have to keep doing this repeated distribution. After 3 cycle, almost it will become 0. Simultaneous equation method, x is equal to my cost plus my direct cost plus transfer from the other department. Y is equal to my cost plus my direct cost plus transfer from the other department. So this is how you will form the two equations, solve it, you will get, and in one cycle of distribution, you will get 0 value. In one cycle of distribution, you will get 0 value. And then the last part which we saw was repeated trial and error method, where SD1 only give to SD2, SD2 original amount plus the new amount give it to SD1, this amount give it to SD2, this amount don't put any negative, put a total, you will get the same amount. Clear? The third step was OAR. The third step was OAR, where we had a formula called OAR is equal to budgeted overhead by budgeted suitable base. Now the suitable base can't be same everywhere. For example, a place like this will use the suitable basis number of students. We may use the denominator as number of students. A factory may use number of labor hours. Another factory may use number of machine hours. Another factory may use number of units produced. There are broadly two bases. One is called value, second is called volume. Whatever I'm giving is not exhaustive, it can be other than that also. In value, that is, my formula can be budgeted overheads divided by budgeted direct material cost. Budgeted direct material cost, or budgeted direct labor cost, or budgeted prime cost. Budgeted prime cost. This is called value based method, which are not preferred. Value based methods are not preferred by any organization, but denominator can be value based. Denominator can be value based. So when I ask what is OAR, you will say OAR is 20%. I don't understand anything. You have to say OAR is 20% of direct material cost, 40% of direct labor cost, 10% of prime cost. that has to be the OAR. We have seen questions where in cost sheet, some question would have said overheads is 60% of direct wages, 60% or 40%, some number could be given. Then volume based is DLH, machine hours and output produced. In this, volume based methods are preferred over value based method. Volume based methods are preferred over value based method. Why volume is preferred? Because overheads are generally driven by volume. Overheads are generally driven by volume rather than value. So overheads is generally driven by volume. If it's a machine intensive industry, example car manufacturing, you may follow machine hour rate method. Cashew processing, you may follow direct labor hour rate method. Whichever is more important, that could be the basis they are using. In case you want to go more advanced, then go to activity based costing. Budgeted overheads per month. Budgeted direct labor hours per year. First you have to make it consistent. So my budgeted overheads is 18 lakh. Budgeted labor hours is 1 lakh 50,000. OAR is 12 per DLH. OAR is 12 per direct labor hour. Why DLH I've used? I don't have any other data here. I don't have any other information, so I've used DLH. 12 into 15,000 hours is the overheads of the job. 12 into overhead absorption rate is always at the overall company level. Don't calculate for the job. 12 is not only for this job, 12 is for any other job. 12 per DLH 1,80,000. A manufacturing company having a strength of 50 workers, planned for 300 working days of 8 hours each. So ideally my plan was to work for 50 people into 300 into 8. Can you tell me this number? 1 lakh 20. Okay. Based on earlier trend, it's estimated that average absenteeism would be what? 10 days in addition to 20 days annual leave. So it's not going to be 300 days. Sorry, it will be now only 270 days. It will be only 270 days. Why 270? Because 10 days is gone in leave. So 20 days is gone in leave and 10 days absenteeism. 270. Now tell me the number of hours. And OAR is 15,12,000 divided by 1,08,000, which is 14 per DLH. What is the overhead cost allocated to produce 1 unit of product A? Given that OAR for department A is what? Please read it very carefully. 10 per machine hour. And OAR for department B is 15 per labor hour. Overheads is equal to in department A. In department A, how many machine hours for this product? In department A, how many machine hours for this? 10. I'm not interested in this 20 labor hours. I'm not interested in this 20 labor hours because department A recovery is on the basis of what? Machine hours. Department A is recovery is on the basis of machine hours, which is how much they have said? 10 per machine hour. So 10 into 10 machine hours. Department B 15 into 15 labor hours. 15 into 15 labor hours. I am not bothered about the machine hours. I am not bothered about the machine hours there because what is the basis? You multiply with that. What is the basis? That's why lot of times people write OAR is 6 rupees. Nobody can understand what is 6. Is it 6 per labor hour, 6 per machine hour, 6 per unit, 40% of direct material, 50% of direct labor? You will have to write what is that basis. Clear? Any doubts on this? Okay. Let's take an example. It's a very simple example. The budgeted production overhead and other budgeted data of AFIL Limited are as follows. Budget, overhead cost, material cost, labor cost, machine hours, DLH. What should be the absorption rate using different methods? They have not told which method and all. I'll not get into which method and all. They have given me 5 bases. First basis is what? Percentage of direct material cost. So OAR is equal to budgeted overheads by budgeted suitable base. Overheads is 36,000. Suitable basis material cost. Suitable basis material cost. How much is the material cost? Into 100 to X % percentage. 100 and so first OAR can be 112.5 percentage of direct material cost. Company wants to follow it, please follow it. This is the first method. Second, they are saying no, we want to do it on percentage of direct labor cost. Direct labor cost is again 36,000 divided by what now? 40,000. No, direct labor cost 90 percentage. Direct cost means prime cost. Total direct cost is material plus labor. Material plus labor. So 36,000 divided by 72,000. 36,000 divided by 72,000. 50 percentage of prime cost. 50 percentage of prime cost. Per machine hour means 36,000 divided by 10,000. 3.6 per machine hour and 36,000 divided by 18,000 2 per labor hour, which is right. These two are better than the first three. These two are better than the first three. In this two, which is better? Machine intensive, machine hour rate method. Labor intensive, labor hour rate method. That's your wish, which you want to follow. Clear? Any doubts on this? Okay, let's see a question around this. Allergy Limited is into metallic tools manufacturing. It has 4 production departments. The work performed in every department is uniform. Thus, the manager of the company created a policy to recover the overheads by adopting a single blanket rate. What a single blanket rate is? Don't calculate separately for department wise. Department, like for example, when I did this question, I divided for X separately, Y separately, Z separately. Here they are saying single blanket means add up all the overheads together. No need to do primary overhead distribution. No need to do secondary overhead distribution. Add all the overheads together, that is budgeted overheads. Add all the base together, that is suitable base, and get one single rate. No X, no Y, no Z. Only one rate for all the departments put together. Single blanket rate. The relevant data for a month is as follows. Budget, I have 4 departments: operating, assembly, quality control, and packing. I'll add up all the 4 together. All the 4 together. This all the 4 together is budgeted overheads. This all the 4 together is budgeted overheads. And denominator, I don't know what is the basis. Denominator, I'm not sure as of now what is the basis. Whatever basis we decide, we'll add for all the 4 departments. We'll add it for all the 4 departments. Actual is of no use. This will help me in calculating under recovery or over recovery, but this I can get to know only at the end of the year. So I cannot use anything of this for calculating OAR. For calculating OAR, you have 2 types of OAR. One is called blanket OAR, which is for the company as a whole, and second is department wise OAR. Operating separate, assembly separate, quality control separate, packing separate. The detail of one of the job during the month is as under. So they have given data for job number 157, where material cost is given, wages cost is given, overhead cost you have to calculate based on the OAR. Based on the OAR. During quality control phase of this work, the company incurred certain additional expenditure of 495 on direct wages, as there was certain production that was not perfect as the saleable product. Some rejections has happened. The defective units were normal in nature. After rectification has been brought to level of perfection, company adds 25% on the factory cost. 25% on the factory cost, because you see here the word factory overhead. Direct material is given, direct labor is given, factory overhead you use it in OAR, you will get factory cost. On top of this, 25% is to cover what? Admin overheads and profit. Admin overheads and profit. Compute the overhead absorption rate as per the blanket rate. As per the blanket rate based on the percentage of total factory overhead to what? Total factory wages. Total factory overhead to total factory wages. Tell me the total of all the 4 factory overhead. All 4 factory overhead, all 4 wages total. Tell me the total, and divide and tell the percentage. 4 factory overheads total, 4 wages total. That total divided by this, you'll get a percentage. Tell me the percentage. It should be this number. 125 percentage of direct wages. 125 percentage of direct wages. So what I do, I write direct material, direct labor, overhead is whatever is this into 125%. Whatever is this into 125%. This is blanket method, not a perfect method. This is not a good method. This is not a good method. Factory cost I got, added another 25% in selling price. This 25% includes other overheads as well as the profit margin, Clear? Any doubts on this? So the question said single blanket rate, In that, my selling price is 45,000. You change the method, selling price and cost price will change. That is why it's very critical to follow a correct method, because otherwise there will be under recovery or over recovery from the customer. Now they are saying the new manager thinks that machinery is used to varying degree. In different department. Thus, it's not appropriate to follow one blanket rate. For the whole company. He suggests an alternative method. He's asking us suggest an alternative method of absorption of factory overhead and calculate the overhead rate based on the method so suggested. Now I have to tell them what method is possible. First thing is, I will do separately for each of the department. I'm not going to do it together. Operating one separate rate, assembly one separate rate, QC one separate rate, packing one separate rate. I'm not going to do it together. I'm going to do a separate rate for separate department. In that, volume is preferred to value. So I'm left with only these two. Operating has more of machinery. If you see the data here, operating has what? More of machinery. So machinery hours can be the denominator for operating department. Machinery hours. 35,64,000 divided by 792 is how much? 35,64 divided by 792. 4.5 per machine hour. Second department, more of labor. 966 divided by 690. No. 966 divided by 6,90,000. 1.4. Third department also more of labor. And fourth department only labor is given. So instead of following 125%, we are going to follow 4.5, 1.4, 1.4 and 2.5. This is what you did in the first, second, third question which I was doing, and using that, please absorb the factory overhead. And now price is 48,000. Earlier the price is 45,000. This is more accurate. The earlier method is slightly inaccurate because you are doing a blanket rate for the company. Instead of using single rate for the company, it's better to follow what? The individual rate for individual department. In that, volume is always better than value. The value based methods. Clear? Any doubts on this? Calculate under or over recovery. This I'll explain in the next segment, but when you do at home you'll understand it, but this I'll be explaining in the next segment. Just give me a minute. Okay, next segment is under or over absorption, which I'm not starting now. I'll be doing under or over absorption in tomorrow's session only. We are kind of done with half part of the overheads, where what I want you to do, I've done two parts. One is primary overhead distribution and second part is your OAR part. Primary and secondary overhead distribution, you can solve the questions which are there in this material and solve ICI material few questions to just get comfort on workings. It is not getting comfort on concept. Concept is fully done. You have to get comfort on calculation. For that, you have to solve one question. The first question on primary overhead distribution, secondary, all put together will take away 1 hour of yours. It will take away easily 1 hour of yours. So be very clear, because beyond that, when you do your exam preparation, closer to exam, you'll not be able to solve again. So be very clear on the working. So one question on primary overhead distribution, one question on secondary overhead distribution, where you do one time direct distribution, one time step ladder method, one time you do your repeated distribution, one time you do your simultaneous equation, and one time you do your trial and error method. And for OAR, the question which I just discussed, the blanket method versus the other method, just follow this. I don't expect you to solve any extra question here. With this, the half part of the overheads will be over. Balance off starting from, because that's a very important area. I don't want to start at this stage because already tired. So I'll start it in the next session so that it is, you are also able to absorb it better. I'll start exactly at 8 o'clock. Today I waited for 10 minutes. I normally start my class on time. So please be on time at 8. I'll start at 8 so that you don't miss out on that segment, because the two major segments are pending. One is your under or over recovery, and the second segment is machine hour rate. These two are very critical. So I started at the beginning and then we move to labor chapter. Clear? I'll end with this then. Sorry? Any doubt? Good morning, friends. Okay, let's continue with our discussion. In the previous session, we were doing overheads chapter, where we learned how primary overhead distribution is done, then a secondary overhead distribution. Then we learned something called as OAR computation, where we have volume based methods and value based methods. In value, you had your material cost, labor cost, prime cost. In volume, it was machine hours, labor hours, and output produced. Have you practiced few questions from this area? Done? Okay. Now, I'll quickly first close out all the concepts which are there. Now, the denominator which we use, the formula says budgeted overheads by budgeted suitable base. The base can be machine hours, labor hours, material cost, any of them it can be. Now, in this also, for example, if you decide DLH is the base, in the DLH, guys, please listen. In the DLH, I have 4 types of DLH. One is called maximum DLH, practical DLH, normal DLH, actual DLH. The denominator can be maximum capacity, practical capacity, normal capacity, actual capacity. This has not come in exam, but there is some discussion in your ICI SM on this. What is maximum capacities? Assuming that the factory works for all 365 days a year, no breakdowns, no holiday, no maintenance, nothing is done by the organization. The factory works for all 365 days. If it's one shift 8 hours a day, two shift 16 hours a day, three shift 24 hours a day. So when somebody wants to calculate maximum DLH, the calculation is 365 days into number of hours into number of workers. That's called maximum capacity, which we will not be using in the denominator. In the denominator, I will not use the maximum capacity because that is overestimating the requirement. Practical capacity basically means the number of hours. The practical capacity is number of hours. It's if DLH is the base, it's number of hours. If machine is the base, labor hours, machine hours is the base, number of machine hours, whatever is the base. Practical capacity will consider all this: holiday, Sundays, maintenance, idle time, everything will be considered in the calculation. So they will consider all this in the computation. Then comes the normal capacity. This is what we use as denominator. The denominator which we use is called normal capacity. What is normal capacities? What are we planning to achieve? What are we planning to achieve? Capacity based on expected sales. Best is always this, but this you will know only at the end of the year. So you cannot use actual capacity. So for example, my denominator is units. In units, I can have maximum units, practical units, normal units, actual units. Maximum, not a good denominator to be used because it will lead to under or over recovery. Practical, good one, but I don't want to achieve it. What I want to achieve is called normal capacity. Actual is something I'll get to know only at the end of the year. So practically 4 different forms of capacities there. Now comes the most important element, treatment of under or over absorption. Now let's understand this first. At the beginning of the year, I said OAR is equal to budgeted overheads by budgeted direct labor hours. I decided the base to be direct labor hours. You can decide anything to be the base. The calculation was 10 lakh divided by 1 lakh. 10 is the OAR we decided at the beginning of the year. At the end of the year, the actual, this is 12 lakh and denominator was 80,000. 15 rupees. I planned for 10 rupees recovery. In reality, it turned out to be 15 rupees. 5 rupees will be under recovery for me. Around 5 rupees is the under recovery for me. You'll understand the calculation as I proceed. But 10 rupees is what I had planned to recover per direct labor hour. At the end of the year, the numerator can change. Denominator can also change. If either of them changes, it can lead to problem. So what do I recover? Overhead absorbed is 10 rupees. I decided 10 rupees to be the recovery and this was 10 per DLH. 10 per DLH. So my recovery is 10 into 80,000. My recovery is 10 into 80,000. I've recovered 8 lakh. Whereas I've incurred 12 lakh, which means there is an under recovery of 4 lakh rupees. There's an under recovery of 4 lakh rupees. Now, what questions will do is in this 12 lakh, there can be certain abnormal items which are there. For example, some penalty could be there or some ineffective planning could be there. In case 12 lakh itself has some abnormal item, we first remove them. So, let's assume this 12 lakh is wrong. This 12 lakh includes one penalty of 1 lakh. So, the amount incurred is only, this is called adjusted overheads incurred. This is called adjusted overheads incurred is 11 lakh. Against that 11 lakh, I have absorbed only 8 lakh. So 3 lakh is my loss and 1 lakh is my abnormal loss. 1 lakh is my abnormal. Now in this 3 lakh, there can be two reasons. Normal reasons, abnormal reasons. It can be under recovery, it can be over recovery. Be it under recovery or over recovery, it could be because of normal reasons or abnormal reason. Abnormal reason, go and debit to P&L account. P&L account debit to overheads control account. P&L account debit to overheads control account. Go ahead and take it to your debit side of P&L. Debit side of P&L. If it's an under absorption, over absorption means it's profit. It will go to credit side of P&L. Normal reason, let's assume, is 1 lakh and abnormal reason is 2 lakh. So this is my loss. In this, that 1 lakh penalty was there, that is also my loss. So 3 lakh is already my loss. Normal reasons, we do something called as supplementary recovery rate. We do something called as supplementary recovery rate. What is supplementary recovery rate is, I'm going to tell my customer, please pay me extra. Please pay me extra. Reason for paying extra is my overheads cost have gone up because of normal reason. Normal reason means everyone's cost would have gone up, not only mine, everyone in the industry, all people cost would have gone up. So I am going and telling them, can you please give me something now. So for this, what we do is 1 lakh divided by units produced including work in progress. Even work in progress we consider something called as equivalent units in work in progress. The concept of equivalent units you would have learnt in process costing. If I am doing it, I'll explain there again. So 1 lakh divided by 50,000, 2 rupee per unit. I'll go and tell every customer that give me 2 rupees extra. Give me 2 rupees extra. Now there is a problem. In this 50,000, FG is 40,000. WIP is 10,000. In this FG, I have sold. I have unsold. I have sold and unsold. Sold is 30,000. Unsold is 10,000. I have totally 50,000 units. FG is 40,000. Everything is there in the book. Just understand the concept. FG is 40,000. WIP is 10,000. FG 40,000. You have already sold 30,000. If I have already sold something, I cannot go back to the customer and tell him that please pay me 2 rupees extra. If you have purchased something from a shop and now the shopkeeper calls you and says, give me extra 2 rupees, nobody is going to give that money. So this is also my loss. This also is my loss. That is 30,000 units into 2 rupees. Into 2 rupees is my loss. 10,000 into 2 is unsold. This I will recover it in the next year. In the next year, whoever customer is buying, he has to pay me extra 2 rupees because you are yet to sell this product. And this WIP, 10,000, it will become FG, and again I will tell you to pay extra. Again I will tell you to pay extra. So for this, the entry is cost of goods sold account debit 30,000 into 2. This is already sold, debited to cost, my loss. FG control account debit 10,000 into 2. This is not my loss. I'm increasing the FG value. I'm increasing the FG value. Moment you debit your FG control account, FG value will go up. WIP control account debit 10,000 into 2, and finally 2 overhead control, again 1 lakh. This 1 lakh is my normal under recovery. Ideally, I want my customers to pay for it. I go to the customer and tell them, please pay me extra 2 rupees. He's saying, you already sold the product. Why will I pay you extra? So whatever is sold is my loss. Nothing can be done. Unsold, the unsold portion, I will recover it in the next year. This is what the concept is saying. Overhead under absorbed or over absorbed is overhead incurred minus overhead absorbed. That is what you are incurring and subtract what you are absorbing. If it is very small under absorption, please take it to costing P&L. It's an insignificant amount. Let's not discuss much about it. If it's abnormal reason, again I transfer it to costing P&L. If it's normal reason, I do supplementary recovery rate, which is amount divided by units produced including WIP, and this amount sold portion will go to COGS or cost of sales account, any account you can write. Unsold FG will go to FG control account. Unsold WIP will go to WIP control account to overhead control. The entry will be exact opposite if it's over absorption. If it's over absorption, you are going to write exact opposite entry. That is, instead of debiting P&L, you will credit P&L. What are my losses? Whatever goes to costing P&L is my loss. Whatever goes to cost of sales account is my loss. And if any abnormal item, I remove it originally. That is also my loss. Clear? Any doubts on this? Any doubts on the concept? This is frequently tested in exam. The under absorption entries are this. Over absorption is exact opposite of this. Lot of good examples are there. And the last segment of the chapter is on something called as machine hour rate method. Now, this is done separately by ICI as well as practically also. This is very important because this is the most commonly used method of absorbing overheads. Now, the formula is very simple. Budgeted overheads by budgeted machine hours. In overheads, you consider all expenses of operating the machine. Even sometimes we include wages also. That's called comprehensive machine hour rate. That's called comprehensive machine hour rate. For example, if I'm using this laptop for 1 hour, what is the cost of using the laptop for 1 hour? There is some power cost I have to incur. On top of it, some internet cost I have to incur, and one person is working on it. His wages or his salary you have to incur. So what is the cost? Or if I take printer as an example, if the printer is running for 1 hour in a Xerox shop, in that Xerox machine, for running 1 hour printer, you have to pay something to the worker, something on the paper cost, something you have to incur for electricity, something on the cartridge, something on the ink. All this cost you have to incur. What is the cost incurred to run 1 hour of printer? 1 hour of printer, you are incurring 500 rupees. In this 500 rupees, you will be able to print 1500 copies. So the cost of one copy is 500 divided by 1500. That's how the final calculation can be done by an organization. So budgeted expenses of operating the machine, all expenses whichever is related to the machine, divided by effective machine hours. There is going to be a lot of lengthy calculation on this. I'll explain when I do a question. But effective machine hours is nothing. Budgeted expenses include all expenses such as depreciation, insurance, maintenance, labor cost, consumables. The important word is labor cost is also part of the expenses. Everything is included in the calculation. And effective machine hours is total machine hours subtract normal loss. We had something called as effective good units when we did material. Effective good units is total units minus normal loss. Normal loss can be subtracted. Abnormal loss should not be subtracted. Now, this is called single machine hour rate method. ICI also has something called as multiple machine hour rate method. What is multiple machine hour rate method is, if I take a Xerox machine, the machine will do black and white as well as color Xerox. Now, when you go to a shop, black and white, he may say 1 rupee per copy. Color, he will say 5 rupees or 6 rupees per copy. It's the same machine, but it is doing two different tasks. It is doing black and white printing as well as color printing. So in this scenario, how are we going to do the calculation is what you will understand in multiple machine hour rate method. In multiple machine hour rate method, I will do calculation for black and white separately, color separately, add up all the black and white cost, add up all the color cost, and calculate separate machine hour rate for black and white printing and separate machine hour rate for color printing. ICA may ask a separate machine hour rate for running the machine and a separate machine hour rate for maintenance of the machine. A machine does three tasks. Okay, this is also very important. A machine can be under operation, setup, maintenance. These are the three tasks a machine does. Operating forms part of the denominator. Operating forms part of the denominator, and you incur electricity cost for operating the machine. Maintenance does not form part of the denominator. That is when I ask what is effective machine hours, please don't add the maintenance hours, and no power cost. No power cost. Setting up is assumption based. Setting up is assumption based. You can say it is productive, forms part of denominator. You can say non-productive, does not form part of denominator. Does not form part of denominator. Running time considered as productive, forms part of machine hours. Power cost is incurred. Power cost is incurred. Maintenance non-productive, does not form part of machine hours. Power cost is not incurred. Power cost is not incurred. May be productive, may be unproductive. If it's productive, power cost is incurred, and if it's non-productive, power cost is not incurred, because one of the major expense will calculate is power cost. How you calculate power cost is number of units of electricity into rate into number of hours. That number of hours is only productive hours. Productive hours. This rule will work if problem is silent. Some specific question ICI may say power cost is also incurred for maintenance. If they say, please follow whatever the question is saying. If problem is silent, running is productive, incur power cost. Maintenance is non-productive, do not incur power cost. Setting up is may be productive, incur power cost. May be non-productive, do not incur power cost. This is the rule. This is the rule. Multiple machine hour rate is the last concept which I have said. A machine can perform multiple operations for different, and the MHR for different operations can be different. Black and white printing, color printing, running of machine, setting up of machine, maintenance of machine, packing activity, assembling activity. How you solve this, you will understand when I do a problem. In there, I'll explain how we are going to do this calculation. But the concept is very simple. I'll not be calculating one machine hour rate. I'll be calculating 2, 3, 4, 5, 6, depending on whatever is the requirement of the question. Let's see the balance questions which are there. Let's come to question 6. This is on under or over absorption. Question 6. During half year ending interdepartmental review meeting of P Limited, cost variance report was discussed and the performance of the departments were assessed. Following figures were presented. For a period of 6 months, the following data were extracted from the books. This is on under or over recovery. Actual production overheads incurred is 34 lakh 8,000, inclusive of the following amount. This is inclusive of the following amount. Paid as per court order. Paid as per court order. This is an abnormal item. Paid as per court order is an abnormal item because it's like a penalty. I'll remove it from 34 lakh 8,000. I'll remove this from 34 lakh 8,000. Expenses of previous year. Expenses of previous year booked in current year. Expenses of previous year booked in current year, that is also abnormal. That is also abnormal because last year expense we have taken it in the current year. Paid to worker for strike. Paid to worker for strike. Strike is also not a normal activity. It is abnormal. Obsolete stores written off. Obsolete stores written off. Obsolete item is also abnormal in nature. I have to remove all the four. I'll have to remove all the four. As I said, whatever amount we are incurring, we have to remove what? The abnormal items. We have to remove the abnormal item. Can you remove all the four and tell me how much it is? Sorry? 24? So once I remove this 74, or just check, it is 6. Just check the totals. 2 should be the last number. 24 lakh? Okay, 24 lakh 2000. Okay. So 24 lakh 2000 is the number after removing all my abnormal item. All my abnormal item is removed. This is called adjusted overhead incurred. This is called adjusted overhead incurred. Production, finished goods 1 lakh 10,000. WIP, what it says? So WIP is 40,000 units. WIP is 40,000 units. So we have produced 1 lakh 50,000 units. This will give me supplementary recovery rate. This will give me supplementary recovery rate. In this 1 lakh 90,000 is sold. This is my loss. 20,000 FG unsold. 20,000 FG unsold. 40,000 WIP obviously unsold. Machine work during the period was, what is the use of this 3,000? This will tell me how much overheads have been absorbed. How much overheads have been absorbed. But this 3,000 alone doesn't help me. With this 3,000, I need the OAR. I need the OAR. At the preparation of the budget, it was estimated that 50 lakh 40,000 would be required for budgeted machine hours of 6,000 as production overheads for the entire year. So machine hours is 6,000 for the full year. For the full year. 50 lakh 40,000 is also for the full year. This calculation we are doing it for a half year. Only thing is when you do OAR calculation, budgeted overheads, budgeted suitable base should be the same time period. That is, both should be for a year, both should be for a half year. Once the OAR is calculated, you can use that OAR for a single month, single day, single unit, 1 year, half year, 2 years, whatever you can use. So tell the OAR will be 50 lakh 40,000 divided by 6,000. OAR is 50 lakh 40,000 divided by 6,000. How much is? 840. During the meeting, data analytic revealed that 40% of the over or under absorption was due to defective production policy. Defective production policy is an abnormal item. Defective production policy is an abnormal item, and the balance is attributable to what? Increase in cost. Increase in cost will not impact only me. It is going to impact everyone in the market. If everyone gets impacted, it's technically called as a normal item. That's technically called as a normal item. Lot of requirements have been asked in the question. Let's not worry about the requirement. I'll come to the requirements later. What I am going to do is, I'm going to solve it like a problem, descriptive problem. In case they don't ask these questions, we will write journal entry and other things. Let's write it now. Overheads incurred. Overheads incurred equal to 34 lakh 8,000. Overheads incurred equal to 34 lakh 8,000. Incurred 34 lakh 8,000. Adjusted overheads incurred. Adjusted overheads incurred. Adjusted overheads incurred. Adjusted is removing all the abnormal item. From 34 lakh 8,000, I'll be subtracting 450. You can write minus 450, minus 1 lakh, minus 420, minus 36. All are abnormal item. Minus 4 lakh 50, minus 1 lakh, minus 4 lakh 20, minus 36,000. All are abnormal item. 4 lakh 50, 1 lakh, 4 lakh 20 and 36,000. You will have to remove all these abnormal item. So once I remove my abnormal item, I'll be left with minus abnormal item. How much is the amount we are left with? 34 lakh. Sorry, 24 lakh 2000. I'm left with 24 lakh 2000. This is one part of the calculation. Second part is OAR is equal to budgeted overheads by budgeted suitable base. Budgeted overheads by budgeted suitable base. They have given the budgeted overheads for a year, suitable base also for a year. I'm not bothered about it. They can give for a year, they can give for a half year. So 50 lakh 40,000 divided by 6,000 machine hours, 840 per mh, 840 per mh. Every machine hours we are going to recover 840 rupees. Every machine hours we are going to recover 840 rupees. And overhead absorbed 840 into, the question said machine hours work during the period is 3000. During the period is 3000. So 840 into 3000 is 25 lakh 20,000. What we have incurred is 24 lakh 2,000, and what we have absorbed is 25 lakh 20,000. Incurred is 24 lakh 2,000, absorbed is 25 lakh 20,000. This will give me over absorption 1 lakh, over absorption 1 lakh 18,000, over absorption 1 lakh 18,000. There is a over recovery which is happening in this question. I have recovered more than what has been incurred by the organization. We have ended up recovering more than what has been incurred by the organization. Now this over absorption, two reasons: normal reason, abnormal reason. Normal reason and abnormal reason. Abnormal reason is defective planning. Abnormal reason is defective planning. 40%. How much is this 40%? 47. This will go to costing P&L. This will go to costing P&L, income for us. This is a income for us because it is a over absorption. It's over absorption income. Entry is FOH control account debit 47,200 to costing P&L account credit. I'm crediting P&L because it's an income. Crediting P&L because it is a income. FOH control or overhead control account debit to costing P&L account. This is an income for us. This will improve my profits. My profits will go up by 47,200 rupees. 47,200 rupees is my income. This side 60%. What's the 60% amount? 70,800. I'll be using supplementary recovery rate, and this is a negative. What is negative is basically I'll be giving back to my customer. Whatever is sold, nothing matters. Next year when I sell, I will fix a lower price. I'll fix a lower price. Supplementary recovery rate is 17,800. Units produced including WIP. Units produced including WIP 1,10,000 FG, 40,000 WIP. What is 40,000 WIP is 80,000 into 50%. 80,000. See, question has said production finished goods. Some question will say closing stock 10,000, WIP 40,000, sales 90,000. So 10 plus 90 is production. 10 plus 90 is production. If they give closing stock and production separately instead of giving the production, they may say closing stock and sales. Closing stock and sales. What is the rate you get if you divide? 472 per unit. This is not per machine hour. I should basically call my customers and tell I want to return 47 paise, which I am not going to do. I am not going to return to the people whom I have already sold the product, but technically I should call them and say I want to return 47 paise. I want to return 47 paise. So the entry is overhead control account debit 7,800. Overhead control account debit 7,800. This is over absorbed and this will be passed on to one COGS or COS account, 90,000 units into 0.472. This is my profit. I'm not going to return it to customer. 90,000 units, 90,000 units into 0.472. This money will not be given back to customer. This money will not be given back to customer, and it is going to reduce my COGS. Because when you credit cost, COGS goes down, profit automatically goes up. And balance to FG 20,000 into 0.472. What is 20,000 is 1 lakh 10 produced, 90,000 sold. 1 lakh 10 produced, 90,000 sold. Gap is 20,000. Gap is 20,000. So 2FG is 20,000 into 0.472. 20,000 units into 0.472, and 2 WIP is 40,000 units into 0.472. This will reduce my FG, reduce my WIP, reduce my COGS. Reduce FG, reduce WIP, and reduce COGS. Clear? Any doubts on this? So whatever you are crediting to COGS, it's your profit. Whatever you credited to costing P&L is your profit, and all the abnormal items are your loss. All the abnormal items are your loss, because we have to remove all those abnormal items. Those are technically not under recovery loss, but that is a loss which the organization is suffering. Any doubts on this? Any doubts on this? Now let's look at the requirement. What was the budgeted machine hour rate? What is the OAR you got? 840. How much production overhead has been absorbed up to the end of half year period? Overhead absorbed is how much? 25 lakh 20,000. Under absorbed or over absorbed? How much? What is the supplementary recovery rate for under or over absorbed? How much has been written against work in progress? 18,880. This is what the question is all about. 18,880. This is a very frequently tested question. Your under or over recovery. This was a over recovery sum. Opposite is an under recovery sum. Any doubts on this? Okay, let's come to this. A manufacturing company having strength of 50 workers planned for, I think this example I had done it in the MCQ, I had discussed it, planned for 300 working days of 8 hours each. Based on the earlier trend, it's estimated that absenteeism would be 10 in addition to eligibility of 20 days annual leave. The budgeted overheads amount to 15 lakh 12,000. This data will give me OAR. This data will give me the overhead absorption rate. They have not given the hours directly. You'll have to do some calculation. During the year, factory worked for 2 extra days, which means factory has worked for 302 days. Factory has worked for 2 extra days. Actual absenteeism is only 8 days. I had planned for an absenteeism of 10 days. The actual absenteeism is only 8 days. Out of 50 workers, 20 people took leave of 20 days. Remaining took leave of 15 days. 450 hours were lost due to machine breakdown. Overtime during the year was 650. Actual overheads is 1592 600. Now in this question, we have to first find out OAR. For OAR, my formula is budgeted overheads by budgeted suitable base. When we did in the previous question, this 6,000 was given directly. Now you need to spend time and get it. Then you have to find overhead absorbed. For overhead absorbed, this 3,000 was given directly. Now you have to analyze this entire data, 2 extra days working, absenteeism, leave, breakdown, all that you have to consider and calculate how many hours did the machine actually work. How many hours did the machine actually work? Once you find that hours into the OAR is absorbed, and the gap between 1590 to 600 and absorbed is under recovery or over recovery. After that, they have not asked for the treatment. The treatment is not asked, but calculating the hours is going to be the tricky part. Calculating the hours is going to be the tricky part. Let's do first. OAR is equal to, right? OAR is equal to budgeted overheads by budgeted direct labor hours. Budgeted overheads by budgeted direct labor hours budgeted direct labor hours. My overhead figure is 15 lakh 12,000. Overhead figure is 15 lakh 12,000. And how many hours we are going to work? 50 people into 300 minus 10 minus 20 into 300 minus 10 minus 20, because in the 300 hours they are saying what, 10 days is your absenteeism, 20 days is annual leave, into 8 hours each, into 8 hours each. So denominator is, numerator is 15 lakh 12,000, denominator is 50 people into 300 minus 30 into 8. 300 minus 30, minus 30 is 10 and 20, 1 lakh 8,000. Tell me the OAR. 14 per DLH, 14 per DLH, direct labor hours. Now previous question 840 was very simple calculation. This question some computation was to be done and we got a number of 14. It doesn't end here. Now this 14 has to be multiplied with some number of hours, which earlier plan was some 1 lakh number you told me, but in reality I don't know how much it is going to be, because during the year factory worked for 2 extra days. Actual absenteeism is 8 days. So factory has effectively worked for 294 days. Factory has effectively worked for 294 days. In this 294, I'm losing time because of leave, because of breakdown, and on top of that I do extra overtime. I have to calculate how many hours did the factory actually ended up working. That into 14 is overhead absorbed. That you compare with 1592. That you compare with 1592. It will give you under recovery or over recovery. Next, computation of hours worked. Computation of hours worked. Hours worked. Particulars calculation amount. Possible hours. Possible hours. 294 days. What is 294 days? Is 300 extra 2 days of working by the company and 8 days of absenteeism. 8 days of absenteeism. 294 days into 8 hours into 50 workers. This is what ideally my factory should have worked for. 1,17,600 hours my factory should work for. 294 days into 8 hours into 50 workers. I wanted my factory to work for 117,600 hours. Then I get a surprise saying that less machine breakdown. If machine has broken down, that time obviously factory cannot work. Machine breakdown. I'm losing 450 hours due to breakdown. I'm losing 450 hours due to machine breakdown. So minus 450, minus 450, less machine breakdown, 450 hours lost due to what? Machine breakdown. Then add overtime. Add overtime. Overtime means machine is working more. Machine is working more. Overtime is around 650 hours. So machine breakdown, I'm losing time. Overtime, I'm gaining the time. Overtime, I'm gaining back the time. So there is a loss because of breakdown. There's an increase because of overtime, and then less hours lost due to leave. People are taking leave now. I'm also going to lose time because of that. This leave we had earlier subtracted when we did the original calculation also. But now the problem is, I said 20 days annual leave. I get to know 20 workers took 20 days leave. Balance 30 workers took 15 days leave. 20 workers took 20 days leave and the remaining took only 15 days leave. So 20 workers into 20 days into 8 hours. This is one loss for me. 20 workers into 20 days into 8 hours is one loss, plus 30 workers into 15 days into 8 hours. Two losses I'm having. 20 workers, 20 days, 8 hours. 30 workers, 15 days and 8 hours. What's the number you get? 6,000 800 and hours worked. This is the actual hours worked. 1,11,000. Hours worked is 1,11,000. I have a loss due to breakdown. I have a loss due to leave, and I have an increase due to overtime. All put together after calculation, 1,11,000 is left. 1,11,000 is left. Now overhead absorbed is 1,11,000 hours into 14 rupees, the rate we had decided. We had decided 14 rupees to be the recovery rate. Earlier question that 6,000 and 3,000 was given directly. This question, these two numbers are little bit of a calculation for us. 1,11,000 into 14. And against this, I have incurred 1592, which means there is an under recovery. There is a under recovery. I have incurred 1592. I have absorbed 1554. I have absorbed 1554. This indicates that there is an under recovery. There is a under recovery. Under recovery of 38,600. There's an under recovery of 38,600. Clear? Any doubts on this? Now I'll be moving to the next part, which is your machine hour rate calculation. In this example, we have an under recovery of 38,600. I can extend the question further. I can give the data saying that 40% is due to normal reason, 60% is due to abnormal reason. Company has produced 5,000 units. Company has sold 4,000 units. WIP is equivalent 2,000 units. Calculate supplementary recovery rate, treatment of under over absorption. All that can be the extra add-ons which the question can ask you to do, and can also ask you the impact on P&L. Clear? Any doubts on this? Next comes the machine hour rate. This is a very good question, a comprehensive problem. I'll first read out the question. You are given the following information of 3 machine, which means I have to do calculation for 3 separate machine. I have to do calculation for 3 separate machine. Depreciation, spare parts, power, consumable stores, insurance, indirect labor, building maintenance, interest, rent and rates, foreman, attendant. Foreman and attendant control all the 3 machines and spend equal time on them. Following additional data is given. DLH, KW rating, KW is kilowatt rating, floor space. There are 14 holidays besides Sundays in the year, of which 2 were on Saturdays. Manufacturing department works 8 hours in a day. Saturday are half days. All machines work at 85% capacity. 2% is reasonable for breakdown. I'll explain this in some time. Calculate predetermined machine hour rate. Predetermined is OAR. Calculate OAR after taking following factor. Increase of 15% in the price of spare part. Increase of 25% in the consumption of spare parts for B and C. 20% increase in wage rate. 10% decrease in consumption of consumable store. In the consumption of consumable stores. Now what is OAR? I had told you is budgeted overheads of machine divided by budgeted machine hours or effective machine hours. To calculate machine hours, I'll have to use this para. I'll use that later. I'll use that para. How will I calculate budgeted overheads? I will add up all these numbers and items like this using primary overhead distribution technique. Using primary overhead distribution technique, you will have to split it. You will have to split it. So some items they have given, like depreciation, I'll copy paste. Spare parts, I cannot copy paste because some increase decrease question has mentioned. Some increase and decrease the question has mentioned. So I'll give effect to that increase or decrease. Power, I'll copy paste. Power I will distribute. Consumable stores, some change they have given. Insurance, like this we will do. What I am going to do and what you are going to do is particulars and machine A. Only machine A calculation we will do. Machine B and C has to be distributed in the same manner. So we will just focus on machine A calculation so that you understand the concept fully. Just give me a minute. No, not A, we will do machine B. Machine B, because the machine B has a increase in consumption and all. So I will be doing machine B calculation. You are going to do machine B calculation along with me. First, we will do primary overhead distribution technique in order to distribute some of the item. After that is done, using this below data, you'll have to calculate effective machine hours. Whatever cost you got divided by the effective machine hours will give you the OAR for machine B. Same way OAR for machine A or OAR for machine C. Let's start. Working note 1. Computation of overheads of machine B. Computation of overheads of machine B. Particulars, calculation amount. Calculation and amount. I have various items starting from depreciation. We are going to do calculation. You will have to decide you want to do it for a year, month and all. We normally do it for a year unless the problem is differently saying. So I'll do calculation for a year. Anyway, preliminary expenses per annum. Per annum. Depreciation, no extra data is there. I'll copy paste. Spare parts, extra data is there. I'll have to give effect to that. No extra information, copy paste. Extra information is there. Give effect to that. First is depreciation. Given depreciation given 7,500. We are doing machine B calculation. We are doing machine B calculation. Depreciation is given. Spare parts. Spare parts. It says 4,000. It says 4,000. Now listen. It says there's an increase of 15% in the price of spare parts. So 4,000 plus 15% is 4,600. First you have to give effect to the price change. Then they're saying increase of 25%. Increase of 25% in the consumption of spare parts for machine B and C only. First give effect to price change. Then on 4,600. On 4,600 you have to give effect to plus 25%. Some students in a hurry did 4,000 plus 15% plus 25% on the original 4,000, which is wrong. You cannot do it on original 4,000. Why you cannot do on original 4,000? Because the price increase is applicable even for that extra consumption which is happening. Even for the extra consumption which is going to happen in the current year, there is a price effect. So 4,000 plus 15% is 4,600. Then plus 25%. Then plus 25%. Or 4,000 plus 25%, get 5,000 and then add 15%. You can give price effect and then quantity, or quantity and then price. But both cannot be on original 4,000. Both cannot be on original 4,000. This is how practically price and quantity change will happen. So 4,000, I will add 15%. I write that amount in the calculator and then add 25% on that. So it's like this: 4,000 plus 15% close bracket and plus 25%. 4,000 plus 15% close the brackets plus 25%. What's the number you get? 5,750. If you add 15 and 25 on 4,000, then you will get 5,600. Then you will get 5,600. A small difference, but it will lead to wrong solution. So you will have to give effect to, or you could have done 4,000 plus 25%. You would have got 5,000. Add 15% on 5,000. Add 15% on 5,000. But you have to give effect to price as well as quantity change. First price, second quantity, or first quantity, second price. Both cannot be on 4,000. Both cannot be on 4,000. Third item, power. Now power is 40,000. Tell me what can be the basis from here. Kilowatt rating, ratio of kilowatt rating. They have not given HP. If they had given HP, I would have multiplied with machine hours. They have given ratio of KW rating. KW rating is kilowatt rating. Ratio of kilowatt rating. So the number is 40,000. You'll have to split in the ratio of 3 to 3. That is 3 plus 2 plus 3 is 8. 40,000 divided by 8. 40,000 divided by 8 into 2. 40,000 divided by 8 into 2. Only machine B we are doing. Next item, consumables. Consumables 3000, and the question has said there is going to be a 10% decrease in the consumption. 10% decrease in the consumption. So 3000 minus 10%, 2700. Insurance 8000 rupees. Tell me what can be the basis of distributing this? No. Insurance, it's a very good basis which they have used. What can be the basis? Depreciation, because depreciation is a proxy for value. Depreciation is a proxy for value, and depreciation is already distributed and given. Depreciation is already distributed and given to us. That's why as you practice more question, you will get a lot of clarity on what basis can be used, because I would have never told in my theory that insurance basis can be depreciation, because depreciation itself we have to distribute. So for depreciation, the basis is book value of machine. If depreciation is already divided and given to you, which means the book value will be in this ratio. Book value will be in this ratio. 8000 divided by 20,000. 8000 divided by 20,000 into 7,500. 8000 divided by 20,000 into 7,500. How much? 3,000. 3,000. Insurances on basis depreciation basis. Insurances depreciation is the basis which we are using, and this was KW rating. Clear? Next is indirect labor 20,000. Question has said 20% increase in wage rate. 20% increase in wage rate. So I'll increase the labor cost from 20,000 to 24,000. Tell me, how should I distribute this? Indirect labor, how can we distribute? On the basis of DLH, on the basis of direct labor hours. Indirect labor 24,000 on DLH. 24,000. Total of DLH is 5 lakh. 1 lakh plus 150 plus 150. 24,000 divided by 5 lakh into 1 lakh 50. 7,000. 7,200. Clear? Next item is building maintenance. This is very simple. Building maintenance, what can be the basis? Floor space. 20,000 divided by 1 lakh into 40,000. Floor space. We're doing only machine B. You can do A, B and C. That doesn't really matter. What's the number? How much? 8,000. Next is interest on capital outlay. Interest on capital is already given in the question. Annual interest on capital, how much? Machine B is how much? Annual interest on capital. What should I do with this? This is to be ignored, because the word used is interest on capital. In cost sheet chapter, you learnt that interest on long-term funds or equity funds is ignored. Capital means long-term fund. Capital means long-term fund. Non-long-term interest alone we consider, or the question specifically saying marginal costing and all, will add interest in the calculation, because they'll say calculate what sales to achieve this profit and all. There and all we were considering, but here it's very clear. It is interest on what? Capital outlay. Interest on capital outlay. Capital means long-term money. Capital means long-term money. So this is 0. This is 0, to be ignored. To be ignored. Next is rent and rates. On what basis should I distribute? Floor space. Distribute and tell me. Rent and rates, floor space. Wrong. Distribute and tell me. Wrong. Sorry? 4,000 is wrong. 48,000. Please read question. This is how ICI plays with you. They gave per annum, and suddenly here they are saying monthly. Suddenly they are saying monthly charge for rent and rates. So rent and rates is not 10,000, it's 1,20,000. 4,000 is per month. I want 48,000 to be written. I'll have to write 48,000 rent and rates monthly charge. They have used the word monthly charge. Why they did and all you cannot question, but they have purposefully played around it, because in the top they said preliminary expenses per annum, and here they have said monthly charges for rent and rates. So it is going to be 48,000. Same way with foreman per month, attendant per month, and foreman and attendant spend equal time. Equal time means 1 by 3, 1 by 3, 1 by 3. I'll have to split in the ratio of 1 by 3, 1 by 3 and 1 by 3. Here also what is the word used? Per month. So you have to do into 12. Listen, the word used is salary. ICI has assumed that wage means only for labor they'll increase, salary they are not increasing. Salary they are not increasing that 20%. Can I take an alternate assumption? Possible, but this is the word salary means they are not giving effect to increase in wage rate. Increase in wage rate. So this is how your answer would have looked: 7,500, 5,750, 10,000, 2,739,8, 48, 80, 20, and all put together 193, 950. All put together. Let's not worry about the total and all. This is one part of the calculation. You have to do machine A, machine B, and machine C, in which I have done only machine B just to explain the concept. Clear? Any doubts on this? This is first part of the computation where we have spent time on calculating what is the overheads relating to the machine. No need to copy and all. Don't end up copying and all. Just understand the calculation. I wanted you to make certain mistakes like rent and rates. That is why I told you to do it along with me. Clear? Second part is I'll have to divide this by machine hours. Now for dividing this by machine hours, I have to take into consideration this data which is given here. Let's read it carefully. It's a very important. 14 holidays besides Sundays in the year, out of which 2 were on Saturday. Manufacturing department works for 8 hours in a day, and Saturday are half days. Saturday are half days. Can you tell me in 1 week how many hours does the factory work in 1 week? 1 week, how many hours operation? 44. Monday to Friday 8 hours, Saturday 4 hours, Sunday is holiday. Now 1 year consists of 52 weeks and extra 1 day. That is what I say it as 52 weeks and extra 1 day. What is that extra 1 day? Is 365th day. If you calculate the number of days, 365th day is that extra day. That extra day we normally assume is a weekday. We normally assume is a weekday. So you need not write this. Understand the calculation. You will keep spending time on. Then number of weeks, 52 weeks and 1 day. 52 weeks and 1 day. Hours per week. Hours per week is 5 into 8 plus 1 into 4, 44. 44. Possible working hours. Possible working hours is 52 weeks into 44. 52 weeks into 44 plus 1 day into 8. 1 day into 8. Assumption is that extra day is falling between Monday to Friday. Can I ignore 1 day? Maybe you can ignore, but I've seen ICA consistently writing that extra 1 day. So 52 into 44, 1 into 8. This will be my working hours provided I don't have any loss. Now I'll come to the losses part. 2 to 96 hours one machinery can work in case no breakdown, no maintenance, no holidays, nothing is there. 2 to 96 you can operate. Now comes the requirement. 14 holidays besides Sundays in the year. That Monday to Friday and Saturday you wrote, in that there are 14 holidays. So 14 holidays means machine is not going to work. This 14 holidays, 2 are on Saturday. What is the use of this information? Out of the 14 holiday, 12 holidays you lose 8 hours, and 2 holiday you lose only 4 hours. 2 holidays you lose only 4 hours. If they don't mention Saturday, we assume it is between Monday to Friday. So out of this 2 to 96, less hours lost due to holidays is 12 into 8. 12 into 8 plus 2 into 4. 2 into 4, I have lost 1 not, sorry, 104 hours I have lost due to holiday. 104 hours I've lost due to holiday. Manufacturing department works for 8 days. All machines work at what? 85% capacity. So whatever you have calculated is 100% working. Whatever you have calculated is 100% working. Company is saying, no, we will not do 100%. We'll do only 85%. In that 85%, 2% is breakdown. In that 85%, 2% is breakdown. So listen, possible revised hours. 2192 is possible. 2192 is possible. Planned utilization. I'm planning for 2192 into 85%. I want the machinery to work only to the extent of 85%. Balance 15% could be some maintenance, idle time, something could be there. In this 1863.20, I will have normal breakdown, which is 2%. I'll have a breakdown of, and this is called effective machine hours. This is for machine A separately same number, machine B also same number, machine C also same number. If they had given different data, I would have done different calculation. They can mention A will work for 20 hours a day, B will work for 10 hours a day, C will work for 4 hours a day. They can give different data. They have not given any data. 1826 is the denominator you will use here. In this 195,700, you will divide by 1826. 1826. I'll repeat again. First, I calculated maximum. From maximum, you will have certain reduction. One is holiday. Second is absenteeism. Third could be leave which people are taking. Fourth could be some maintenance activity that will give you planned utilization. If you are doing 100%, okay. Because last question when we did, we subtracted everything. We did not apply any percentage. I directly took that 1,11,000 hours. Here they are saying, no, we are working only 85%. We are working only 85%. And on top of that, there is a 2% breakdown. On top of that, one exam question they gave, this number is 90% and this number is 10%. What student taught is 90% is utilization and 100 minus 90 is 10% breakdown. That's how student taught, and they didn't subtract the balance 10. I'll repeat again, breakdown is on the utilization. Breakdown is on the utilization. 90% if they say, and if they say 10% breakdown, it means from 100 I'll work only for 90. 10% of 90 is another 9 lost. 81 is what our effective utilization will be. 81 is what our effective utilization will be. If they give 90 and 10%, 85 and 2 will not give you confusion, because you will not think that this is balance hours. But if they give it 90 and 10, some students took it wrong, assuming that they thought 100 minus 90 is that 10%. So they did not subtract breakdown separately. What you need to do is you will have to first find the planned utilization and then subtract the breakdown. So this is the calculation here, 1826, and this will give you MHR for machine 1, machine 2 and machine 3. Machine hour rate for machine 1, machine hour rate for machine 2 and machine hour rate for machine 3. Clear? Any doubts in this? In this, the denominator calculation is also tricky. The numerator calculation is also tricky because a lot of adjustments were there. Clear? Let's look at 9 now. Following particulars refer to a process used in the treatment of material subsequently incorporated in a component forming part of an electrical appliance. Original cost of the machine is 10 lakh, life is 10 years, scrap value at the end of life is 10,000. What is the use of this data? To calculate depreciation. Estimated working time per year is 2,200 hours. So they have given this data, like I calculated some 2496. They have given what? 2,200, and they very clearly mentioned 50 weeks and 44 hours. Out of which maintenance is how much? 200. Maintenance, if nothing is given, is non-productive. I'll have to remove that from that 2,200. I'll have to remove it from the 2,200 because maintenance is what? It is non-productive. I have told you 3 types of time: operating, maintenance, setting up. Operating always productive, maintenance always non-productive, setting up time is assumption. No other loss of time expected time expected, setting up time estimated. Setting up time estimated at what? 100 hours is regarded as productive time. If nothing is given on this 100 hours, you will incur electricity cost. On this 100 hours, you will incur electricity cost. I will again explain this. I have 2200. This is split into 3. 100 setting up, 200 maintenance, 200 is maintenance, 1900 is running. This is non-productive, this is productive, this is productive. So productive time is 2000 hours. Productive time is 2000 hours. 100 hours of setting up is productive and 1900 running is also productive. Both are productive time. Maintenance time is nothing is given. Later on in the end they may say maintenance is also productive. I don't know. As of now my reading is setting up time is productive, running time is productive, maintenance time is unproductive. No electricity cost for maintenance. Yes, electricity cost for setting up and running time. Anything deviation we'll see. Electricity used during the production is 16 units per hour at a cost of 7. No power during what? Maintenance or setting up. So I can't help it. The questioner said no power during what? Setting up. Setting up time is productive in this question, but no power during setting up. That is specific word used in the question. If nothing was given in the question, power cost is 16 units into 7 per unit into 100 plus 1900 into 100 plus 1900. But now not 100 plus 1900 because question is very crystal clear saying no power is incurred during what time? No power is incurred during maintenance or setting up. Machine required a chemical solution which is replaced at the end of week. At the end of week. This is very simple. We have 50 weeks. Multiply. Estimated cost of maintenance given. 2 attendants. 2 attendants control the operation together with 5 other identical machine. So the man to machine ratio is 2 people, 6 machine. 2 people and 6 machine. 2 operators control the operation of machine together with 5 other identical machine. What is the use of this? If you are paying 1000 rupees to one worker, his salary will be divided as 1000 into 2 by 6 for single machine into 2 by 6 because 2 people are controlling how many machine? 6 machine. So 1000 into 2 people divided by 6 machine, divided by 6 machine. Their combined weekly wages, insurance, employee contribution is how much? 9000. Now ICA played very smartly here. What student thought is they thought it is 9000 per worker, but the word used is their combined. Their combined means 2 people together. Their combined is 2 people together, it is 9000 rupees. 2 people together is 9000 rupees. Some students thought it is for one person 9000, so they did 9000 multiplied with 2 and then divided by 6. Divide by 6 is right, but multiply with 2 is wrong. Multiply with 2 is wrong. Or they should have said 9000 per employee. 9000 per employee. Department and general works overhead allocated to this mission. This mission means our mission. Sometimes they will say allocated to the cost center. Allocated to the cost center. Cost center has totally 6 mission. Cost center totally has 6 mission. So whatever you allocate, divide by 6. Whatever you allocate, divide by 6. I've almost explained everything. Tell me what will be the depreciation per annum. Calculate and tell me the depreciation per annum. Point number 1. Calculate depreciation. 10,000 minus 10,000 divided by 10 years, 99,000. Depreciation is 99,000. Calculate electricity cost. What into what? What will be the electricity cost? When I explain 16 units per hour into 1900 hours into 1900 hours into 7 per unit. So this is my electricity cost. 16 into 7 into what? 1900 into 1900. Why we are doing into 1900? Because questioner said no power during maintenance and setting up. If problem was silent, I would have done into 2000. I would have done into 2000 because setting up time is productive. Setting up time is, if problem is silent on setting up time, you have to write your assumption. Productive, incur power cost. Non-productive, do not incur power cost. Machine required a special solution. 2000 into how many weeks? It has only 50 weeks in this question. 2000 into 50 weeks. Maintenance directly I write. Tell me what should be the wages cost for the machine. Wages cost for the machine. 9000 into what? 9000 first multiplied with what? 9000 into 50 weeks divided by 6 machine. 9000 into 50 weeks divided by 6 machine. Divided by 6 machine. Not into 2 workers. Not into 2 workers, because the word used is their combined weekly wages. Insurance holiday amount is 9000. They have not used word 9000 per employee. So 9000 into 50 into 1 by 6 into 1 by 6. I get 75,000. General overheads 626, and this is my effective hours. This is my effective hours. That is from 2200. I've removed only the maintenance. If question had said setting up time is unproductive, I would have removed that also. I would have removed that also in the calculation. Clear? Any doubts on this? Any doubts on the concept? Many a times this area is tested a lot in exam. So when anyway, once I'm done with the chapter, I'll tell you this area alone I would want you to solve a little bit more question, either from the comprehensive revision, comprehensive question bank, or from your ICA material, but some extra question you have to do on machine hour rate method. Concept is very simple. You'll have 3 types of time. Understand this. One is called setting up, second is called running, third is called maintenance. Maintenance remove from denominator. Maintenance remove from denominator. Some question will say 2200 and they will say out of which, instead of saying additionally maintenance is 200, additionally maintenance is 200, then no need to subtract because this is additional. You just need to add the setting up time. You just need to add the setting up time. You'll have to read the question properly and then get to the number. Clear? Any doubts on this? Last is on multiple machine hour rate. Let's understand this. USP Limited is the manufacturer of double grip motorcycle tires. In the manufacturing process, it undertakes 3 different jobs: vulcanizing, brushing and striping. All of these jobs require the use of a special machine and also the aid of a robo. Also the aid of a robo when necessary. Robo is hired from outside. Higher charges for every 6 months. For every 6 months. Please read this very carefully because sometimes they may give 6 months and suddenly ask monthly calculation is 2,70,000. Estimate of overheads relating to the machine. Rent for a quarter. That is given 6 months. This is given for a quarter. Cost of the special machine is 19,20,000. Depreciation is 10%. Now suddenly a per annum. First they gave 6 month expense. They have given a 3 month expense and there is a per annum expense. Other indirect expenses is 20% of direct wages. 20% of direct wages. Factory manager has informed that in the coming year, total direct wages will be 12 lakh. So 12 lakh into 20% is 2,40,000 for a year. 2,40,000 for a year, because they have given for the coming year wages will be 12 lakh, which will be incurred evenly throughout the year. Evenly throughout the year. During the, okay, now comes the surprise. Data is only for first month. Data is only for first month of operation. During the first month of operation, without the aid of robo and with the aid of robo, you are required to calculate machine hour rate when the robo is used and when the robo is not used. So a machine can do 2 tasks. Machine can work individually or machine can work with the help of robo. Machine can work with the help of robo. I need a rate separately for machine plus robo and a rate without robo. Rate without robo. Then they are saying what is the machine hour rate for vulcanizing job, for brushing job and for striping job. Now what is this rate is? Vulcanizing robo is 500, without robo is 500, 400 is with robo. The rate, this will be into 10 maybe, or this could be into 50, some rate we will calculate. So 500 into 10 plus 400 into 50, whole divide by 500 plus 40 is the rate for vulcanizing. Whole divide by 500 plus 400. So first I need the rate for robo separately, machine separately, and robo plus machine will have to do the calculation. So robo plus machine will have to do the calculation. This is, the machine is going to do 2 tasks. One, individual working. one with the robo working. Let's calculate working note 1. Computation of MHR. Computation of machine hour rate. Particulars robo special machine. We'll do calculation for only 1 month because all data is for a month. So whatever information they have given, we'll have to convert into month. Robo and special machine. In the end, you may make a mistake. I'll come to that in the end. First is higher charges. Read and tell me what is the higher charges for a month for robo. Higher charges, single month calculation. 2,70,000 divided by 6 months. 2,70,000 divided by 6 months is 45,000. Then rent, read it and let me know how much for a month and is it for a robo or for the machine. Rent for the machine is how much? 6,000. Depreciation, tell me monthly depreciation. Depreciation monthly, how much? 19,20,000 into 10%. 19,20,000 into 10%, you get 1,92,000 divided by 12 months. Divided by 12 months, which is 16,000. Other expenses, 20% of direct wages. Other expenses, 20% of direct wages. 20% of direct wages. Calculate the other expenses per month. How much? 2,40,000 is for a year. 12 lakh into 20%. 2,40,000 is for a year, and you divide that by 12 months. You divide that by 12 months. You get 20,000. Total expenses. $45,000 and $42,000. Number of hours and machine hour rate. Read the question and tell me clearly how many hours is robo working and how many hours is machine working. How many hours robo is working and how many hours is machine working. Number of working hours of robo, add and tell me, and number of working hours of machine. See, right, wrong doesn't matter. I want participation. Robo is how many hours? 400 plus 400 plus 1,200. Machine? No. Machine is how much? It's 3,500. Read the heading. Number of hours the special machine was used. Here also machine is used. Here also machine is used. Both the places machine is used. Number of hours the special machine was used without robo and with robo. Without robo and with robo. Machine is used at both the places. Machine is used at both the places. So number of hours robo is used is 2,000 and this is 3,500. I'll divide and I get the rate. Okay. Now what is the use of these two numbers is, listen, machine hour rate, if machine only is used, 12 rupees per hour. This is like doing black and white printing. If you do only black and white printing, I'll charge only 12 rupees. When I do color printing, I incur all expenses. On top of cartridge expense will go up. The cartridge expense will go up. MHR, if machine with robo. Machine with robo is you'll charge 12 and 22.5. 12 and 22.5. 12 rupees will also be charged and 22.5 rupees will also be charged. Put together it is 34.5 per hour. 34.5 per hour. Same machine, if I'm using without robo, I charge only 12 rupees. The same machine, if I use it with the robo, I will charge what? 34.5. Two machine hour rate. One is 12 rupees for only machine, and second is 34.5 if you use machine with robo. If you use machine with robo. Clear? Any doubts on this? Any doubts on this? Because on the robo I incur extra 22.5. This is like black and white printing and color printing. Black and white cheaper 12 rupees, color is 12 plus extra 22.5. Any doubts on this? Now next part you need not write. They want a machine hour rate for vulcanizing. Vulcanizing machine hour rate is 500 into 12 rupees. What is 12 rupees? Without robo plus 400 into 34.5. 400 into 34.5. 500 into 12 rupees plus 400 into, this is the total overheads of vulcanizing. Whole divided by number of hours is 500 plus 400. Whole divided by number of hours is 500 plus 400. What's the rate you get? Sorry? 22, 18 and 34. 22, 18 and 34. What is 22's weighted average of 12 and 34? Weighted average of 12 and 34. I'll repeat again. What we have done here is we have done separate calculation for machine. We have done separate calculation for robo and then added them together. Clear? Any doubts on this? Any doubts on this? There is a variant of this which is slightly different. I have not been able to add it I haven't added it here, which is on setting up an operation, which you'll have to see in my main material. In my main material, you will see a multiple machine hour rate where there is a setting up separate calculation, operation separate calculation, and then you will add them together. You will understand this when you see that question in my main material. I'll quickly tell you what I would want you to do extra, because I'm kind of done with this chapter. Distribution of overheads, I don't expect you to do anything extra on distribution of overheads. As I said in the previous session, one question I wanted you to solve in each of the category. One question you take care along with your ICISM question. That is kind of okay. Overhead absorption calculation, again I don't want you to do much. Just do what is there in the material and maybe cover your ICISM question. There is one or two different variants there. Under our over absorption, please solve more question from my main material. Please solve more question because of the importance it carries. Solve more question. And why I am telling to solve more question also is it is not going to take more time, because solving an under or over absorption question will not take you more than 5-10 minutes. Even through MCQ also you can do, and same with MHR, same with machine hour rate. I have solved the important ones, but solve extra questions from the main material. What is frequently tested is treatment of under or over absorption MHR in exam, and not the other area, Clear? So with this, our overheads discussion is over. If you look at from the different type of questions which this chapter has, I think we have almost covered everything. It says primary overhead distribution, special attention to power expense. When I was explaining, I explained power expense little bit in detail. Factory supervision is okay. Secondary overhead distribution done. Direct method, step ladder we did. Repeated distribution, simultaneous equation, and trial and error. Step ladder method, how to find sequence we saw. Computation of OAR, it said 7 bases. Earlier material had 7 bases by ICA. Now they have made it a 6 bases. We have seen cost of the job using OAR. Under or over recovery we have done. Different forms of capacity, I have done theory discussion. Reverse working problem, I think I have not done a problem. There's one problem in my main material. The heading will say reverse working. It will be under or over absorption. Just see that question where you have to form some 2-3 equations and solve it. And machine hour rate, single versus multiple. So all these areas are covered by us. With this, chapter 4 discussion is over. Now, before I move to labor chapter, I'll quickly close a related chapter called as your chapter 9, which is called job costing. Job costing, nothing much is there, not even very important from an exam point of view. If I look at from a marks point of view, chapter 9, very rarely it is tested. Very rarely it has been tested. On an average, I think maybe 1 in 5-6 exam a question comes. But it's a very limited, simple discussion. So let me quickly do the discussion on job costing. May not take me more than 15-20 minutes of discussion around this. I'll discuss the concept, and if possible, I'll do a problem around it. Now, let's first go through the concept part. Okay, now coming to methods of costing, see we have totally 5 different methods, of 5 different chapters are there, but methods are 6, 7. In that job costing is used, I'll discuss each of the method as I proceed. So here I'm discussing only job costing. Job costing is used in those industries where I do work according to customer requirement, customized to the user requirement. The user will say, I want you to do XYZ. So what we do is we prepare a job cost sheet. We prepare a job cost sheet. In the job cost sheet, direct material could be given in the question. Direct labor could be given in the question. But they will say factory overheads, please absorb using OAR. Please absorb using OAR. Admin overheads, please absorb using OAR. Selling overheads, please absorb using OAR. Your job is to find that OAR and do absorption. Your job is to find the OAR and do the absorption. Some question may give the basis properly. Some question may not give the basis, so you will have to think and write the basis. This is what this chapter is all about. I have done this immediately after overheads because just now we have done OAR, so your understanding would be better. Job costing is used in those industry where work is done according to user requirements. It is non-repetitive in nature. Now I am taking classes for all of you. This is not customized to user requirement. But if one student comes and tells that I want you to take tuition for specific areas, that is customized to the student requirement, I should technically follow concept of job costing to calculate my cost. So it is used in furniture because furniture is normally not standardized. You will do specific requirement for a person. Interior, repairs, car manufacturing. If somebody gives me a specific requirement of a car and I do according to that requirement, that will also be job costing. That will also be job costing. Same format as normal cost sheet. Same format as normal cost sheet with overheads. With overheads being absorbed using what? Some basis. With overheads being absorbed using some basis. Now, what is the basis we normally use? Factory overheads, I'll be using DLH or DW. DLH or DW. First preference is DLH. Second preference is DW. Direct wages. Direct wages. This is if problem is silent. If the problem is silent. Admin overhead relating to production. There are 2 types of admin overhead. One is relating to production and second is general and administrative overhead. If I have AOH relating to production, my basis will be factory cost. My basis will be factory cost. Rule is very simple. When you prepare your cost sheet, you write direct material, direct labor, direct expense, you get prime cost, you write factory overheads, gross works cost, add opening WIP, less closing WIP, net works cost, and then you write those 5 line items. In the 5 line items, I have AOH relating to production. Above AOH relating to production, immediately I have factory cost. Immediately I have factory cost. We normally try to use the immediately above one. Immediately above one. This is what we normally use, not for everything. I'm talking about only administrative overhead. General and administrative overhead comes after COGS. Comes after COGS. So our basis is COGS or COP. Why COP or COGS? In case there is no opening and closing stock, both are same. No opening and closing stock, both are same. And for selling overhead, I use units sold or COP or COGS. Selling overhead COP or COGS. Same suitable base I'll be using for admin overhead and selling overhead. Now what is the purpose of this? The purpose is this. Material cost 50,000. Labor cost 50,000. So material is 50, labor is 50, prime cost is 1 lakh. Factory overhead is 200% of labor cost. Factory overhead is what? 200% of labor cost. Labor cost is how much? 50,000. So factory overhead is 1 lakh. Factory cost is 2 lakh. OH relating to production. Admin overhead relating to production is what? 20% of factory cost. So add another 40,000. Add another 40,000. That is your COP, COGS or COS. COP, COGS or COS, and profit margin is 20% on sale. So this is 80, profit is 20, cost is 100. This could come for 5 marks in exam if it comes. This could come for 5 marks in exam if at all rarely a question comes from your job costing. Now, is this a separate chapter? No, I could have discussed this question even in the cost sheet chapter. Even in the cost sheet chapter, I could have discussed the same question because I don't see any difference here. There is zero difference between this question and what we did in cost sheet. What we did in cost sheet. Clear? Any doubts on this? So this is the cost sheet format. 3 lakh. 3 lakh is the number. Able to understand this? So I keep adding various items. Question will only give you these two. Balance, you will have to find out an appropriate OAR. You will have to find an appropriate OAR. In this MCQ example, I have given the OAR. In a proper question, they will not give you the OAR. You have to calculate. You will have to calculate the OAR. Now we have two types of loss, normal loss and abnormal loss. Normal loss is something which I anticipate in my process. Normal loss is something which I anticipate in my process, and normal loss is absorbed by the good units. You will learn this in process costing when I do cost per good unit. Normal loss doesn't go to P&L. Only the abnormal loss will go to P&L. Only the abnormal loss will go to P&L. Now what is the use of this lesson? Manufacturing cost is how much? 1 lakh. 8% of the production is spoiled. 8% of the production is spoiled, which means 8,000 is spoiled. 8,000 is spoiled. Against this 8,000, you have a recovery of 2,000. Against this 8,000, you have a recovery of 2,000. Normal spoilage is 2%, which means in this 8,000, 2,000 is normal spoilage, 6,000 is abnormal spoilage. 2,000 is normal spoilage and 6,000 is what? Abnormal spoilage. 8% was this, 2% is normal, 6% is abnormal. In this 8,000, you get a recovery of 1/4. You get a recovery of 1/4. So in this 2,000, you will get a recovery of 500. In this 6,000, you will get a recovery of 1,500. Net normal losses 1,500. Net abnormal losses. This is my loss. Normal loss, I'll tell my customers to pay. Normal loss, I'll tell my customers to pay. Normal loss will be considered as part of our cost. Even when I did under or over absorption, normal under absorption, I said I'll recover it from the next year customer. Abnormal under absorption, I said I cannot recover it from the customer. I'll charge it to costing P&L. So this item will go to costing P&L. This item will go to costing P&L. Your abnormal loss will go to costing P&L. Technically, you will pass an entry like this. Bank account debit 2,000. What is bank account debit 2,000? You will get this money by selling that scrap. You will sell the scrap. Normal loss account debit 1,500. Normal loss account debit 1,500, which will go to COGS, and P&L account debit 4,500 to overhead control. 8,000 rupees extra loss has happened. This loss 2,000 I get recovery. 2,000 I get recovery. 6,000 is my net loss. 6,000 is my net loss. In that normal losses 2, abnormal losses 6. 2 is to 6. 2 is to 6. Normal loss customer will pay. Abnormal loss is my permanent loss. Clear? Any doubts on this? This is what this chapter is all about. Very simple concept. I do not have multiple MCQs and all. Even if you see this 3-4 MCQs only is there. Once you cover that, this chapter is over. The job costing part is over. Let's see questions around it. I'll do 1 or 2. I think I have 3 questions. I'll quickly see if I can cover all the 3. Let's go to that area now. Okay. Preparation of job cost sheet, revision of cost based on actual recovery rate. You will understand as I read. A shop floor supervisor of a small factory presented the following cost sheet. Material 70 rupees, wages 18 hours at 2.5, 18 hours at 2.5, 45 rupees. Chargeable expense means direct expense. Chargeable expense means direct expense. Add 33% for expenses. Add 33% for expenses. What does this 33% for expenses mean is, this is the overhead recovered. This is the overhead recovered, and 160 is the overall cost. Then some P&L they have given. It is also noted average. Draw up a job cost sheet. Calculate the revised cost. Calculate the revised cost using 2005 actual figures as basis. What is actual figures as basis? Is using actual OAR. Using actual OAR. Please revise the table. Please revise the table. What will get revised is till this 120 will remain same. Till this 120 will remain same. Overheads earlier was 33% for expenses. Single blanket rate. Single blanket rate. Now what I will do is material is fine, wages is fine. I need an OAR for department X. I need an OAR for department Y. I need an OAR for department Z. And I need an OAR for selling expenses. I need an overhead absorption rate for department X, department Y, department Z, and selling expenses. What they were doing is single OAR 33%. Single OAR 33%. I said single OAR and all will not work. We will calculate a OAR for department X, OAR for department Y, OAR for department Z, and an OAR for selling expenses, which will replace this 33%. Which will replace this 33%. Will the expenses go up or go down? I don't know, because they have told me to revise. Is there any utility of this? Zero use. This will only tell you under or over recovery, because you have already decided this. Because to the customer, I have to tell the rate before I start the work. I cannot tell that my year will get over. After the year gets over, I'll revise my OAR and then tell you the cost. All that is not possible in the practical world. So here we are going to calculate OAR. Now in this question, they have not given the basis. They have not given the basis. So for factory overhead, my basis will be direct labor hours or direct wages. Direct labor hours or direct wages. Admin overhead is not there. If it was there, my basis is COP or COGS. Selling overhead is COP, COGS or units sold. COP, COGS are units sold. So let's do the OAR calculation. Formula is budgeted overheads by budgeted suitable base. You will have to decide what base is to be used. Once you decide that rate, then in this 120, you will have to add overheads of department X, overheads of department Y, overheads of department Z, and you also need to add overheads, selling overheads. You also need to add selling overheads. Will the cost increase, decrease? I don't know. I'll have to do the calculation. Clear? Any doubts on this? Can you tell me what can be the basis for department X, Y, and Z here? What can be the basis for department X, Y, and Z? I would prefer, first preference is direct labor hours, second preference is direct wages. Listen, it says average hourly rate for three department is what? Similar, and in the top they have said the rate is what? 2.5. So I will convert all this 4,000 hours, 10,000 divided by 2.5. 12,000 divided by 2.5 is 4,800, and 8,000 divided by 2.5 is 3,200 hours. So I will calculate OAR per hour. OAR per hour. What will I do with that? I'll multiply that with 8, 6, 4. I'll multiply that with 8, 6, and 4. This is revising the data based on the actual information. Based on the actual information. Let's do right. Working note 1. Computation of OAR. Computation of OAR. Particulars. Department X, Department Y, Department Z, and selling overhead. X, Y, Z, and selling overhead. Formula remains the same. Budgeted overhead, suitable base, budgeted suitable base. Point number 4 is OAR. Budgeted overhead, suitable base, and OAR. Now coming to the budgeted overheads figure, 5,000. It's not technically budgeted. It's basically actual here because we are doing based on the actual, but I'm not changing the name. 5,000, 9,000, 2,000 is the overhead. 5,000, 9,000, 2,000 is the, anytime OAR is always for the company. OAR is always for the company. So 5,000, 9,000, 2,000 is the overheads of the company. Overheads of the company. 5, 9, 2, and selling overheads is 20,000. Selling overheads is 20,000. Again, this is for the company as a whole. This is for the company as a whole. Now, what base do I use? This is where I gave in the theory that my basis for factory overheads is DLH first preference, DW second preference. Selling overhead first preference, units sold are cost of production. This is my preference which I use. I use this as the preference to calculate my OAR. So DLH, 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 and COP or COGS. Direct labor hours, direct labor hours, direct labor hours, COP or COGS. The entire costing focuses on those variable versus fixed is one part, and wherever I discuss this overhead part, the OAR is the most important part. The OAR is most. Now, direct labor hours of department X is 10,000 divided by 2.5. 10,000 divided by 2.5, 4,000, 4,800, 3,200, and listen, COP COGS works cost is 2 lakh. Works cost is 2 lakh, which is nothing but after works cost we have those 5 line items which are not there. So COP is also 2 lakh. COGS is also 2 lakh, and selling expenses is 20,000. Selling expenses 20,000. Cost of sales is 2 lakh 20. Cost of sales is 2 lakh 20, and net profit is 30,000. Net profit is 30,000. So next item is 2 lakh. 1.25 per DLH, 1.875 per DLH, 0.625 per DLH, 10% of COP or COGS. Problem is over. I'm not going to do beyond this. Once you get the OAR properly, problem gets over as far as this chapter is concerned. 10% of COP or COGS. Now, technically, what you had to do is this. Till 120, nothing changes. Factory overheads is whatever rate you calculated, whatever rate you have calculated into the number of hours, 8 hours, 6 hours, and 4 hours. Put together, we get this. Selling overheads is this. The cost should have been 158. We got the cost as 160. Cost should have been 158. We originally got the cost as 160. A small deviation of 2 rupees is that. That's technically under recovery or over recovery. Under recovery or we recovered 160. So original actual cost is only 158. So there's a over recovery. There is a over recovery of some 1 rupee 87 paise. Clear? Any doubts on this? Let's understand one more question. A factory uses job costing. Following data is obtained from its books for the year ended 31st March 2018. Very simple question. Direct material, direct wages, selling and distribution overheads, admin overheads, factory overheads, profit. Prepare a cost sheet. There can't be a simpler question like this. Prepare a cost sheet where you have to give prime cost, cost of production, cost of sales, and sales value. So 9 lakh plus 7 lakh 50 is prime cost. 9 lakh plus 7 lakh 50 is prime cost. Do it in the calculator. 9 lakh plus 7 lakh 50, 16 lakh 50 plus factory overheads 4 lakh 50 plus factory overheads 4 lakh 50, 21 lakh. Now admin overheads, you will have to take an assumption. Is it relating to production or general and administrative overhead? I'm assuming it to be general and administrative overhead. I'm assuming it to be general and administrative overhead. So you got till 21 lakh, that is factory cost, COP, COGS. Add another 4 lakh 20, add another 5,25,000, you get cost of sales. 3045 profit and sales. 3045 profit and sales. Clear? Any doubts on this? This is the first requirement of the question. First requirement of the question is to prepare a normal cost sheet. Then comes the second part. In 2018-19, I have received an order. I have received an order. On this order, material cost is 2,40,000. Labor cost is 1,50,000. Beyond this, you have to absorb everything. What I have to absorb? Factory overheads, admin overheads, and selling overhead. These three items I have to absorb: factory overheads, admin overheads, and selling overheads. The question says, what should be the price for the job if factory intends to earn the same rate of profit? What is the profit earned last time? Is 6,09,000 divided by 30,45,000. 6,09,000 by 30,45,000 is how much? I think it will be 20% on cost. 20% on cost. You can calculate on sales also. You can calculate on sales also. The last year profit is 20% on cost. Now the question says, what should be the price if I want to earn the same rate of profit if selling and distribution overheads have gone up by what? 15%. Have gone up by 15%. The factory recovers overheads as a percentage of COP. As a percentage of COP based on the cost rates prevailing in the previous year. Based on the cost rates prevailing in the previous year. So the basis is COP. This can't be COP. This can't be COP. Why it can't be COP? Because it is part of COP. It is part of COP. So for factory overheads, either DLH or DW. Either DLH or DW. So for factory overheads, my recovery rate is 4,50,000 divided by 7,50,000. 4,50,000 divided by 7,50,000, which is 60% of direct wages. 60% of direct wages. When I gave one MCQ, I gave you the rate directly. I gave you the rate directly. So here you see 4,50,000 on 7,50,000, 60% of DW, 20% of COP, 25% of COP. You will use this recovery rate for selling overheads alone. After doing the calculation, add 15% extra. Add 15% extra because selling overheads have gone up by what? 15%. Selling overheads have gone up by 15%. So see the calculation here. Very simple. That's why I'm not doing this question. These two alone will be given. Everything else 60%, 20%, 25%. Everything else is using a OAR. Everything else is using a OAR. And what is the basis we'll use? Factory overheads DLH or DW. Relating to production is factory cost. General and administrative overheads COP or COGS. Selling overhead is COP, COGS or units sold. Mostly same base. Mostly same base will be used for admin and selling overhead. Admin and selling overhead. Clear? Any doubts on this? It's a very simple area. I have 3 questions. 2 I have discussed. Third question you just do it at home. Once you have done with this 3 questions, this chapter is over. I don't even expect you to do anything more. ICISM, if you want to open and see, you may not find extra questions. 1 or 2 questions could be there. So just cover that. With this chapter gets over. Not very important. 1 in 5 exams or 6 exams, a question will come. But in case it comes, I don't want you to miss out on it. Clear? I'll take a break of 15 minutes and then we start with labor chapter. We'll move to labor chapter after this. First, quickly the concept discussion. What is unit costing? Again, there is no difference between job cost sheet, normal cost sheet, unit cost sheet. Unit costing means you will do all the calculation like a normal and just divide by the number of units. Just divide by the number of units and calculate cost per unit. Unit costing is used in those industries where manufacturing is done for identical units. Single unit is taken as a cost unit. In the end, you need to do total cost divided by number of units. Total cost divided by number of units. This is what is called unit costing. We will have to prepare a normal cost sheet. We'll have to prepare a normal cost sheet. Overheads will be absorbed using appropriate basis. Using some appropriate basis. In this, there is one question on that change in fixed cost and change in variable cost, which is a very good question. I'll explain when I do the problem. Next comes batch costing. What is batch costing? Is where manufacturing is done in batches. Example, ready-made garment. When I manufacture a ready-made garment, one design I'll manufacture 100 shirts. One design I'll manufacture 100 shirts. Mobile phone. In mobile phone, let's assume I'm manufacturing the mobile phone case, which is used mobile case. For one design, I'll manufacture some 100 units. Another design, I'll manufacture 200 units. Toys manufacturing. When I manufacture toys, same design, I'll manufacture some 100 units. Wherever manufacturing is carried out in batches, we have to do something called as batch costing. Batch costing means you'll have to prepare a batch cost sheet. Direct material, write it directly, direct labor, and over it's using some basis. Let's take an example. Arnav Confectionaries owns a bakery which is used to make bakery items like pastries, cakes, and muffin. AC used to bake at least 50 units of any item at a time. This 50 units is called batch. The batch quantity, that is, every batch will be 50 units. Customer orders for how many units? 600. So 600 divided by 50, I have to do 12 batches. And the setup cost is 150. So 12 into 150 is overall setting up cost. Now, why I explain this example is, let's assume it is 610. 610 divided by 50 is 12.2, rounded off to 13 batches. 601, if you have 601, it will be 13 batches and not 12 batches. If some customer is asking for 601 units, you will have 13 batches, and that extra 1 unit will cost me extra 150 rupees. That extra 1 unit will cost me extra 150, whereas 600 units has cost me only 1800, which is 3 rupees per unit. But that extra 1 unit will cost me how much? 150. So that understanding is critical. And here we calculate something called as EBQ, economic batch quantity, which is similar as EOQ, economic order quantity. EBQ is the best quantity to produce. EOQ is the best quantity to purchase. EOQ is for purchase and EBQ is for production. 2 into annual production. There it is annual demand of raw material. Here it's called annual production. There it is called ordering cost per order. Here it is called setup cost per production run. There it is called carrying cost. Here we use the term holding cost. Same 13 column format. Annual production. There it's annual demand. Quantity, number of production runs, number of orders, ordering cost per order, total ordering cost. Here it's number of production runs, setup cost per run, total setup cost, average inventory, holding cost, total holding cost. Along with this, you can add 3 more items if you want. Annual production, cost of manufacturing. There it is called annual purchase, cost of purchase, and total material cost and total inventory cost. Here, many times they may not give the production cost. Many times they will not give the production cost. So we just add and call it as total cost. Like you have frequency of ordering, here you may have frequency of manufacturing. Frequency of ordering was 360 or 365 divided by number of orders. Here 360 or 365 divided by number of production run. There it is called number of orders. Here it is called number of production run. Let's see an example. Annual production 90,000. Annual production 90,000. So square root of 2 into 90,000. Setup cost is 1500. Setup cost is 1500. 2 into 90,000 into 1500. Carrying cost is 5%. If it's percentage, there it is percentage of purchase price. Here it's percentage of production cost. What is production cost? 2120, 60 and 20. Add all the 3 and do into 5%. 110, and now do the calculation. 1567, that's the answer. Another example, monthly production 10,000. 10,000. Economic batch quantity is 2,000. How many production runs will be carried out in a year? How many production runs? This is what? Monthly production. First do into 12. 1 lakh 20 divided by 2000. Divided by 2000. What is 2000? Economic batch quantity or quantity per production run. And I get number of runs as 60. Monthly production is, can you give me EBQ answer here? Please apply the formula properly. Let's see. Get me the answer. Two into what? First tell me. Two into 2,40,000 into 10 divided by 1.2, because this is per quarter. This is per quarter. Clear? Any doubts on this? Now, market size of a product is 80 lakh. Company has a market share of 2%. Same will increase to 3% in next year. So next year I'll be selling 3% of market. What is the market size? 80 lakh. But this will also increase by 25%. This will also increase by 25%. So tell me, what is the next year market size? Next year market size 1 crore. In that I will sell. So my annual production is 3 lakh into 2 into 3 lakh into 1000 divided by per unit carrying cost is 3 rupees. Divided by 3 rupees. Any doubts on this? 14,142. Get me the answer to this. See what will you do here. It's a very simple one only. So which is not there, so choose which option you will choose here. 12. So listen, they ask for optimum run size. In this example, normally optimum run size means EBQ. But looking at the option, they're asking you to calculate number of production run. Looking at the answer, so first you will calculate EBQ. EBQ is square root of 2 into 80,000. 2 into 80,000 into 3,500 divided by 12. Divided by 12, which is 6832, and you divide and you get 11.70, which is rounded off to 12. Get me answer to this. Two into 50,000 into 10,000 divided by 12. Divided by 12. Clear? See, this is what this chapter I've done almost all the MCQ. That's why I'm saying every other chapter, unless you complete MCQ, that preparation will not get over, because in labor a lot of MCQs I did not discuss. In overheads I did not discuss. So complete MCQ 100% fully, and for that there is a video is also available. So you watch the video in case you get a doubt. But completing MCQ is very, very critical, because that's the area where I can quickly discuss all the concept. Let's quickly discuss the questions which are there now. Let's come to this. Atharva Pharmacare Limited produces a product produced a uniform type of a product, has a manufacturing capacity of 3000 units per week of 48 hours. Nothing for you to write, just be in listen mode. From the records of the company, following data is available for 3 consecutive weeks. Units manufactured, direct material, direct wages, factory overhead. Assume the company charges a profit of 20%. What should be the selling price when output is 2000 units? This is a very simple requirement. They have asked us to calculate what should be the selling price when output is 2000. Now, I've been given data for 3 weeks. Can you do 9000 divided by 1200? 12,000 divided by 1600. 13,500 divided by 1800. If you get same number for 2, not even 3, no need to check 3. If you get same number, it is a variable cost. It is a variable cost. So my direct material for 2000 is 2000 into 7.5. Can you divide for labor 3600 by 1200? Check for two items. 3. So 2000 into 3. Do factory over at 2 items. Not getting same. If you don't get same, then it is a semi-variable cost. Assuming all the 3 were 31,000, then it is a fixed cost. If it is 31,000, it is a fixed cost. So how I segregate is change in cost divided by change in units. Any two levels I can take. 2000 divided by 400. 2000 is the difference. 400 is the difference. Variable is in this 1200 into 5 is variable. 1200 into 5 is variable. Balance is fixed. Balance is fixed. So my next item is 2000 into 5. 2000 into 5 and the fixed component is 25,000. Add up all of this, you will get the cost. Profit margin is 20% on sales. 20% on sales. On cost, it will be 20 by 80. I'll get the final data, divide by 2000 units. Divide by 2000 units. This is not technically unit costing. I could have done this as a normal cost sheet question itself. So here my answer is 35 per unit. Remains constant for all 3 weeks and hence it is a variable cost. When you divide by the number of units, if you get the same number, it is variable. Overall same, then it is a fixed. Neither of them same, it is a semi-variable where you have to do change in cost by change in units. Let's come to this question. It's a very good problem. A factory incurred the following expenditure during 2007. Direct material consumed 12 lakh, wages 7 lakh, fixed overhead 3 lakh 60, variable 2 lakh 50. In the year 2008, following changes are expected. Production will increase due to 60% more worker. Production will increase due to 60% more worker. Efficiency will decline by 10%. Efficiency will decline by 10%. What is efficiency? Is your ST by 80, standard time by actual time, or AO by SO. AO by SO. There will be an increase of 20% in fixed overhead. No problem. Overall fixed overhead is there. I'll add 20%. 60% in what? Any change in variable overhead means a change in variable overhead per unit. Any change in variable overhead means change in variable overhead per unit. Direct material will be decreased by 6%. Any change in variable cost, because direct material is a variable cost, would mean a change in direct material cost per unit. Profit is 10%. They want us to calculate cost of production and selling price. Last year, how many units is it given in the question? Last year, how many units? Is there any data in the question on number of units? No. So last year is 100 units. Last year is 100 units, which means last year material cost is 12,000. Last year labor cost is 7,000. Fixed overhead I don't calculate per unit. Last year variable overhead is 2,500. These are last year cost. In the current year, 100 should go up to 160. 100 should go up to 160 because I'm recruiting more people. I'm recruiting more people, but there's a problem. This new people are not fully efficient. The new people are not fully efficient. 100 should have gone up to what? 160. What will it go up to? Efficiency is equal to AO by SO. 90% is equal to AO by 160. AO by 160. I wanted to produce 160 units. I wanted to produce 160 units. Why 160 units? Because I'm getting more people. I'm getting more people. Whereas this new people are not fully efficient. And my AO will be what? Why I'm doing this calculation is for doing my variable cost, I'll have to multiply per unit cost into 144. I'll have to multiply per unit cost into 144. For example, material 12 lakh. Question said 6% reduction. Don't do 12 lakh minus 6%. 12,000 minus 6% into 144. 12,000 minus 6% into 144. Let's not worry much about the numbers and all. This is the calculation. 12,000 minus 6%. What is minus 6%? That is the reduction, and multiplied with what? 144. Labor cost last year was 7 lakh. This year directly you can say 7 lakh plus extra 60%. Why plus extra 60%? Because 60% more people are coming. 60% more people are coming, and because they are inefficient, cost and all will change. That is a different thing. 7 lakh plus what? 60%. Directly you add 60%. 7 lakh plus 60%. Fixed overheads 3 lakh 60. 3 lakh 60. Add 20%. Add 20%. And variable overhead per unit is 2,500. Add 60% and multiply with 144. Multiply with 144. This question, please practice it even day before exam. This will test that change in fixed cost, change in variable cost, you're able to do it properly or not. In case you're making a mistake in this, which means that concept is still not clear. Change in fixed cost means change in total fixed cost. Change in variable cost means change in variable cost per unit. Clear? There's nothing there in the question. In fact, this question I need not have done it also, because it's the same concept. I keep on repeating. I'll be going to budgets and budgetary control, where also I'll keep on saying the same thing. Change in fixed cost means change in total fixed cost, and change in variable cost means change in variable cost per unit. Clear? Any doubts on this? Wherever you don't have units, please make this assumption. Let us assume 100 units are produced in 2007. Production will increase to 160. Inefficiency 10% drop, 144. Inefficiency 10% drop is 144. Any doubts on this? Any doubts on this? Okay, let's come to this question. This is simple. You are going to do this. You have to prepare a cost sheet. Read it and start preparing a cost sheet. Please read the question. Start preparing a cost sheet, whatever way you understand. Start preparing a cost sheet for question 3. OAR, everything is given in the question. I'll give you some 4-5 minutes. 4-5 minutes time. You do question 3. Okay, I quickly discuss this. It says my batch will be 50 muffins. 600 is the order. So I'll have to do it for 12 batches. Material cost 500 into 12. Wages cost 50 into 12. Oven setup cost 150 into 12. All this put together, I will get my prime cost, assuming oven setup cost is a direct expense. Production overhead is 20% of wages. 20% of wages. So it will be 20% of 600. On this extra 10% is selling, distribution and admin overheads. This will give me cost of sales. I get profit, sales and selling price. Now, what can happen is the question may say 605 or 610. If it is 610, all cost will be for not 600 by 50. You cannot write 610 by 50 here, okay? You will have to do into 13. You will have to do into 13 because that extra, because the question says he has to bake at least what? A batch of at least 50 units of any item, at least. So if somebody wants 600, okay. But if you want extra 10, I have to do baking of 50, waste 40. Waste 40. So I'll incur material cost on that. I'll incur labor cost on that. Every cost I'll incur. So I'll be doing for 13 batches. I'll be doing for 13 batches. That is a variant the question can ask, 610 or 620. Last is on EBQ. Here that extra cost saving part alone I'll have to discuss. BTL LLP manufactures glass bottles for HDL Limited, a pharma company which is an Ayurvedic medicine business. It can produce 2 lakh bottles in a month. It can produce 2 lakh bottles in a month. Setup cost is 5,200. Holding cost is 1.50. Holding cost is 1.50. As per an estimate, HDL Limited can order as much as 19 lakh bottles in a year, spreading evenly throughout the year. Now listen, BTL LLP manufactures bottles for HDL Limited. HDL Limited is my customer, and my customer is going to ask for how many bottles? 19 lakh. I don't know why they gave this 2 lakh. This is saying maximum 2 lakh you can do. 19 lakh is what my customer wants. At present, I manufacture 1 lakh 60,000. At present, I manufacture 1 lakh 60,000. Let's first calculate EBQ, square root of 2 into 19 lakh into 5,200 divided by 1.5. 1,14,775 is what I'm advising them. And what they are doing is 1,60,000. I want to know what is the cost saving. I'll first show you the format which we normally use. This is the format I had used in the earlier chapter, that is material cost chapter. Same format to ensure consistency. EBQ, current run size. Instead of calling it as demand, annual production. 19 lakh, 19 lakh, 19 lakh and 19 lakh. Quantity per production run. Quantity per production run. EBQ said 114,775, and company currently is doing 1,60,000. Number of production run. I can round off or I can write in decimal. Let it be in decimal. 16.55 and 11.88. 16.55 and 11.88. Instead of ordering cost per order, we'll call it as setup cost per production run. Setup cost per production run, which is 5,200. I multiply this, I get total setup cost. Total setup cost is 86,061,776. Average inventory quantity per production run by 2. Carrying cost name you can use or holding cost name you use, both are same, 1.5. At EBQ, total ordering cost will be equal to total carrying cost. At EBQ, total setup cost, here the name is total setup cost, 86,060, 86,081. Whatever difference it is there, it is rounding off. Again, you have to write annual production. This I don't have in many question. Cost of production. Cost of production, which I don't have, so I'm not writing it. Cost of production I don't have, I'm not writing it. These three items will not come in many questions because they will not give cost of production. And even if they give, there will not be any difference in cost of production. So my saving now is under EBQ, I will save some 9,000 rupees, approximately some 9,600 rupees is the saving in EBQ. We do not have quantity discount, all that will not come. Same thing, annual demand called as annual production. Quantity per order is called quantity per production run. Number of orders is called number of production run. Setup cost per run, there it is called ordering cost per order. There it's called total ordering cost. Here it is called total setup cost. Average inventory remains same. You can use the word carrying cost or holding cost. Total holding cost. Put a total. So ignoring these three items should not come. Ignoring these three items, just give me. Ignoring these three items, I will be left with total inventory cost, and the difference is 9634. Any doubts on this? So this is the extra cost. Here maybe little bit difference on the rounding off side, but doesn't really matter. Almost the answer is going to remain same. 9650 I'm getting. It depends on how much decimals, we are working with rounding off. Clear? With this segment is over. EBQ can be tested in exam. It has come few times in exam. Very simple area, square root of 2 into annual production of FG into setup cost per run divided by holding cost per unit per annum. With this, I'm done. I'll be meeting you again maybe after a few days of gap. When I come back, we will cover the budgets and budgetary control, standard costing. I think non-integrated accounts is pending. I'll cover that also. And I'll see in the methods of costing, whichever chapter we are able to do it. I'll end with this then. Thank you, friends.
Okay, so till now we are done with 10 chapters. Today I'm going to start with your process and operation costing area. Whatever I had explained earlier, we'll kind of revise that fully and ensure that this area is fully taken care of. We'll solve problems. We'll solve problems. I'll first give brief overview of this area. Under process costing, what happens is we are using this in those industries where manufacturing is carried out in back in series of processes. There's an output of every process which becomes the input of the next process, and this goes on. Now, why we are learning process costing is an organization at the end of the year, that is on March 31, can have some stock in process 1, some stock in process 2, some stock in process 3. I need to do valuation as per accounting standard 2. You have to value the inventory. For valuation of inventory, I need the cost data. So this is one utility of my process costing. It will help me in valuing the closing stock which is available in the company. Also it can help me in certain decision making. What is decision making I do? There's something called as buy or make the product. That is, some processes I will do it in-house and some processes I will outsource. These type of decision making can be done with the help of process costing. It is basically used wherever manufacturing happens in series of processes. The output of the first process becomes the input of the second, then output of second becomes the input of the third, and it goes on. This is the order in which it will keep going on. Now, whenever we solve questions in process costing, the question may have information on work in progress. If there is any data on work in progress in the question, it falls under the category of equivalent units. Otherwise, it falls under the category of non-equivalent units. First, we will do few questions on non-equivalent units where I have only two steps. One is input-output statement, and second is a process account. Now, what we do in input-output statement is we track the input of the company. So, process costing is used in those industries where my manufacturing goes through series of processes, and it helps me knowing the profitability or cost of each process. Now, what I do is every company will have some opening stock. It will add extra input, that's called total input. Total input in the process, deduct the closing stock, that's called process to production. From the process to production, I can have something called as normal loss. What is normal loss? Is a scientifically determined loss. A scientifically determined loss which will happen for every company. It is an unavoidable loss. It is a unavoidable loss. This is going to 100% happen for any company which is doing manufacturing. This loss I deduct, I get expected output, and I compare that with actual output. For example, in process 1, I expect 40,000 units and I get only 38,000. If I get lesser than what I wanted, it's called abnormal loss. And if I get more than what is wanted, it is called abnormal gain. So there's an abnormal loss and abnormal gain. Loss arises in case I am getting lesser units than what is needed, and gain arises if I get more units. If I get more units than what is needed. This normal loss, question will say it's a percentage of something. If it is silent, it's a percentage of input. Input means what you added in the current year. Otherwise, there is another term called as total input. It can also be a percentage of total input. It can also be a percentage of process to production, and it can also be a percentage of the actual output, or it can be anything else, whatever the question wants to give. So there is a loss which is going to happen in a process. Now, once this is done, you will be able to understand whether an abnormal loss is happening, abnormal gain is happening. The entire data is now put in the form of a process account, which is nothing but a trading account. A trading account, you record opening stock, You record raw material cost, you record labor cost, you record overhead cost, you keep recording all expenses in the debit side. In the credit side, I record the losses. What is the losses? By normal loss and by abnormal loss. Now, why this is in the credit side is this will go and sit in the debit side of the loss account. This will go and sit in the debit side of the loss account, and I have to debit all losses. I have to debit all losses. So by normal loss, by abnormal loss, ultimately in the loss account, you will write by P&L. You will write by P&L and it will go to the debit side of profit and loss account. By next process, if you transfer, and by closing stock. In this process, I have to calculate something called as cost per good unit. What is cost per good unit? Is in material cost. We learned aggregate material cost. We learned aggregate material cost divided by effective good units. When we did cost sheet, we did direct material, direct labor, direct expense. Then less one item we were doing recoveries for sale or scrap, and we got cost of production. Similarly, I'll add up all the cost, deduct any scrap value, that's called net cost incurred, and divide this by expected. Expected means what any company would have got. If you get more or less, it's your problem. If you get more abnormal gain, you enjoy it. If you get less abnormal loss, you will be penalized. In the denominator, we will divide only by what is expected. I'm not going to take a higher number. I'm also not going to take a lower number. I'll divide only by a number called as expected output. Now, in this chapter, one important part is technically I think 8-9 questions, but 6 questions is what I logically need to do. One on non-equivalent units, and in equivalent units we have FIFO method 2 questions, weighted average cost method 2 question, and there's one question on inter-process profit. If you are clear with all of this, any type of question you should be in a position to handle. Even in the latest RTP which ICI released, they've ended up asking an inter-process profit question for a 10-mark MCQ. It's a 10-mark MCQ based question, but it is on inter-process profit. Those areas normally students are not very clear because they are not very clear on the concept around it. So here, first I decide whether there is a normal loss or an abnormal loss, and I record it in the process account. I record this in the process account. I will explain and we calculate this item. Cost per good unit is equal to debit side of process account. In the debit side, all expenses are written. Obviously, it says excluding abnormal gain, but anyway, when you calculate cost per good unit, you will not know the value of abnormal gain. So it's basically total of the debit side minus sale value of normal loss divided by expected output. See, if you get more output, no, and you divide by a higher number, cost per unit goes down. So if I've got more, let me enjoy it. I don't want to pass it on to the customer. And if I get lesser units, it's an abnormal loss. You divide by a lower number, cost per unit will go up. And customer will not pay. If my cost is 1000 and I should ideally get 100, cost is 10 rupees. I got 80. I cannot say 1000 divided by 80 and cost is 12.5. I got lesser units, I will be penalized. But if I get more units, let's assume I got 120, then 1000 by 120 no need to do. That is 8 rupees. You need not do that. It's only 1000 by 100. It is always divided by expected output. If you have got more or less, it's all your headache. And if you get more, enjoy it. If you get less, let you be penalized. Customer is not going to be rewarded, and customer will not be penalized. For the inefficiency of the company. Let's see first input output statement. Let's come to question 1. Production in a manufacturing company passes through 3 processes, 1, 2 and 3. Output of each process is transferred to next process, and the output of process 3 is transferred to FG. Normal wastage in each process and the realizable value of the same are given below. They have given 3 processes. We'll do only 2 processes, process 1 and process 2. 3 I will not do it, so that you get grip on 2 process accounts. Details of cost: sundry material is an additional material, direct labor cost, production expense and output. Every process output is given. First process was fed with 40,000 units of input costing 3,20,000. This is the main raw material. Which has been added in the first process. No opening, closing, work in progress. In case there is no opening and closing work in progress, it is non-equivalent units. Question 2 step. We will do first step called as input output statement,
And in the second step, we will do a process account. You will do it along with me. Do working note 1, input output statement. Working note 1, input output statement. Input output statement. Particulars. Process 1, process 2, process 3 I will not be doing, but you can have space later on for you to do. Only process 1 and process 2 we will do. Particulars, in case even if you have done this earlier, let's do it along with me. In case even if you have practiced, it's okay. Particulars, process 1, 2 and 3. Our format says opening stock, add input. Opening stock, add input, total input, opening stock, add input, total input, deduct closing stock. You could have learnt it differently also. If you have learned differently, you want to follow what you have learnt is okay. But I can tell you whatever approach I'm doing will work for all the question and you will not have any confusion as far as this area is concerned. So you want to change the approach, I leave it to you. But I would suggest this approach would be more comfortable in case you get used to it. Otherwise, if you're very confident in this area, whatever way you have learned, because ICI doesn't write it like this, they write it differently. Net answers, everything will match. We call it as processed production, processed production, less normal loss, expected output, actual output, abnormal loss or gain. Abnormal loss or gain. Opening stock, add input, total input, less closing stock, process production, less normal loss, expected output, actual output, abnormal loss or gain. This is the format we use. We'll first do process 1. Once that is over, I can move to process 2. That is over, I can move to process 3. Opening stock is not there in the question. Opening stock is 0. Opening stock is 0. Process 1, we started with an input of 40,000 units. We started with an input of 40,000 units. Total input is also 40,000. No closing stock in this question. Process to production 40,000. Process to production is 40,000. Normal loss given in the question is percentage of normal waste 5. Percentage of normal waste is 5. So normal loss is 5 percentage of normal losses 5 percentage of my input. 5 percentage of my input. Whenever it is silent, it's on input into 5%. Expected 38,000. Expected is 38,000. Expected 38,000. First process actual is also 38,000. Actual is also 38,000. So technically no abnormal loss, no abnormal gain. In the first process, I do not have abnormal loss as well as I do not have abnormal gain. Second process, opening stock is 0. Input is now whatever is the actual output. Whatever is the actual, not expected. Whatever is the actual, 38,000. Total input is 38,000. Closing stock 0. Processed 38,000. Processed is 38. In the second process, my loss is 7%. Loss is 7% of input. Third process, we will not do it. Let's not waste time on that. You can do it later. The space is only given so that you will do it later. 7%.
Expected 35,340. Expected is 35,340 and actual is 34,600. Actual is 34,600. So I wanted 35,340. I wanted 35,340 and actual is only 34,600. Actual is only 34,600. This scenario is abnormal loss. I've got lesser than what I wanted. How much is the abnormal loss? 740 in bracket abnormal loss. This 734,600 will be the input of the next process. We are not doing third process. I don't want you to do it now. Otherwise, your focus will shift on writing process 3 numbers. Process 1, process 2. Any doubts on this? Next, process 1 account. Process 1 account. Debit particulars, units, amount. Credit side particulars, units, amount. Process 1 account. Process 1 account. Particulars, units, amount. Particulars, units, amount. There is no opening stock. It's like a trading account. There's no opening stock. To material. To material. We track units as well as amount. 40,000 units. 3,20,000 value. To material. 40,000 units. 3,20,000 value. Then there is to sundry material. 1,20,000. All expenses you'll have to write in debit side. To sundry material. 1,20,000. To material 40,000 and 3,20,000. Sundry material 1,20,000. To direct labor 80,000. Direct labor 80,000. And to production expenses 40,000. To production expenses 40,000. To material, to sundry material, to direct labor, to production expenses. Once amounts are written, I have to tally the units by writing normal loss, abnormal gain, and transfer to next process. So by normal loss in the first process was 2,000. By normal loss 2,000. No abnormal loss, no abnormal gain. By process 2, we transferred 38,000. We transferred 38,000. First segment, write the amounts. Second segment, tally the units. Second segment is tallying the units. My units, debit side units is 40,000, credit side units is also 40,000. Both are tallied. This is second working. Third working is you will have to write the 2,000 units normal loss multiply with realizable value. Multiply with realizable value. Realizable value given in the question is 70 paise. Realizable value is 70 paise. So 2,000 into 0.7. 2,000 into 0.7. Clear? In this question, I do not have more items as balancing figure. Abnormal loss, abnormal gain, and all is not there. In case that is there, cost per good unit will be very critical. But still, let's calculate it right below this. Cost per good unit is equal to all expenses minus sale value of normal loss divided by expected output. All expenses minus sale value of normal loss divided by expected output. Expense total, I'm telling you the number is 5,60,000. The total in the debit side is 5,60,000 minus normal losses 1,400. Normal losses 1,400. Expected output, it's not divided by actual output. Expected in this question was 38,000. Process 1, input output statement, you will see 38,000. Input output statement, you will see 38,000. What's the number you get cost per good unit? 14.7 per unit. This cost will be multiplied for abnormal loss, abnormal gain, transfer to next process. So in the concept book, if you see the concept, it says whatever cost per good unit we calculate, it will be used to value. That is a valuation rule. For normal loss, realizable value, which we have already done, everything else is multiplied with cost price. Everything else is multiplied with cost price. So 38,000 into 14.7 into 14.7, and both the side will tally. Both the sides will tally. 38,000 into 14.7. I could have also taken it as balancing figure, but you'll understand the importance when I go to the second process. 38,000 into 14.7. Any doubts on this? Clear? Then comes the process 2 account. Process 1 is done. Process 2 account, same format. Debit and credit. Particulars, units, amount. Process 2 account. Process 2 account. To process 1. To process 1 account. Process 1 account. We wrote in the process 1 account by process 2. What was the value? How many units? 38,558 600. 38,558 600. To process 1, 38,558 600. Then various expenses are given in the question. They have given expenses like sundry material, direct labor, production expense, all that we have to write. To sundry material, 40,000. To direct labor, 60,000. To production expenses, 40,000. To production expenses, 40,000. Whatever expenses are there, everything has to be returned. Then by normal loss, let's close the units part of it. By normal loss, how many units normal loss? Look at your input output statement. 2,000. How many units abnormal loss? By abnormal loss, if you have abnormal gain, you'll have to debit it. By process 3, by process 3, how many units process 3 transferred? 34,000. Units are tallied. Units are tallied. Units are tallied. Any doubts on this? So first I write the debit side expenses. Second, I tally the units. I tally the units. Any doubts on this? Normal loss multiply with realizable value, which is given in the question. 80 paise into 0.8 into 0.8. I have two missing information. So this two missing information you will have to do with cost per good unit. You will have to do it with cost per good unit. Any doubts till this? Cost per good unit is all expenses. 698 600. All expenses 698 600 minus sale value of normal loss. All expenses minus sale value of normal loss divided by expected output. What is expected output?
35,000. Give me a 4 decimal answer. 7078. 19.7078. Any doubts on this? Any doubts on this? This I'll multiply with abnormal loss as well as with process 3. I will multiply, but I'll not write the amount because rounding of differences can be there. I'll take it as balancing figure. Listen here. This do into 19.7078 and write the figure. Into 19.7078, you get 14,584. 14,584. 14,584. Clear? Second item, if I multiply, see here, if I multiply, the account is giving 681 890, it will not tally, it will not tally. In order to ensure it tallies, I'll take it as balancing figure, but I'll do that calculation in the calculator. I'll take it as balancing figure, but the calculation will be done in the calculator. I'm going to do the calculation in the calculator, but I'll take it as balancing figure. I'll take it as balancing figure. 681 triple eight. This ensures the account is tallied. If you multiply it to 681 890, 2 rupee difference is there. Process 3 I'm not doing, you will practice it later on. After this I have to do normal loss, abnormal loss and abnormal gain account, which I'm going to explain in the second question. I'm going to explain that in the second question. Any doubts on this question? Any doubts? This is a basic question where sales is not there. Second question you will see with sales being there. Now let's come to this. This came in May 24 exams. Meta Company Limited is engaged in the production of product Trio, which passes through two different processes, process P and process Q. Information obtained from books is as follows: raw material used, raw material cost per unit, wages, expenses, selling price, wages, expenses and selling price. So there is some data on selling price, which means sales is happening, production overhead is 3 lakh and absorbed as a percentage of direct wages, that is in the ratio of direct wages. We'll have to distribute this. Actual output is 9,200 and 6,400. 3/4 of P is passed on to Q and balance was sold. Entire output of Q is sold. In process Q entirely we have sold. Management and selling expenses 1,70,000. These are not allocated. These are not allocated to the process. So this will directly go to my P&L account. This will directly go to P&L. Normal loss is 6%, 10%. Loss is 5 rupees and 8 rupees. There is no reference of any degree of completion or any opening work in progress or closing work in progress. Assume that P and Q are not responsibility center. For solving, I will keep it as P, not a responsibility center. Q is a responsibility center. So both working you will understand. P is not a the solution has not a responsibility center. What difference does it make? You will understand when we write the answer. So I will keep the question as P is not a responsibility center. Q is a responsibility center. What difference does it make? You will understand when we do the solution. So let's first do input output statement. Input output statement. Let's start. Working note 1, input output statement. Particulars P and Q. Input output statement. Process P, process Q. Process P and process Q. Process P and process Q. Right, opening stock, add input, total input, less closing stock, process production, less normal loss, expected, actual, abnormal loss or gain. Abnormal loss or gain. Opening stock is 0. First process has an input of 10,000 units. Raw material used 10,000. So input is 10,000. Total input is again 10,000. Total input is 10,000. First process raw material used is 10,000. Total input 10,000. No closing stock. Processed production 10,000. Processed production is 10,000. In the first process, my normal loss is 6%. Second process is 10%. So normal loss is 6% of input 600. 6% of input 600. Expected 94. Expected 94. Actual I think is 92. Actual is 92. Abnormal loss 200 units. Abnormal loss. I've got lesser than what is needed. I've got lesser than what is needed. In a normal scenario, whatever is the output of the first process will become input in the next process. But here I've said 3/4 was passed on. 3/4 was passed on and balance 1/4 is sold. Balance 1/4 is sold. So 3/4 is 6,900. 6,900. 9,200 into 3 by 4 into 3 by 4. 6,900 went to the next process. Total input 6,900. No closing stock. Processed production 6,900. Normal loss in this process is 10% of input. Normal loss is 10% of input. Minus 690. Expected 6210. Actual is 6400. 190 abnormal gain. 190 abnormal gain. There is an abnormal gain because I've got more than what is needed. I wanted 6210. We ended up getting 6400. We ended up getting 6400. More than what is needed. More than what is needed. Technically called as abnormal gain. Technically called as abnormal gain. $190 units abnormal gain. Clear? Like the usual manner, let's do a process account now. First is process P account. Process P account. Only thing add on is the sales. And there I'll explain not a responsibility center and responsibility center difference. Process P account. Process P account. To raw material. To raw material. We have added an input of 10,000 at 80. We have added an input of 10,000 at 80. So 10,000 units into 80. Raw material 10,000 into 80. 10,000 units at the rate of 80 per unit. At the rate of 80 per unit. You keep writing but understand the workings. Okay, if you are not understood and writing, no use of that. Understand and then write. Next is various expenses. To direct wages. To direct wages 52,000. Direct wages 52,000. To direct expenses 8,600. To overhead cost. To overhead cost. To overhead cost. Question has said this 3 lakh split in this ratio. Technically, this ratio is 2:3. Technically, the ratio is 2:3. 52,000 is to 78,000. 52 is to 78 is technically 2:3. Or you can say 3 lakh divided by 1 lakh 30. The total of that multiplied with 52. Multiplied with 52. You will get amount as 1 lakh 30,000. Expenses all written. There is a management and selling expense which will not come here. Management and selling expense is not going to come here. Then by normal loss 600. By normal loss we'll have to tally the units. We'll have to tally the units by normal loss, by abnormal loss 200, by abnormal loss 200, by cost of sales, by cost of sales. This is unit sold, okay? Whatever unit sold. Why it is called cost of sales, I'll explain. By cost of sales, 2300 units we sold. 2300 units we sold. 9200, one fourth sold, three-fourth went to the next process. One fourth is sold, three-fourth went to the next process. By cost of sales, by process Q account, 6900 units are tallied. Step 1, debit side entries. Step 2, checking the units. Checking the units. 10,000 in the debit side, 10,000 in the credit side. Units have got tallied. Units have got tallied. For the normal loss, we will write the amount. Normal losses, number of units of normal loss into the realizable value. Into the realizable value. Realizable value given in the question is 5. So 600 into 5. 600 into 5. 600 into 5. For balance, you will have to do cost per good unit. Cost per good unit is equal to all expenses 980, 600 minus 3000 minus 3000 divided by expected output was 9400. What's the cost per good unit? 104. Cost per good unit is 104. Now, listen, if you are not a responsibility center, in the credit side, you cannot write by sales. In the credit side, you cannot write by sales. You will write by cost of sales. This will go to the debit side of P&L. And in the P&L, you will write by sales. For process P, I'm explaining this approach. Q, I said it is a responsibility center. I'm changed the problem to explain the concept. So just multiply everything with 104. Everything with 104 and close it. Everything is multiplied with 104. Selling prices, I think 130, does not matter. Whatever be the selling price, it does not matter. I'm not going to write sales. I'm not going to write sales. I'll just write by cost of sales. We'll just write 104. What happens if you write sales, you'll understand in process Q, where I've changed the question as it is a responsibility center. Any doubts on this? Then process Q account, process Q account, process Q account, to process P, to process P account, 6,900, 717, 600, 6,900 and 717, 600, to process P, process P, and to direct wages, direct wages, 78,000, direct wages is 78,000. Then we have direct expenses, 11,100, 11,100, to production overhead, production overhead, 3 lakh. I'll be splitting in that ratio. Amount will be 1 lakh 80. Amount will be 1 lakh 80. We have written the debit side items, various expenses we have written. We have written the various expenses by normal loss. By normal loss, 690. Normal losses 690. I think we have abnormal gain here. Two abnormal gain. Two abnormal gain. How many units of abnormal gain? 190. Two abnormal gain 190. Two abnormal gain 190 by sales, not cost of sales. It's a responsibility center. I'm going to record sales. I'm going to record sales in this process. I have assumed it to be a responsibility center. 6,400. 6,400 units got tallied. Units got tallied. First step is writing all expenses. Second step is tallying the units. Tallying the units. You go order by order, you'll be able to complete it. Then normal loss, some realizable values given in the question. Normal loss realizable values 8 per unit. So multiply with 8. 690 into 8. Below this, cost per good unit is equal to 986,700 5520. What was the expected output in your input outputs? 6210 158 158 986,700 minus 5520 divided by 6210. I get 158 per unit. I get 158 per unit. Any doubts on this? Clear? Any doubts on this? Okay, now listen. I multiply this with 158. I multiply this with 158. Abnormal gain is multiplied with 158. Abnormal loss with 158. Transfer to next process with 158. Cost of sales also 158. But sales can't be 158. Sales selling price is given. How much is the selling price? 190. Selling price is 190. So multiply with 190. Multiply with 190. If you multiply, this is called responsibility center. This is called responsibility center. If you multiply with 190, unfortunately, amounts are not tallying. That's because two P and L, 6,400 units. In this, I earned 190 minus 158. This is my profit. 190 price, 158 cost. 190 minus 158. 190 minus 158. This is technically called as responsibility center accounting. Responsibility center accounting. 190 minus 158. 190 minus 158. The profit per unit is 32 rupees. The profit per unit is 32 rupees and both the sides got tallied. Both the sides got tallied. Clear? This is called as responsibility center and non-responsibility center accounting. If it's a responsibility center, record sales, record profit. Not a responsibility center, record cost of sales, go to the P&L. Cost of sales will go to the debit side of P&L. Sales will be recorded in the credit side of P&L. Sales will be recorded in the credit side of P&L. Any doubts till this? Now I'm going to explain normal loss, and abnormal gain accounting, which you need not write. Just be in listen mode. Very simple analysis. If you see here in process P, I have processed 10,000 units. I have processed 10,000 units, but I got only 9,200, which means 800 is actual loss. 800 is actual loss in the first process. In the first process, 800 is actual loss. That can be broken down as 600 normal, 200 abnormal. 600 normal and 200 abnormal. There is a journal entry. Journal entry is very simple. Bank account debit. This entry alone, if you remember, that is sufficient. Bank account debit 800 into 5. Bank account debit 800 because you will sell the entire 800 units. Entire 800. 2. Normal loss 600 into 5. 2. Abnormal loss 200 into 5. 2 normal loss 600 into 5 and 2 abnormal loss 200 into 5.
When it comes to process 2, I processed 6,900. I processed 6,900 and I got an output of 6,400, which means my actual loss is 500 units. Actual loss is 500. I processed 6900 and got an output of 6400. Got an output of 6400. Actual output is, sorry, actual loss is 500. How I can say 500 now as 500 can be broken down as, what was the normal loss in this process? 690. Abnormal gain minus 190. Abnormal gain is minus 190. Technical entries, bank account debit 500 into realizable value for the second process is 8. 2. Normal loss 690 into 8. 2. Abnormal gain negative. I cannot write negative, so it will go to the debit side. It will go to the debit side. I cannot write negative amount in the journal entry. I'm going to sell what? Actual loss. I'm going to sell actual loss. Once you sell this, if you do posting of this in the account will look like this. See, whatever journal entry I said, abnormal loss, this you would have written in the process account. This you would have written in the process account. This comes from the journal entry. This comes from the journal entry. By bank account. By bank account comes from the journal entry. By costing P&L is balancing figure. By costing P&L is balancing figure. Similarly, this entry comes from the process. This entry comes from the process account. This should be not to bank account. Sorry, there's a mistake here. To normal loss account. To normal loss account. If you look at the journal entry said bank account debit, abnormal gain account debit to normal loss. To normal loss. And the net amount will go to P&L. Net amount will go to P&L. Now, if you see in the solution, just give me a minute. In the solution, sales is recorded here. In one process, I told not to record it because I changed the problem. So sales you record here, cost of sales you record here. To process one, you would have written by cost of sales in your notebook 239, 200. Second process, you wouldn't have written cost of sales. We directly recorded the sales and directly the profit will come. Directly the profit will come, which is the gap between sales and cost of sales. One important point is if P&L alone is asked and they don't ask abnormal loss or abnormal gain, net abnormal loss or net abnormal gain is equal to whatever units into cost price minus realizable value. For example, process 1 cost price was 104. Cost price was 104. Realizable value is 5 rupees. Realizable value is 5 rupees. So my net abnormal loss is 200 into 99. 200 into 99, which is 104 minus 5. 104 minus 5. And similarly, abnormal gain, cost per good unit was I think 158. Realizable value is 8. Realizable value is 8. Gap is 150. 150 into 190. 150 into 190. Understand the journal entry again. Very simple. Find out the actual loss. What is the actual loss? What you process and what you get. What you process and what you get. The gap is called actual loss, which can be broken down as normal loss, abnormal loss, or normal loss and negative abnormal gain. Negative abnormal gain. Journal entry for sale of scrap is bank account debit. You receive money to normal loss account to abnormal loss account. In case you have abnormal gain, negative amount. So I debit it. I debit it, and the net amount will go to P&L. Net amount will go to P&L. So this is double entry posting. I recognize it from the process account. From the process account, and then I sell the actual loss. I sell the actual loss, and net amount will go to costing P&L, which is cost price minus realizable value. Cost price minus realizable value. Clear? Any doubts in this? Any doubts in this? And in case I have sales entry and it's a responsibility center, not a responsibility center, to accounting. Responsibility center records sales in the credit side, which is what you did in the second process, and recognize profit in the debit side, which is units into selling price minus cost price. Units into selling price minus cost price. If it's not a responsibility center, units sold into cost per good unit is called as cost of sales, and sales and cost of sales will be recorded in my P&L account. Will be recorded in P&L account. Okay. There can be some question where they will talk about a term called normal loss
And in the normal loss, they'll give two types of normal loss. One is called weight loss, second is called scrap loss. If they give you two numbers, only thing is weight loss cannot have any realizable value. What is weight loss? Is you're not able to see it itself. You're not able to see the product itself. Scrap means you're able to physically see and sell it. You're able to physically see and sell it. So in normal loss, I can have two types of normal loss in a rare situation. One is called weight loss. Weight loss cannot have any realizable value because you cannot see it. Petrol evaporation is called weight loss. You cannot see it, that's all. There is no realizable value. But if I'm using some steel and all, some scrap arises, that scrap can have a realizable value. That scrap can have, if the question says realizable value is 20 rupees, it's only for the scrap component and not for the weight loss component, not for the weight loss component. Next is we come to a concept of equivalent units. Equivalent units comes into picture whenever a question gives data on degree of completion, or it says 2/3 completed, 1/3 completed, 3/4 completed, which means it's a work in progress. To value the work in progress, I'll have to convert the partially completed units. Partially means 40% complete, 60% complete, 80% complete into fully completed units using this calculation. Number of units into degree of completion. Number of units into degree of completion. We technically have four types of question. FIFO method 1 material, FIFO method 2 material, weighted average cost 1 material, weighted average cost 2 material. In that FIFO method 1 material, I'll do detail. 2 material, when I do some changes in steps. Weighted average cost 1 material, again some changes in step. Weighted average cost 2 material, again some changes in step. FIFO method 1 material is what is very critical for us to understand. I will explain the steps as I do the question. Let's come to question 3. The heading says FIFO method 1 material. Don't worry about the heading which is given there because in an exam situation it will not come. How to identify, I'll explain as we proceed. Following details are related to the work done in process A during the month of March 2007. Opening work in process. Opening work in process. 2000 units. Material full work done. Material full work done. Labor 75% done. Overhead 70. If all the three are 100% done, it is a complete product. It is only 100, 75 and 75. In the current year, we will do the balance work. We will do the balance work. Material introduced, direct labor, overheads, unit scrapped. What is unit scrapped? Is normal loss plus abnormal loss minus abnormal gain. Unit scrapped is actual loss. Actual loss is nothing but normal loss plus abnormal loss minus abnormal gain. For the unit scrapped, I have a degree of completion. For the unit scrapped, I have a degree of completion. That is, whatever defective I find, I can find it at some stage. So this I have found it at the last stage. That is 100% material cost spent and labor and overhead 80% spent. Closing work in progress is there and actual output. Normal loss is 5% of total input. 5% of total input. Normal loss can be a percentage of input, total input, process production, actual output, or anything the question gives. Here it is given 5% of total input with a realizable value. We are required to do all the statement of equivalent production cost, distribution of cost, process A account, normal loss account, abnormal loss account. All this is straightforward, simple calculation. What we will first do is open the process account. Open the process account. In the debit side, when you open, if you find multiple entry for material expenses, it will become 2 material, 3 material, 4 material problem. Otherwise, it's a 1 material problem. Open process A account. Open process A account. Process A account. Particulars units amount. Particulars units amount. Process A account. To opening WIP. To opening WIP, we'll write the debit side first fully. To opening WIP, 2000 units, 1,40,000 rupees. Two opening WIP, 2000 units, 1,40,000 rupees. And two various expenses which are given. They have given two material cost 38,000, 14 lakh 80, 38,000 and 14 lakh 80, 38,000 and 14 lakh 80. Two labor cost 359, two labor cost 359, two overhead cost 1077, two overhead cost is 10 lakh 77,000. I've recorded various expenses which are there in the debit side of P&L. Various expenses which are there in the debit side of technically P&L or process account. Technically, it's like a P&L, but name is called process account. Any doubts on this? Clear? Now, is the only one entry for material cost. It's a single material problem. You will see later on 2-3 entries for material cost. Main material, sundry material. Like the first question we did here. Raw material, to process one account, to sundry material. This is a two material problem. This is like a two material problem, but it was non-equivalent unit, so I did not get into this discussion. Now, once this is done, I identify whether it's a one material problem or a material problem. This is a one material problem. Second step you are not going to do, you're just going to listen, which is input output statement. I don't want you to repeat the input output part. We have already done two questions, you will understand it now. In the question, we will read and write these values. We'll read and write these values, but I don't want you to do the input output statement. What is the opening stock given in the question? Opening stock is 2000. Opening stock is 2000 units. Input 38,000. Total input 40,000. Closing stock 2,000. Processed production 38,000. Normal losses 5% of total input. Normal losses 5% of total input, which is into 5%, 2,000. Expected output 36. Expected output is 36. Actual output is 35,000. Abnormal loss 1,000. And anyway, this was directly given in the question. The question said units scrapped is 3,000, which is normal plus abnormal. Normal plus abnormal. So I will do an input output statement which will tell me how much is the abnormal loss or abnormal gain and normal loss. Any doubts on this? This is self-explanatory. In this step, one extra item we add. This is called units started and completed. The importance of this you'll understand in the next working note. What is unit started and completed is those units. How many units have completed is this? These are completed units. In this completed units, some were started in the previous year. Some were started in the previous year. That's called opening WIP. So from what you completed, deduct the opening WIP. From what you have completed, deduct the opening WIP. You will get units started and completed. You will get units started and completed. So from this 35,000, I subtract closing work in progress 2,000. Will get 33,000. These are units which are started as well as completed in the current year. Started as well as completed in the current year. Any doubts on this? Then working note 3. Write working note 3. Statement of equivalent units. Statement of equivalent units. Statement of equivalent units. Particulars, units, whatever expenses we have in a question. In this question, we have three expenses: material, labor, and overheads. So for these three, we'll have two subcolumns: material, DOC, equivalent units, labor,
DOC equivalent units, overheads DOC equivalent units. Particulars units, material, labor, overheads with degree of completion and equivalent units. Degree of completion and equivalent units. Once these steps are understood properly, balance will become very simple, just a formality. These steps you will have to understand it clearly. Now, first we will reconcile the units again here. First item is called further work on opening WIP, right, as it is. Further work on opening WIP. Further work on opening WIP. How many units of opening WIP in the question? 2000. We will write other items later. Further work on opening WIP. Units started and completed 33,000. Units started and completed 33,000. Normal loss. How many units is normal loss? 2,000. Abnormal loss. This question it's not there, but you just write abnormal gain, negative triplex. Negative triplex means negative units. Abnormal gain, if you have, you will be writing negative units. Abnormal gain, negative units. And closing WIP. Closing WIP, how much? 2,000. Total will have to match total input of the input output statement. This has to match total input. This has to match total input of the input output statement step. Total input of the input output step. So I have a total input of 40,000. 2,000 is opening WIP in that. 33,000 is started and completed. 2,000 got lost as normal. 1,000 got lost as abnormal. And 2,000 is staying as closing WIP. Any doubts in this? Now, rule listen. What we are trying to find is how much work did we do in the current year. So listen, the rule is 100 minus given percentage. Given percentage, some degree of completion is given in the question. That is the work done in the previous year. That's the work done in the previous year. Extra work in the current year is called 100 minus given percentage. For example, material is given as 100. So this year extra work is 100 minus 100, 0%. This year extra work is 100 minus 100, 0%. Labor 75 is given. Extra is 100 minus 75. Extra is 100 minus 75. Overhead is 75 given. Extra is 100 minus 75. So first item, right? 100 minus given percentage in the side. 0%. 0%. 25% and 25%. Equivalent units I'll explain in some time. 0, 25, 25. 0, 25 and 25. What is 0? 100 minus 100. What is 25? 100 minus 75. And again 25 is 100 minus 75. Unit started and completed, self-explanatory. It started as well as completed in the current year. So entire 100% work done. 100% in all the three. Entire 100% work. Rule is 100%. Full work done in the current year. Full work done in the current year. Normal loss units do not form part of my denominator. So I remove it from the denominator. So technically they are 0. Technically they are 0. So degree of completion is 0% for normal loss. 0% for normal loss. Now, an abnormal loss can be identified anytime I want. I can identify it in step 1. That is moment I incur 10% cost. Sometimes I can identify after 50% cost. Sometimes I can identify after full work is done. Here, units have been scrapped after wasting 100% material cost, 80% labor. Units scrapped and degree of completion is 180. 180. So this rule is given percentage. Rule is given percentage. So 100% work you have done, 80% done, and 80% done.
100, 80 and 80. If nothing is given, then I'll take 100%, assuming defect is identified. Once everything is done, I identify the defect. 100, 80 and 80. Abnormal gain means it is a fully completed unit. In question, not there. If it's there, it will be 100%. It will be 100%. So I'm writing 100%. Technically, in this question, it's not there. In this question, it is not there. 100%, 100% and 100%. You would have written it. I'm removing it from my screen because I don't have the abnormal gain. But technically, it has a degree of completion of 100%. Closing WIP means whatever work is done is called given percentage. Next year, you will do 100 minus given because next year it will become opening WIP. So the rule for this is given percentage. The rule for this is given. And questioner said closing work in progress also 180. Closing work in progress is also 100 percentage and 80 percentage. So 100, 80 and 80. Now your job is nothing but multiply units with the degree of completion. Units with the degree of completion. You will keep multiplying units with the degree of completion. Units with the degree of completion. Please do only material cost. Others I don't want you to do because you will waste time there. I just want you to understand the concept. So units with the degree of completion, put a total. Other two you can see in the screen. One I want you to close it so that you understand the working. Balance you leave space. Later on you can fill it also. This is one of the requirement of the question, statement of equivalent production. Statement of equivalent production, first requirement of the question. I have done it as working note 3. I have done this as working note 3. Any doubts on this? Clear? Next, working note 4 is statement of cost per unit. Statement of cost per unit, particulars, material, labor, overhead. Whatever cost we incur, we'll have to write it. Material, labor and overhead. The amounts for this will come from the debit side of the process account. The amounts for this will come from the debit side of the process account or from the question. Cost incurred. Look at your debit side of the process account and tell me what is the material cost incurred. 14 lakh 80,000, right? 14 lakh 80. Labor cost 3 lakh 59. Overhead cost 10 lakh 77. 359, 1077 and 1480. 1480, 359 and 1077. This is there in the debit side of the process account, right? Cost incurred 1480, 359 and 1077. From the cost incurred, we subtract sale value of normal loss. Like we were doing cost per good unit, we were subtracting. Here also we subtract. Normal loss is 2000 units. Realizable value given in the question is 20 rupees per unit. Given in the question is 20 per unit. So sale value of normal loss is 2000 into 20. 2000 into 20. I subtract it only from material cost. I subtract it only from material cost. So 2000 into 20 minus 40. Minus 40. Net cost incurred. Net cost incurred 1440, 359, 1077. Equivalent units, cost per equivalent unit. Equivalent units is earliest step, 36,000. You can write 35,900 in your notebook. It may not be there, but you can write 36, 35,900 and 35,900 and we get 40 rupees, 10 and 30. If it's in decimal, I'll do 4 decimal to avoid the rounding of gap. 40, 10 and 30. This is technically in the question statement of cost. Statement of cost. Any doubts on this? Clear? Then working note 5. Statement of distribution of cost slash valuation. Question has used the term distribution of cost. Some question may use the term valuation. Statement of distribution of cost slash valuation. Now this is a very simple step. Copy paste particulars, material, labor, overhead and a total. Material, labor, overhead and total. This step fully you may not be able to do because in your notebook I have not told you to write certain items. What we do is copy paste the items from here. I copy paste the items from here and I'm going to value all this. Further work on opening WIP, unit started and completed. Normal loss no need to write, that's already valued. Normal loss leave it. Abnormal loss you write it. Closing WIP you write it and total. Further work on opening WIP, unit started and completed, abnormal loss, closing WIP. Now, what this step means is assuming you have this in your notebook, okay? What you will do is you will take 0 and multiply with 40 rupees. Material cost is 40. Then 33,000 with 40 rupees. The order could be different for us in here. Then 2,000 into 40. 1,000 into 40. 500 into 10. 33,000 into 10. 1,600 into 10. 800 into 10. 500 into 30. 33,000 into 30. 1,600 into 30. 800 into 30. Take the units from there and multiply with the cost per unit, which is 40, 10 and 30. Now I am doing it here. Further work on opening WIP, 0 was there into 40. 0 into 40. This step you be in listen mode. Format you write it, but be in listen mode. I have taken the units from there, multiplied with 40 rupees. Multiplied with 40 rupees. Again I take the units, multiply with 10 rupees. Multiply with 10 rupees. Again I take the units, multiply with 30 rupees. Multiply with 30 rupees. And we put a row wise total as well as a column wise total. The column wise total has to match net cost incurred. Listen, this is otherwise called as distribution of cost. What we are doing is this cost of 14 lakh 40 I distribute to opening WIP, unit started and completed, abnormal loss and closing WIP. That 14 lakh 40 is distributed to various items. Distributed to various items. 3 lakh 59 distributed to various items. 10 lakh 77 distributed to various items. Clear? Any doubts on this? So this you would have written particulars, material, labor, overheads total, various items total. Filling part you will do it later. What you do? Take the units from there, cost per unit from here and do multiplication. Units from one place, cost per unit from the other place and do multiplication. Any doubts on this? Any doubts on this? Now at the end of it, one item I want is transfer to next process. What I transfer to next process is whatever I complete fully. Whatever I complete fully. And what I complete fully is units started and completed and the opening WIP and the opening WIP. So transfer to next process is equal to write opening WIP plus units started and completed. Please write. Transfer to next process is equal to opening WIP plus units started and completed. Opening WIP plus units started and completed. The opening WIP will have two components. One value is given in the question and one value we have calculated. Extra work we have calculated. Last year work is 1 lakh 40,000. Last year work is 1 lakh 40,000. Extra work is further work 20,000. Further work is 20,000 and unit started is 2640. All put together. What's the value of all of this put together? Now, all these items will go to the credit side of the process account. So, it's a lengthy area, can't help it. Some exam question may ask only statement of equivalent units or statement of cost per unit. Statement of equivalent units and statement of cost per unit. They may not ask everything. Some question may say do till valuation. and some may ask the process account also. If process account is asked, 5 steps you have to do. First step, debit side of the process account. Credit side we have to fill now. Credit side we have to fill now. Input output statement. In that I calculate an item called units started and completed. Then we do statement of equivalent units where we have certain rules. Rules is opening WIP 100 minus given, closing WIP given, units started and completed full 100% work, normal losses 0, abnormal losses given, abnormal gain is 100% with units being negative, Then from there on, we move to statement of cost per unit. Debit side amounts you write, deduct the sale value of normal loss, net cost incurred, get the cost per unit and do the multiplication. Now listen, how my process account will close is in the credit side. In my printed material, sometimes the order could be I do process in the end or I do it in the beginning. That doesn't really matter. Normal loss 2000. Value for normal loss is 2000 into 20. Abnormal loss value comes from here. 72,000. Abnormal loss value comes from here. Closing WIP value comes from here. Transfer to next process value comes from here. So normal loss, closing WIP, transfer to next process, and both the sides will tally. Both the sides will. Debit side will come from the question. Credit side will come from valuation. Credit side will come from valuation step. Clear? Any doubts on this? I'll repeat the steps here. First, I open a process account. Then I do input output statement. In this, I calculate units started and completed. I calculate units started and completed, which is actual output minus the opening WIP. Then we do statement of equivalent units where this is the rule. Further work 100 minus given, units started and completed 100%, normal loss 0%, abnormal loss given percentage, abnormal gain 100%, and closing WIP given. No need to remember, logic is very simple. Further means 100 minus, unit started and completed means full work is done. Normal loss obviously will not come. Abnormal loss depends on when you identify a scrap. Abnormal gain is a fully complete unit, so 100%, and closing WIP whatever is completed. Then I calculate cost incurred. This is from debit side of the process account. From the debit side of the process account, sale value of normal loss, net cost incurred, and I subtract equivalent units. In this, be very clear, sale value of normal loss is to be subtracted only from the material cost, and then we do multiplication. Equivalent units as per working note 3, cost per equivalent as per working note 4. Various items are valued and transfer to next process, opening WIP in the question. Further work on opening WIP as per your valuation plus units started and completed. Any doubts in this? Yep. I'll take a 15 minutes break and then explain the other methods. Okay. What I did now is called FIFO. Guys, please. What we did is FIFO method and one material. Similar steps we are going to do for other situation. You will understand them. Let's come to question 4. From the following information for the month ending October 2005, prepare process account for process 3. Use FIFO method. When to use FIFO, when to use weighted average, also explain once I'm done with everything. Opening WIP, transfer from process 2, transfer to process 4, closing stock, unit scrap, direct material, direct wages, production overhead. What we will be doing is we'll first do the process account debit side. That will tell us whether it's a one material problem or a two material problem. Then I do an input output statement, no changes in that. 1 and 2, step 1, step 2 in all the 4 remains same. Let's start. Process account, open process account. Process account. Particulars, units amount. Process 3 account they want us to prepare. Process 3 accounts. Particulars, units amount, particulars, units amount. Process 3 account. The question has given certain items here. We'll have to keep writing them in the debit side. Once we write, you'll understand whether it's a single material problem or a two material problem. The heading says two material, but you will understand it only when we do the account. Two opening WIP. Two opening WIP. 2000 units, 25,750. 2000 units and 25,750. Two opening WIP, 2000 and 25,750. Two process two, 53,000 units and 411,500. Whatever entries has to come in debit side. 53,000, 411,500. Two process two, 53,000 and 411,500. Two process two, then two direct material. Two direct material. How much the direct material expense? 197,600. Two direct wages, 97,600. Two production overhead, 48,800. Two production overhead, 48,800. Now, if I look at this question, this is one raw material expense and there is another raw material expense. So, two process two is called main raw material and the other direct material is called sundry raw material. That is called as our material one and material two. It's a two material problem. It is a two material problem. You see two entries for material cost. Two process two, that is one material cost, and second entry is two direct material. Second entry is two direct material. This is technically called as a two material problem. Now, what changes happen in two material? We'll have to see. Any doubts first on this? How to identify one material versus two material? Here, two process two is there and two direct material is there. Two direct material is there. Step two, you will not be doing it, which is your input output statement, which I'll do it, and then other steps you will do along with me. Input output statement. Opening stock given in the question is 2000 units. Opening stock is 2000. Input is 53,000. Total input 55,000. Closing stock is 5,000. Processed production 50. Normal loss given in the question is 5% of production. Production means 5% of processed production. 5% of processed production. It says 5% of production, which is 5% of processed production. Expected output 47,500. Expected 47 is the actual output there in the question. 48,000. Abnormal gain. Abnormal gain, which is 500. Abnormal gain is 500. And unit started and completed is what I transferred 48,000 minus opening stock. 46,000 is unit started and completed. 46,000 is unit started and completed. Unit started and completed is transfer to next process minus the opening work in progress. No changes in these steps. In fact, in this question, ideally they should not have given this number. I could have worked with this also. Unit scrap 2000 means normal loss 2500, abnormal gain 500, because loss is lesser than 2500. Loss is lesser than 2500. Normal loss is 2500. Abnormal gain is 500. Output is balancing figure. Output is balancing figure. Now, after this step, I have to do statement of equivalent units. Working note 3, right? Statement of equivalent units. Statement of equivalent units. Now, for every expense, I will need a column. So, listen, particulars units, material 1, material 2, labor, overhead. Material 1, material 2, labor and overhead. Material 1 is the main raw material. Material 2 is the sundry material. So, particulars units, material 1 or material A, you can give any name to it. Material A, DOC equivalent units. Material B, DOC equivalent units, labor DOC equivalent units, overheads DOC equivalent units, particulars units, material A, material B, labor and overheads. Material A, material B, labor and overheads. Degree of completion and equivalent units. Same logic we are going to do. We are going to first close out on the units part, total units, where first item is further work on opening WIP. Further work on opening WIP, which is 2000 units. Further work on opening WIP 2000 units started and completed 46,000. We have to reconcile the total input. We have to reconcile the total input. Closing WIP 5,000. Normal loss 2,500. These numbers you may not have because you did not do the earlier step, but these are the values. Normal loss 2,500. Abnormal gain is negative 500. Total. This has to match total input. Steps remain same. Just small subtle changes I'll be doing, that's all. 55,000, which is the total input. Now listen, everything remains same. Further work on opening WIP rule is 100 minus given percentage. Unit started and completed 100 percentage. Closing work in progress given percentage. Normal loss 0 percentage. Abnormal gain given 100%. 100%. Only change you have to do is material A. You should never look at the question. People make a mistake of looking at the question. So listen, material A is everything is 100%. Material A rule is everything is 100%. Some changes I'll explain. Material A rule is always 100%. So opening WIP will be 100 minus 100 0. 100 minus 100 0. Material A is always 100% complete, which means when it came as opening WIP, it was always fully complete. So here this is 0. This is 0. Everything else is 100%. Normal loss will obviously be 0 and opening WIP is also 0. Everything else, don't look at the question. Don't look at the question. Material A, there is some degree of completion given for material, that is material B. Don't look at the question and write the numbers. Material degree of completion is given in the problem. I should not check that. I should not check that. Material A, all 100% except normal loss and opening WIP. Except normal loss and opening WIP. Write this 0 and 0 and others. Total is 5,500. I did not look at the question and I don't want to look at the question also, because if I look at the question I'll make a mistake. So I should never look at the question for material A. Material A, degree of completion. Please don't look at the problem. The moment you look at the problem, your mind will force you to make a mistake. How was the mistake made? You'll understand when I do material B, labor and overheads. Material A rule is 100% except normal loss, which is obviously 0%, and opening WIP Now tell me in the question, what is the degree of completion given for opening stock? 80, 60 and 60. Balance I'll write 20, 40 and 40. Balance I'll write 20, 40 and 40. Material A, don't look at. Material A, don't look at. Moment you look at, you'll unnecessarily make a mistake. Material A, never look at the question. Material A, never look at the question. Material A rule is very simple. Opening WIP 0%, normal loss 0%, everything else is 100% because it's complete and come to me. It has come from the previous process. So this is 20, 40 and 40. What is 20, 40 and 40? 100 minus 80, 100 minus 60 and 100 minus 60. Let's not worry about the equivalent units part, okay? Let's not worry about equivalent units. No need to focus on writing that. Equivalent units is just multiplication. 20, 40 and 40. Any doubts on this? Unit started and completed 100%. all 100%. Units started and completed, all 100%. Closing work in progress, all given percentage except material A. Material A never look at the question. Material A never look at the question. We make a mistake of looking at the question and write wrong numbers. Closing stock, you can please write the degree of completion, EU and all later you will do. So closing stock is 70, 50 and 50. That 70 is for material B only. Material B only. So 70%, 50% and 50%. Normal loss rule is 0, 0 and 0. The abnormal gain rule is 100%, 100%, 100%. There is some degree of completion given for unit scrap, no use. That is needed for abnormal loss. That is needed for abnormal loss. Any doubts on this? Clear? I don't want you to write the equivalent units, but the calculation is, I am doing it in Excel quickly. So material B total is just give me a minute. 49,400. Material B total is 49,400. Then this is 48,800. Same 48,800 will come for over it. Let's not worry about the calculation part of it. Understand the steps. Material A alone as per predetermined rule. Material A alone is as per predetermined rule. This is the first change between one material and two material. Between one material and two material, this is one change which you have to do, because you have to bring material A column, and for that the degree of completion is as per a predetermined rule. Clear? Then I'll be doing statement of cost per unit. Write it. Statement of cost per unit. Statement of cost per unit. Now it will be particulars, material A, material B, labor, overhead. Material A, material B, labor and overhead. Earlier it was only material, now it is material A and material B, or material 1 and material 2, whatever name you wanna give. Material A, material B. I have been telling you to leave space so that you can fill the space later, because that will guide you to solve the question once fully, and then without the steps you can do it separately also. But leaving space will help you in closing out the question later. Here cost incurred less sale value of normal loss, right, net cost incurred, equivalent units, cost per equivalent unit, cost per equivalent unit, cost incurred, sale value of normal loss, net cost incurred, equivalent units and cost per equivalent unit. Cost per equivalent unit. Cost incurred is there in the debit side of your process account. Tell me, material A, what is the cost incurred? Material A. Material B, 197, 600. Labor, 97. Overhead. One change which happens is sale value of normal loss is subtracted only from material A. Earlier I said material, but now you have material A, material B. So sale value of normal loss, 2,500 units into 3 rupees. 2,500 into 3 rupees is subtracted only from material A. This is the next change. Next change is subtracted only from material A. Can I do it in material B? Logically you can distribute. For simplicity's sake, they say just take it from the main raw material. Just take it from the main raw material. So 2,500 into 3. 2,500 into 3. Normal loss is 2,500 units, and the realizable value given in the question is 3 rupees per unit. Scrap is 3 rupees per unit. Net cost incurred. Get the units from the earlier working note. 5,500, 49,400, 48,800, 48,800. 84211. 84211. It may come as rounded off numbers also. Here we are getting proper numbers, but it may come in decimals also. 84211. Cost per equivalent unit. 84211. So two changes we have done. One change we did is material A and material B. And the second change is in this step sale value of normal loss subtract from material A. Working note 5 which you are not going to do, or okay, you can leave space for doing this. Statement of distribution is very simple. I'll copy paste the same thing. Copy paste the various items. Further work on opening WIP, units started and completed, closing WIP, normal loss will not come. And material A, material B, labor, overheads, total. You can just write this. Units you will take it from there. Cost per unit will take it from here and keep multiplication. Keep multiplication. Take the units from there and cost per unit from here. Write the format. Particulars, material A, material B, labor, overheads and total. And the various items come from there. In this, abnormal gain will be negative value. You will write it as negative and then record it in the debit side in the end. Material A, material B, labor, overheads and total. Various items. What you need to do is take the units from working note 3, cost per unit from working note 4 and keep doing multiplication. Keep doing multiplication. How will I do it this? Had the statement with me. 0 into 8, 46,000 into 8, 5,000 into 8, 0 into 8, normal loss leave it, minus 500 into 8, minus 500 into 8. Then 400 into 4, 46,000 into 4, 3,500 into 4, negative 500 into 4. Then 800 into 2, 46,000 into 2, 2,500 into 2, negative 500 into 2. Then 800 into 1, 46,000 into 1, 2,500 into 1, negative 500 into 1. It may look time consuming, but once this is done, see there is a check here. This has to match. There is a check at total input. So mistakes making is very limited here. Once you are done, you will do transfer to next process, which is two items, opening WIP plus units started and completed. One value is given in the question, one value you have calculated and then completed. So steps remain similar, two changes alone. Two changes alone. I have not been doing this step because I have told you will do multiplication and then keep closing. And whatever you wrote here, abnormal gain will go to debit side of process account. Closing WIP will go to credit side of process account. Transfer to next process will go to credit side of process account. Normal loss will go to credit side of process account. And my process account will tally. Process account will tally. All these figures are coming from that step. All these figures are coming from the below step which is there. Clear? Any doubts on this? Any doubts on this part? So in two material, P4 method and two material, following changes. Step 1, no change. Step 2, no change. Step 3, main material is called as material A, allied material is called as material B. Main materials are material 1, material 2. The question may use a different name also. Equivalent units will have to be computed for material A and material B. Degree of completion for material B will be as per question. For material A, opening WIP and normal loss 0%. Everything else take 100%. Everything else take 100%. It is as per a predetermined rule. Don't look at the question for material A. Many students make a mistake of looking at the question. Sale value of normal loss is to be subtracted from material A. These are the changes. These are the changes. Do multiplication and close. Now we have done till P4 method. Now I'll be moving to weighted average method. Same 5 steps with certain changes here and there. Let's move to next question. Any doubts on this? Any doubts on one material to two material? Only two changes. Step 3 there is a change and step 4 there is a change. Average cost heading says when to use average cost, when to use FIFO method. Once I'm done with this segment, I'll explain it. As demand for LED light increases, more entrepreneurs are coming into the manufacturing process. Okay, the first para is of just a background. Let's look at the data. The details relating to the first process of mounting for the month of August is given below. Opening work in process. Opening work in process. So there is a work in process means it's an equivalent unit question. 31,000, and in this opening work in process, what they have done is They have told material cost is how much, labor cost is how much, overhead cost is how much. Where does this come from? Last year, statement of valuation. You'll have material separately, labor separately, overhead separately. We used to add all the three and write it as closing work in progress. Here they have given that breakup. This breakup is needed. Why needed? You will understand. This breakup is needed. They have told. So opening WIP, can you tell me the total of the three? Opening WIP, what is the total of the three? Tell. 21 lakh. So opening WIP you will be writing 31,000 2170. Opening WIP is 31,000 and 2170. Introduction during the process, material cost, labor cost and overhead cost. The process involves some wastage. The process involves some wastage. Management estimated a normal loss of 5% of total input. 5% of total input, including the opening work in progress. However, the workers reported 46,500 units are scrapped. We have scrapped 46,500 units, in which 100% material is done, 80% labor and overhead is done. 540 to 500 units were transferred to the next process. Some units are still in process. Some units are still in process. Thus shifted for the next month process with 100% material and 80% labor. The closing WIP is 31,000. The closing WIP is 31,000. You are required to prepare statement of cost showing cost per equivalent unit. This is technically step 4. Cost per equivalent unit is step 4. Distribution of cost is step 5. Now, process account is step 1. Normal loss and abnormal loss account, I am not going to do. Normal loss and abnormal loss, we are not going to do. So, here in weighted average cost method, again small changes will happen. Step 1, step 2 remains same. Let's write step 1. Let's write the process account. Let's write the process account. You will write along with me. Process account. Process account. Mounting process account. The name they have given, mounting process. Mounting process account. In this question, the numbers are slightly heavy, so it will take more time to do the calculation. Anyway, in Excel it will not matter, but when you do, it will take more time. Mounting process account to opening WIP. To opening WIP, 31,000 units. 31,000 units and values 21 lakh 70. Values 21 lakh 70. 31,000 units. Values 21 lakh. So what is 2170? Material plus labor plus overhead. Material plus labor plus overhead. 2170. 2. Material cost 5 lakh 89,000. 5 lakh 89,000 units. 2 crore 29 lakh 40,000. 2 crore 29 lakh 40,000. To material cost 589, 229 40. To labor cost 55 64 500. Labor cost 55 64 500. To overhead cost. To overhead cost 166 93 500. 166 93 500. How many entries do you see for material cost here? 1 entry or 2 entry? Participate. It's only 1 entry. It's not 2 entry. 2 entry means 2 material, 2 sundry material. Opening WIP is not a material cost. Opening WIP has all the 3. So there is only 1 material. This is a 1 material problem, average cost. 1 material problem, average cost. After this is done, this is my second statement, which I'm not doing it. I'm going to quickly show it here. Opening WIP is given in the question. Input is there. Total input. Closing WIP is given in the question. Cross normal losses 5% of total input. Normal losses 5% of total input. expected output, actual is given in the question. There is abnormal loss of 15,500. There is abnormal loss of 15,500. I am not really bothered about all this calculation. If I am following average cost method, I don't want this unit started and completed, because in FIFO method, if you have done your materials chapter, in that if you have done that PSL, in FIFO method, I do lot wise tracking. One lot, two lot, three lot, we write it separately. Average cost doesn't have the concept of lot wise. So it clubs everything together. It doesn't matter whether it came from the last year or whether it came from the current year. So the first change is I don't need unit started and completed. I don't need unit started and completed. This is one change which happens in average cost method. I'll summarize the changes once I'm done because it's there in the concept book. So the first change is I don't need unit started and completed. Clear? Next, working note 3, statement of equivalent units. Statement of equivalent units, particulars units, material labor overheads. Particulars units, material labor overheads. Particulars units, material labor. You write the format, I'll be writing some items, balance you'll be filling later. Particulars units, material labor and overheads. Material labor and overheads. Now, in this, I don't write opening WIP. I also don't write units started and completed. I give a name, transfer to next process directly. Transfer to, no concept of writing separately and all. We don't write separately opening WIP, separately units started and completed. Just club it and write transfer to next process, which in the question was 542 500. Transfer to next process 542 500. 540 to 500. No concept of writing opening WIP, unit started and completed. Then closing WIP is 31,000. Normal loss 31,000. Abnormal loss 15,500. Again, it has to match total input. Again, it has to match total input. The only change is no point of writing separately. Separately, we will not write. What we write separately? Unit started and completed, and opening WIP, we used to write it separately. That is not needed under average cost method. Why average cost? Once I'm done with the next question, I'll explain why we are doing average cost and why we do the other method. That clarity you will get in just some time. Now, closing WIP. What was the rule earlier? Closing WIP. What rule I said? Degree of completion. Participate. Given percentage. Same rule works here. Normal loss I said 0% works here. Abnormal loss I said given percentage works here. Transfer to next process is 100% because it's a completed unit. It is a completed unit. So write 100%, 100% and 100%. Transfer to next process is, it's a complete product. It is a completed product. I'm writing 100%. I'm writing 100%. Closing WIP rule remains same. Given percentage, question has given it as 100% for material, 80% for labor and overheads. 80%. At home later on, you can check all this calculation if you want, or read the question in detail and all. 100, 80, 80, 180 and 80. Normal loss rule remains same. 0, 0 and 0. Normal loss rule remains same. 0% for all the three. Abnormal loss given percentage, which again the question said you scrapped it at 180. You scrapped it by incurring 100% of material and 80% of labor and overhead. You need not write this equivalent units and all, but this you will leave space to fill it later. I get my equivalent units. I get my equivalent units. Only changes, no need to write units started and completed. No need to write opening WIP. No need to do both of them. Any doubts on this? Step 4, major change will happen here. Working note 4, right? Working note 4, statement of cost per unit. Cost per unit. particulars, material, labor, overhead cost, material, labor and overhead, material, labor and overheads, material, labor and overheads. First item we write is opening work in progress, because under average cost method, if you remember when I did cost sheet, valuation of closing stock, when we did, the formula was cost of production plus the opening stock divided by units produced plus the opening stock. So under average cost method, opening stock is also considered for cost per unit calculation. That is where that breakup was given in the question. In the question you see material how much, labor how much and overhead how much, breakup is given, right? Opening work in progress from the question, 1240, 232, 500, 697, 500, 1240, 232, 500, 697, 500. Current period cost 2 crore 29 lakh 40,000, 55 64 500 and 166 93 500. Current period cost. Opening work in progress is to be considered under average cost method. Opening work in progress is to be considered under average cost method. Any doubts on this? Clear? I consider first opening WIP, current period cost, then remain same. Less sale value of normal loss, net cost incurred, equivalent units, cost per equivalent unit. Sale value of normal loss, net cost incurred. Every question same format. Format will not change in any question. Format is not going to change in any question. You decide out of the four which question it is. FIFO 1 material, FIFO 2 material, weighted average 1 material, weighted average 2 material. You decide the approach, same format, answer will automatically come. It's just more of calculation which need to be done. In this question, normal losses 31,000 units and realizable value given in the question is 20 per unit. Realizable value is 20 per unit. So 31,000 into 20. From material, net cost incurred, equivalent units, forty, 10 and 30. Cost per equivalent unit is 40, 10 and 30. Cost per equivalent unit is 40 rupees, 10 rupees and 30 rupees. Clear? Now, next step we are not doing. Take the units from one step. So you can write the format. Step working note 5. Statement of valuation. Particulars, material, labor, overheads total. Material, labor, overheads and total. And copy paste items from this step. Copy paste the items from this step. Take units from there, cost per unit from here and keep doing multiplication. One good part about weighted averages, transfer to next process is directly calculated. No need to add those items. No need to add those item. Transfer to next process is automatically calculated as one of the line item. Transfer to next process is automatically calculated as one of the line items. Clear? Any doubts on this? Any doubts on this? Done? Now, if I look at the question, I will do that multiplication. When I do multiplication, again, this will match my net cost. Sorry, in this case, okay, by mistake, I've added normal loss also here. If I don't add normal loss, it will match the net cost incurred. Again, it will match the net cost incurred. By mistake, I've added the normal loss because normal loss valuation is not needed. And my process account, all figures will come from here. Whatever valuation you do, all figures will directly come from here. Any doubts on this? So under average cost method, look at the changes. No change. Unit started and completed is not needed. Further work on opening WIP and unit started and completed is replaced with transfer to next process. Is replaced with transfer to next process. Degree of completion will be 100%. Opening WIP will be considered in cost per unit calculation. Now listen, if a question gives the breakup of opening WIP, what is breakup is how much is material. The last two question we did, the breakup was not there. If breakup is there, average cost is possible. If breakup is there, average cost is possible. The question which we just did, FIFO is not possible. For FIFO, you need degree of completion of opening stock. In this question, I did not ask you 100 minus given, 100 minus given. I did not ask because it's not given. Given degree for opening WIP, the DOC is not given in the question. For opening WIP, the degree of completion is not given in the question. So the rule is this: if the breakup of opening WIP is available, if the breakup of opening WIP is available, then we can follow average cost method. Then we can follow average cost method. If the degree of completion, of opening WIP is available, then you can follow FIFO. Because for FIFO method, when I do step 3, I want 100 minus given. If given is not there, I cannot follow it. And for average cost method, I need opening WIP breakup in step 4. I need opening WIP breakup in step 4. If these are available, both are available, either of the method, or follow whatever the question says. Question says FIFO, follow FIFO. Question says average cost, follow average cost. For example, in this question, the name of the method I think is not okay. They have told average method, but if the name of the method was missing, then I will look at the data. I'll look at the data. Opening work in progress breakup is there. You can follow average cost method. Degree of completion is there. You can follow FIFO method. Clear? Any doubts on this? The last situation, I'm not going to do a problem, but I'll quickly explain it. Simple rule. From FIFO 1 material, when we moved to FIFO 2 material, we made certain changes. The same set of changes I have to do from situation 3 to situation 4. What is situation 3? Situation 3 has said process account no change and unit started and completed is not needed. Step 3, further work on opening WIP and unit started and completed is replaced with transfer to next process. When you go to situation 4, add material A, material B. Add material A column and material B column. Add material A and material B. Degree of completion for material A is 100% except normal loss. Opening WIP will not come. Anyway, opening WIP will not come except normal loss. Step 4, when you do cost per unit calculation, again write material A, material B and subtract sale value of normal loss from material A. Subtract sale value of normal loss from material A. So same changes. No change, no change. Main material will be called as material A and allied material equivalent units has to be computed for material A and material B. DOC for material B will be as per question. DOC for material A is 0% for normal loss. Everything else is 100%. Sale value of normal loss is to be deducted from material A, or it can be called as material 1 and material 2. Just to give you a view, this is how the question will say: material 1, material 2, wages, overhead. Because for average cost method, I need the breakup. So they have given the breakup: material 1 so much, material 2 so much, labor so much, overhead so much. If they don't mention all this, you open the debit side of the process account. To process 1, main material, 2 material, sundry material. Main material and sundry material. Material A, material B. In this question, they have used the term material 1, material 2. You can use any of the terms. Clear? Any doubts on this? So FIFO method, I'll repeat. FIFO method, 1 material, process account, then I do input output statement, then I do units, then I do statement of equivalent units. In that, opening WIP is 100 minus given, unit started and completed is 100%, normal loss is 0, abnormal loss is given, abnormal gain is 100% with units being negative, and closing WIP is given. Step 4, cost per unit, particulars, material, labor, overheads, sale value of normal loss is to be subtracted from material column, get the cost per unit, multiply units from step 3, cost per unit from step 4. Take the units from there, cost per unit from here, and keep doing multiplication. In the end, transfer to next process is equal to opening WIP as per question, further work on opening WIP as per the step, plus units started and completed. From this, if you move to 2 material, in the debit side of the process account, you will see 2 material, again 2 material, 2 entries you will see. That's called 2 material problem. No change in step 1, no change in step 2. Step 3, material A, material B. Material B, labor, overheads follow whatever I have told earlier. Material A, 100% for everything except normal loss and opening WIP. Step 4, when you do cost per unit, sale value of normal loss is to be deducted only from material A. Do the multiplication completed. When you move to average cost method, step 1, no change. Step 2, I don't need units started and completed. Step 3, I don't write unit started and completed. I don't write opening WIP and call it as transfer to next process. With degree of completion being 100%. Step 4, when you do cost per unit, first line item is opening WIP, second line item is cost incurred, less sale value of normal loss, net cost incurred, and then you do multiplication and directly you will get transferred to next process. When you move from average cost 1 material to average cost 2 material, first imagine the changes for average cost, then imagine the changes for 2 material, then imagine the changes. What are the changes for 2 material? In step 3, I need material A, material B. Material A DOC is 100% except normal loss. In step 4, again I need material A, material B. Sale value of normal loss is to be subtracted only from material A. Clear? Any doubts on this? Okay. Question 7, which I would want you to 100% practice it. It is a reverse working question. Here, what will happen is you will have to write all the 5 steps. What are the 5 steps? You will write first process account, then you will write input output statement, then you will write statement of equivalent units, statement of cost per unit, and then you will write the valuation. Some data will be there, balance will be missing information. So here, question would have directly given cost per equivalent unit. And you will keep reverse working and getting to the balance number. This is a very good question, can be tested in exam. I will see, I have to do one more important concept. So first I will do that. If time permits, I'll solve this question. If time is not there, I'll not solve it. You can manage it. But I want to do one important concept because it comes in 1 and 2, 3 exams from process costing. This keeps coming, which is called inter-process profit. So I'll discuss that now. Okay, some rule on degree of completion. Some question will say, this is for any of the method. That is step, your FIFO 1 material, FIFO 2 material. Identification of loss in finished state. If you find something in the finished state, degree of completion for loss is 100%. Degree of completion, the question will say, I identify the loss in the finished state. Some question will say, material is added at the beginning. It means material is always 100% complete. Because you add it at the beginning, except for obviously normal loss, which is 0, and further work on opening WIP will become 100 minus 100. One question said, after everything is done, I apply protective packing to the finished component. In that, when you do your equivalent units calculation, you can have material column, you can have labor column, you can have overhead column, you can also have a column called packing. In that, degree of completion for work in progress will be 0. Because packing is done only once it is completed. This concept will be useful when you practice question. Now I come to one important area, inter-process profit, because this takes away sometimes 25 to 30 minutes. So I just want to focus on this very important area. If time permits, after this is done, I will do that reverse working question. Else that question alone you will manage it. Now what is inter-process profit is, an organization may say that whatever product I'm transferring to the next process, I will not transfer it at the cost. I'll transfer it at a cost plus a profit margin. Cost plus a profit margin. Why are we doing this? Because I want every process to become a responsibility center and show me profits. Show me profits. The problem which we are going to do, which will say cost plus a profit margin, that's not the ideal way. Practical world, they'll say you can manufacture at any cost. You will transfer your units at 100 rupees per unit. So if I manufacture at less than 100, I will make profit. If I manufacture it at more than 100, I will make a loss. Practical world, they will be given a price saying that you will transfer only at 100, 200, 300. So my objective would be to make it lesser than 100. Otherwise, what happens is process 1 says I'm least bothered. If I manufacture at 120, I'll transfer at 120. If I manufacture at 80, I'll transfer at 80. Practically, you cannot make them motivated. To motivate them, you will have to tell them that you will transfer it at cost plus a profit margin, or you will transfer at a specified price. Now, the headache with this is this will lead to challenges in profit recognition. Why challenges in profit recognition is, first process transferred something to the second process, and first process said I made profit. Second process transferred something to the third process. Again, it said it made profit. Third process transferred something to FG. Again, it made profit. FG is not sold. FG is not sold. Accounting standard revenue recognition says you cannot recognize profit. You cannot recognize profit. But we were happily recognizing the profit. So, in case sale has not happened, from the closing stock, I have to remove the profit element. I have to remove the profit element. How we remove that is what the major chunk of the discussion is going to be. So in this, we write it like this: particulars, there will be a cost column, there will be a profit column, and a total column. There will not be units column. Units column will not be given. Particulars, cost, profit, and total. Particulars, cost, profit, and total. Once I do one or two processes, you will understand it. Let's see the question now. Question 8. A product passes through three processes: X, Y, and Z. Output of X and Y is transferred to next process at cost plus 20% each on transfer price. Transfer price means selling price, which means profit margin is 20% on sales. Profit margin is 20% on sales. It's at cost plus 20% on transfer price. Transfer price is selling price. Transfer price is selling price. So I have a profit margin of 20% on my selling price, on the selling price, and Z is transferred to finished stock at a profit of 25% on sales. First two processes, 20% on sales. It looked like, when you read, it may look like cost plus profit. It's not cost plus 20% on cost. Cost plus 20% on sales. 20% on sales and 25% on sales. I have opening stock, material, wages, manufacturing overhead, closing stock. Inter-process profit included in opening stock. My opening stock has some profit element, which I will remove. Like that, I want what is inter-process profit included in closing stock. That is the crux. The crux is what is the profit margin in the closing stock. Once you identify that, problem is over. Once you identify, they have asked us to prepare process account and FG account, costing P&L account, and relevant items in the balance sheet. Technically, I'll have to do 4 accounts: process X, process Y, process Z, and FG. X, very simple. You will not understand. You will not learn anything there. Y is where you will learn a lot of concepts which I'm going to explain. Let's open process X account. And okay, stock in process is valued at prime cost. This is a very important word. Valued at prime cost. Most of the exam question will only say prime cost. Will only say prime cost. What is the use of this? You'll understand when I do the calculation. First, process X account. Open process X account. Process X account. Particulars, cost, profit, total. Other side, cost, profit and total. Cost, profit and total. No units column. We will not have units column in this. Cost, profit and total. To opening stock. Okay. So I use the word cost, profit and total. This is technically called cost to company. Cost to company. This is profit and this is cost to process. Listen. Company says cost is 20 rupees, but the process will say cost is 30 rupees. Reason is you are transferring it at 30. You're transferring it at 30. So cost is technically cost to company, profit is profit, and total is cost to process. As a process, my cost is the total column. As a process, my cost is the total column. What is the opening stock given in the question here? First process. Any profit element in that? No, first process will not have profit element. 15,000, 0 and cost. Whatever is given in the question is the total column. Whatever given in the question is total column. In that, if there is a profit element, subtract it. To opening stock, 15,000 is given in the question. No profit, cost is 15,000. 2. Material cost. Again, total column. To material cost. How much for the first process? 80,000. No profit. In an expense, I cannot have a profit margin. 80,000, 0 and 80,000. 2. Wages. 125, 0, 125. First, I write the total column. I'll always write the total column first. Profit, if any, there I write, and cost is balancing figure. 2 plus 3 is equal to 4. Column 2 plus column 3 is equal to 4. What is the next item? Manufacturing. Wait, I'll not write manufacturing overhead because overheads do not form part of prime cost. At this stage, put a total and call it as prime cost in bracket valuation base. VB means valuation base. Prime cost in bracket valuation base. In bracket valuation base. Prime cost 2,20,000. Stock is valued at prime cost. Stock is valued at prime cost. So I put a total and call it as prime cost, and the name is called valuation base. Name is called valuation base. Instead of writing closing stock in the credit side, we write less closing stock. We write less closing stock and net prime cost. Net prime cost. Closing stock, net prime cost. Closing stock given in the question is 20,000. First process, no profit margin. I'll explain second process onwards how to calculate profit. First process will not have any profit element because it did not receive anything from the previous process. It did not receive anything from the previous process. Net prime cost 2 lakh, 0 and 2 lakh. Instead of writing closing stock in the credit side, we write it in the debit side. 2 manufacturing overhead. 2 manufacturing overhead. Manufacturing overhead is 96,000. 0, 96,000. Total cost. Total cost 296, 0 and 296. Total cost 296, 0 and 296. Clear? Total cost is 296, 0 and 296. To P&L account. To P&L account. Now listen. Transfer price is equal to cost plus 20% on transfer price. Profit is 20% on transfer price. Profit is 20% on transfer price. Profit is 20% on transfer price. So transfer price is equal to 296 plus zero point 0.2 TP. 296 plus zero point 0.2 TP, you will get the transfer price. Transfer price is basically 20% on sales. Transfer price is selling price. Transfer price is selling price. What's the transfer price you get? 3 lakh 70,000. Profit is technically 74,000. Profit is technically 74,000. Profit is technically 74,000. Clear? Any doubts on this? Straightforward, simple calculation. First to process, no major learning. In profit, write 74,000. Total is column 2 plus column 3 and again put a total. Again put a total. 296 plus 0, 74 and 370. 296, 74 and 370. What this means is cost is 296, profit is 74,000 and transfer price is 3,70,000. Only one entry in the credit side by process Y, whatever is that final total. 296, 74, 370. That's all. Only one item, whatever was the last total. Account is tallied. Account is tallied. Only one entry in the credit side by process Y 296, 74 and 370. 296, 74 and 370. Any doubts on this? Clear? Process Y you will learn the profit element calculation. Repeat process Y account, same format. Process Y account, same format. Process Y account, particulars, cost, profit and total. Process Y account, write two opening stock. Two opening stock. What is the value given in the question? 27,000 total column. And there is a profit element. How much is the profit element? 4,000. Cost is 23,000. Cost is 23,000. 27, 4 and 23. Whatever is given in the question is total column. Profit margin could be there. You have to remove them. Profit margin could be there. You have to remove them. 27, 4 and 23. To process X, whatever you wrote in the credit side, to process X, 296, 74, 370. 296, 74 and 370. To process X, 296, 74 and 370. Any doubts on this? To material cost, no profit element in the 65,000, 0, 65. Material cost 65, 0 and 65. To labor cost is 108, 0 and 108. Any doubts on this? Clear? At this stage, I'll put a total and call it as prime cost. I'll put a total and call it as prime cost in bracket valuation base. See, if question says stock is valued at factory cost, add factory overhead also. Add factory overhead as well. Prime cost 492, 78 and 570. 492, 78 and 570. Whatever is given in the question is always total column. Just keep that in mind. Everything else will automatically fall in place. 492, 78 and 570. Less closing stock. Less closing stock. How much is given in the question? 32,000. Listen, very simple. Distribute this 32,000 in this ratio. Listen, distribute 32,000 in the ratio of 492 is to 78. 492 is the cost element, 78 is the profit element. 78 is the profit element. In the calculator, 32,000 divided by 570, into 492. 32,000 divided by 570 into 492, 27,621, and divide by 570 into 78, split in the ratio of 492 is to 78, split in the ratio of 492 is to 78. 27,621 and 4,379. The profit element on the closing stock is 4,379. The profit element in the closing stock is 4,379. 4,379. Any doubts on this? Net prime cost. Net prime cost. Net prime cost. Net prime cost to factory overhead. Factory overhead. There's some figure given in the question on factory overhead. It is total cost total cost total cost to P&L and again total. To P&L and again total. To P&L and again total. Any doubts till this? Now listen. Transfer price is equal to cost plus 0.2 of transfer price. Listen for a minute. Cost means my cost. My cost is 6,10,000. It's not the cost column. It's not the cost column. In process one, it did not make a difference because cost column and total column all were same. In the second process onwards, my cost is the total column. My cost is the total column. So transfer price is equal to 6,10,000. Cost is how much? 6,10,000 plus 0.2 transfer price. 0.2 transfer price. Get the transfer price. And profit is 152,500. Profit is 152,500. Clear? So to P&L 152,500, and only this item will go to the credit side. Only this item will go to the credit side. Any doubts on this? Clear? My profit margin is on cost plus 20% on sales, and cost is my total column, CTP, cost to process. Cost to process. So this is what I was saying, cost to company, cost to process. You would have done till this. You would have done till this, and this is how profit element is calculated. Now what I want you to do is I'll give you exactly 5-6 minutes. Third process you will do. Fourth process I'll take you through. Third process, You will write, listen, first you will write opening stock, then you will write to process Y, then you will write material, then you will write labor, you will write valuation base, then you will do less closing stock, net prime cost, to factory overhead, total cost, then to P&L, and finally total. Profit margin here is 25% on transfer price. Profit margin is 25% on transfer price. Take around 5 minutes, 5 to 6 minutes, and close process it. Close process it. Then I'll take you through the FG and other process. So, assuming you're done, now listen. This is how process Z would have looked. To opening stock, to process Y copy paste, direct material, direct labor. I add up, and closing stock is 39,000 divided by 944 500 into 708 379 is the cost column, and 236 121 is the profit column, and in the end the transfer is happening like this: 745,629, 550, 371, and 1296. This is going to be very critical when I do FG process. Now open finished stock account, same columns. Finished stock account, finished stock account. Two opening stock would have been given in the question. Two opening stock for the FG process. I'll write the opening stock in a minute. Let me first write this to process Y. I'll copy the numbers. To process Z, sorry, to process Z, 745 629 550 371 1296. This comes from your process Z. To process Z, 745 629 550 371 1296. 1296. Process X I did, Y I did, Z is copy paste of Y. Z is copy paste. The profit margin is 25% on sales. The margin alone is different there. Opening stock given in the question is 45,000, which has a profit element of 20,000. Has a profit element of 20,000. So two opening stock 45,000, profit 20,000, cost 25,000. Cost is 25,000. Less closing stock, less closing stock, less closing stock. Closing stock given is 50,000. Split in the ratio in which you received the item. Split in this ratio. 745,629 is to 550,371. That is 50,000 divided by 1296. 50,000 divided by 1296 into 745,629 equal to 550,371 equal to 50,000 divided by 12,96,000 into 745,629 equal to 550,371 equal to 50,000, 1296 into this number and into the next number. Any doubts on this? Clear? You have to segregate in the ratio. The question has said stock FG is valued at the price at which it is received from process Z. From process Z, I receive in this value 745 and 550. 745 and 550. So in that ratio, I distribute. Right, net cost, net cost, net cost, opening stock plus production minus closing stock. Opening stock plus production minus closing stock. This is technically COGS. Technically, this is COGS. Now listen, FG is saying, the FG process says cost is 1291. The FG process says cost is 1291. But from the company point of view, cost is only 741. Cost is only 741. The real cost is only 741, but the company first process added something, second process added something, third process added something, and inflated the value. In the credit side, by sales, 14 lakh is the total column. 14 lakh is the total column. And company knows only one thing. Real cost is 741. Real cost is 741. Balance is profit. Real cost is 741. Balance is profit. Balance is profit. If debit and credit side all three columns match, okay. If they do not match, to P&L. If they do not match, to P&L account. If it is tallying, okay. Cost column will tally, profit and total column will not tally. Cost column will tally, profit and total will not tally. Write to P&L. Write to P&L. To P&L account and total. To P&L account and total. Now, accounting wise, I did process 1, process 2, process 3, all that is okay. Real simple logic is this is the real profit of the company. Process 1, we wrote some number. Process 2, we wrote some number. Process 3, we wrote some number. And even in FG, we are writing all those are not profits. The real profit is 658, which the P&L account will also show. The P&L account is going to show 658, 138. That's the real profit of the organization. Open P&L account. Open P&L account. Particulars amount, that's all. No three columns and all. Particulars amount, particulars amount, P&L account, P&L account. The real profit is 658, 138. I should get that number. If I get that number, then all calculations till now is correct. If I don't get 658 in the P&L account, it means you made a mistake somewhere. It means you made a mistake. Now, every process you wrote to P&L by process X. Tell me what amount you wrote in process X to P&L. 74,000. By process Y. 1 lakh. By process Z. By FG. That also we wrote to P&L. It doesn't end here. Listen, these are 4 numbers. Okay. We had certain opening stock. On opening stock, this was inter-process profit which is realized in the current year. Which is realized in the current year because opening stock would have got sold. So next item, by opening stock reserve. Opening stock reserve. By opening stock reserve, or you can call it as by reserve on opening stock. Both are technically not a big difference, but okay, this is right name. By reserve on opening stock. By reserve on opening stock or by profit on opening stock, which is 0 plus 4,000 plus 10,000 plus 20,000. All this profit I realize now. All this profit I realize now because opening stock is sold. Realize means it is adding to my profit credit side. 2. Reserve on closing stock. In your notebook, process 1, closing stock. What was the profit element? Closing stock profit element. Process 1, 0. Process 2, 43. Process 3, 97. FG process 21. Add up all this. And tell me the balancing figure. That will be the profit which you wrote there. Balancing figure is the profit for the year. Balancing figure is the profit for the year. It will match that number which you had earlier written there. $693 minus 658, 138, and that's the profit I wrote there. That's the profit I wrote there. This is frequently tested today at home in the RTP. There is a MCQ based case scenario, latest RTP. You, in order to solve, you will have to go through these detailed steps. You will have to go through this step, then only you will get the MCQ answer. You have to go through this first process. No profit element in opening stock, no profit element in closing stock. Second process onwards, there will be profit element split in that ratio of profit versus cost. And when you transfer, cost for the process is the total column. Cost for the process is the total column. Third part, I'm not doing it. In balance sheet, when I disclose them, I will have to remove the provision for unrealized profit. Remove the provision for unrealized profit from the balance sheet value. From the balance sheet, this is closing stock, this is closing stock, this is closing stock, and I remove the provision for unrealized profit. Provision for unrealized, because in balance sheet you can value it only cost. You cannot value it at cost plus profit and all. That and all is not possible, because second process, third process onwards, the profit element is added. Now, I'm not doing that reverse working question, but only one request, somehow do that reverse working question. And any question in your ICISM, you can open any question and do it. Follow the format which I said. You will 100% get to the answer. In case you get stuck, the same question will be there. If in any ICISM question is there, same question will be there in my question bank in the format which I said. In the format which I said, you'll be able to do. There is a small element on operation costing. Operation costing is nothing but a sub part of the process costing. It is a sub part of the process costing. One process can be broken down into operation 1, operation 2, operation 3, operation 4. What they may end up asking is, a product passes through 4 operation. Loss in 4 operations 25, 20, 20 and 16.67. I produced an output of 1000. How much was the input added? How much was the input added? In order to do this, let's assume I start with 100. I start with 100. First process 25 is my loss. First process 25 is my loss. So my output is 75. Second operation 75 minus 20%. 75 minus 20% of 75 is 15, 60. Third process 60 minus 20% of 16, 48. Fourth process 48 minus 16.67 percentage of 48, which will technically be 8. So my input output ratio is 100 units of input, 40 units of output. 100 units of input and 40 units of output. Output is equal to 1000, input is balancing figure. 100 is to 40 is the input output ratio. Sometimes an MCQ may end up coming, or a question like this may come, where the loss percentage is not given directly, but you have to calculate. The first process loss is 1 by 3. In the first process, the loss is 1 by 3. In the second process, loss is 198, 18,000. Mathematically, the number will be 1 by 11. Mathematically, the number, or you can write percentage, 18,000 divided by 1 lakh 98. Third process, the loss is 1 by 6. You can say you started with an input of 100. First process 1/3 loss, you got a net number. Second process 1 by 11 loss, you got a net number. Third process 1 by 6 loss, you got a net number, and that will give you the input output ratio. With this, process costing is over. Again, I'll repeat, according to me, one of the easiest areas, but when I was doing, somehow I saw you were struggling a little bit. That's why I had to do it again. But I'll say again, if you solve the questions which are there in this material also is sufficient. Along with, for some confidence, you solve your ICISM question and solve the RTP Jan 25 question. RTP Jan 25, which is on interprocess profit. With this chapter is over. Tomorrow I'll do the balance chapters. We'll end with this thing.